opportunity to accumulate. So would you agree?
Yeah, I don't want to get specific.
No, I take that.
Yeah.
But then large banks is what I'll ask you about.
Yeah, I think to some extent you could be right. But the stress, if you follow Bajaj Finance's commentary, and the whole street follows that, we do as well. And if you look at some of the comments that they've made, 17 industries that they track, 13 are showing slowdown, 3 are showing contraction. It's virtually a perfect, I'm reading this right off their commentary. So it's virtually a perfect storm in a way, and it's come too suddenly. So I think these are obviously the words to think about coming from India's largest NBFC. And I think MSME clearly is hurting, as is the microfinance sector. So there are certain pockets that are, and also personal loans, I think. So there are certain pockets that are clearly hurting. At the same time, when you look at private sector credit growth, that's also not picking up. So there are certain challenges, but when you talk about valuations like that, I do agree that some of these things could be great from a long-term perspective.
Okay, thank you so much, Gautam, for speaking with us.
Thank you.
Gautam Trivedi there, finding companies with great valuations right now and value investing looking tough in the market.
Yeah,
and
that is one of the big takeaways from that conversation.
Seriously, and frankly, results have not helped. But nevertheless, interesting corporate conversation for you right now. I had the opportunity of catching up with Suresh Narayanan, Chairman and Managing Director of Nestle India. Remember, he's the outgoing Chairman and Managing Director. Manish Tiwari takes the reins. The results this quarter for Nestle weren't great, but we sat down to talk about how this company is looking at urban consumption trends over some hot Maggie and hot coffee. Sitting outside from a journalistic lens, I must admit I've always looked forward to hearing your commentary during your earnings calls or the few times that you'd address the media, because you're one of the few business leaders who tells it how it is. And maybe that's, the MNC background or your vast experience. But for example, last year, you were the first one to recognize that there is urban consumption distress. You were the one who came out and said the middle class is shrinking. And then, yes, a lot of people said, no, it isn't. Yes, the numbers showed that what you were saying was absolutely true. Has that always been something that you've sworn by?
One of the tasks of a leader is to be courageous in the face of turmoil. And I think he has to be polite, he has to be moderated, but he has to say the truth as he sees it. Now, obviously, this is just one head amongst so many thousand people who watch the space and many of whom are vastly more clever than what I can claim to be. But I've always looked at honesty and trustworthiness to be compounded by courage in order to build credibility. Because I can come and say stuff that might please your ear, but which may not necessarily be reflecting the truth of the situation.
Did you get a lot of flack after that statement?
Not,
in the sense we're living in the age of social media, right?
Not really. I think one of the things is that I'm always moderated in my comments. I don't go overboard in terms of my adjectives that I use or the turn of phrase that I might adopt. And about that same time, there was a news item that came that the Department of Economic Affairs had actually talked about urban stress as being one of the phenomena that was facing. So it wasn't dramatically different from what I had alluded to. And in fact, gave me a quiet satisfaction that what I said was not only keeping with my conscience, but also something that much greater powers in the government had also seen.
Yeah, no doubt. You called it first. And then the data that followed showed it was absolutely correct. You were in a position to spot that trend and say it how it is. Just following up on that, do you think, and it wasn't too long ago, so do you think that some of that urban distress has now eased, or it continues to be a pain point in terms of consumption patterns?
No, look, I think, to look at the statistics, the broader statistics of the consumer goods space, from a growth of about 13, 14 odd % a couple of quarters ago, growth levels came down to 2 and 3%. And that was when the distress was being felt. Last quarter, the numbers seem to be up. The latest numbers seem to show that urban consumption, in fact, outstripped rural in terms of percentage growth. I think the worst is behind us. A few reasons for that. One is that the inflation is now under check. Food inflation is especially under check. I think the overall outlook on the economy in terms of growth is positive. The monsoons look pretty benign as far as the country is concerned. Infrastructure spending is unrelenting and is also fueling consumption. So all the vectors are pointing in the right direction. So I can only say that I think the worst is probably behind us. And as some of my fellow colleagues in the consumer goods space have alluded in the past few days, things seem to be turning for the better, which is a good sign.
And that improvement is coming from urban or from rural or a mix of both?
It's coming from both. You see, earlier it was largely rural that was playing the tune. Now urban is also coming back, and urban for companies like Nestle are crucially important. Yeah. Because 80% of my sales comes from urban markets and about 20% from rural markets. So unless urban uptake happens, there is not very much of joy in the Nestle stable.
So I'm sure you're feeling much more joy now, but I want to come back to the double-digit growth era and then the last few quarters of single-digit growth that you talked about. Now, one way that analysts look at it is that very large companies and FMCG players across the board are getting a run for their money from regional brands, unlisted players. You talk to the guys making bhujia save and they have superb growth. So is there more to the story than meets the eye? Is it just consumption slowing down or Indian consumers looking at more options compared to before?
No, I think both are true, Tamanna. So let me be very clear that it is an overall consumption stress that we are feeling. Also, and to the credit of the Indian entrepreneurs and the regional entrepreneurs, some of them are coming and have got very good brand offerings. And this obviously has caught the attention of consumers. Consumers are now less faithful to only a few brands. They like to experiment, and that has started. The texture of consumption has become different. Earlier it was essentials, rental, transportation, fuel, and rest was discretionary and saving. Today, the essentials are a smaller part, and there is a greater part on discretionary items, especially things like travel and experience gaining, both of which are becoming important parts of the consumption of the consumer expenditure basket.
Even in the premium segmentation, because of course the urban market, very important for you, premiumization is the buzzword. Look at investors, they seem to be rewarding all consumption companies or consumption categories which are aimed towards premiumization rather than the basics. Do you think there's a lot of competition now from homegrown brands? For example, if someone wants to have a chocolate bar, they might decide to have a protein bar instead. Something which says it's organic, healthy, or so on and so forth.
I think some of the flirting across categories are being transcended also by a blurring of some of these categories. I mean, why have a chocolate bar? Why not have a protein bar? Why not have a snack? So the whole repertoire of consumption now has become much wider and much less predictable. There was earlier, breakfast, lunch, and dinner, and a snack in between, right? And that snack happened to be one of the major brands or something cooked up at home, right? And given. So I think the whole behavior of consumers is becoming much more interesting. That's opening up opportunities for many companies.
So, as you see this landscape changing so quickly, What is it that Nestle is right now doing different? And we'll come to the rearview mirror in a bit, because I know there's so much that you have seen and experienced we want to know about. But in the here and now, right now, when you have a giant like Nestle and you have regional brands and homegrown brands nibbling away, how do you make that shift?
Number one is to keep our brands relevant. Maggi is still a huge brand. And Maggi continues its journey because of its relevance. The relevance to the consumer, relevance in terms of consumption occasion, relevance in terms of consumer insights. Same applies to Nescafe, KitKat, Milkmaid, and many of the other brands. Incidentally, Milkmaid is one of our oldest brands, and yet it is one of the most engaged brands in the digital space. So that tells
because you have the recipes online.
You got recipes online, you got different activities online, you got festivals coming up, and Milkmaid being part of it. There's so much of association. So therefore, I think keeping our brands relevant is one. Number two is the pace of innovation. Today, we are innovating at a pace that is 3 to 4 times faster than we have ever innovated before. Today, about 7-8% of our sales comes out of the 150 new products that we've launched in the last 10 years. There are many more new ideas across categories that are on the anvil. Some of them addressing new consumption opportunities, some of them addressing existing consumption opportunities. So that is happening. There are new consumption spaces being opened up. I mean, the whole extension into Nespresso or into breakfast cereals or into Purina Pet Care, right? Or Dr. Reddy's Nestle Health Science joint ventures. All of this is getting into new business spaces, exciting business spaces with differentiated propositions to build both a premium journey with the consumer, because the consumers are increasingly premiumizing, to build a digital first connect with the consumers, and also to help our current brands, which have relatively low levels of penetration, accelerating the penetration-led volume growth as we move forward. So there are multiple actions. I think I would say that the opportunities for Nestle are immense, and probably the best will be the future.
Well, some key takeaways regarding urban consumption and more. And remember, the whole show will play out over the course of the week on NDTV Profit. But from one consumption company to another, the India-UK free trade agreement will boost many textile players as tariffs are expected or reduced to zero, right? Not expected, but reduced to zero. Raymond is presumably one such player with a 22% garmenting business in the UK. We'll speak to the management in a minute, but first let's get in Mahima to set up the conversation for us. Mahima.
Right, so as you rightly mentioned, the textile space is set to benefit from the UK-India FTA, and this is because the duty was as high as 12%, which is now reduced to almost 0%. Duty-free access to UK markets will provide India a level playing field with competitors like Pakistan, Bangladesh, Cambodia, China, etc. Now, in terms of the overall UK exports from India, they are right now stand around 6.6%. Indian textile outlook is also very positive. The government is aiming at almost $100 billion US dollars by 2030 in terms of textile exports. Now, Raymond has said that around 20 to 22% of their overall exports happen to UK, plus the EU combined number is 20 to 25%. And this the overall expectation is that the exports that they do to UK could double in the near future. And FTA clearly puts India in an advantageous position. Now, I spoke to Amit Agrawal, Raymond Group's CFO, to talk to him about how this will benefit India as a whole and how this will benefit Raymond Limited as well as Raymond Lifestyle. Listening to that conversation. Before I go on to company specifics, just want to get your sense on how big an achievement this is for India in terms of signing a trade deal with the UK, and how beneficial is this for the entire textile space?
Thank you for having me on the show. No, it is a great thing. It's a big achievement. And we have been waiting for this FTA to happen for quite some time. And I think it is a beginning of the journey. If you see, if we have done with UK, over last 18 months, we have done with Australia and few other countries. I think as you see one big FTA like UK has happened, it will open up EU on the next line. I think that will enable us, Indian to export much better. And when you are getting this status, you are actually becoming a level playing field compared to what you call having Bangladesh on your neighbor, Vietnam, Indonesia. Many of these countries have got a zero duty benefit. So when we were competing, and especially in a textile sector, when you compete, the margins are quite thin. So this would make a large difference. And considering this impact of the duty, which was in the range of 11-12%, depending upon the product to product, especially in the textile sector, it made us difficult to export into these countries. Only we were able to do a very high value product. And India has got an integrated supply chain, which I think is going to be a very large beneficiary. And it creates a lot of employment. Textile industry creates a lot of employment. So that all is going to be a big boost to the Indian economy and to our foreign exchange earnings. So I think we are very happy to have this done, because we believe it is the beginning of this journey, and we will see many more to come. And Indian exports can grow very fast.
Right, most certainly, Mr. Agarwal. I was going through your con call, and correct me if I'm wrong here. 20 to 22% of your garmenting business, comes from the UK. And just want to get a sense as to how this landmark deal benefits Raymond Lifestyle as a whole.
So look at it. In my opinion, what we believe in the Raymond has got a great opportunity with UK. Because first of all, let us understand, we are into wool, worsted, and an integrated supply chain. Right from the wool fabric we manufacture, then we convert them into garment for the big labels. And UK being a colder country, there is still a lot of traction for the woolen worsted suits. So that helps us in order to grow. Now, previously what used to happen was people would get the import of the fabric from China and other places into Bangladesh, get it converted, made garment, and then send it to UK. Now that will change dramatically, because people would like to see if there is an integrated supply chain company with an advantage of the lead time, as well as there is no disadvantage on account of the duty. I think we see that over the next 18 to 24 months, I think we should see our export revenues from UK to grow. But if I recall, it was not 20% alone to UK, it is UK as well as EU. That is the level of 20-22% is that number. And I think we should be able to grow in the UK business comfortably double itself. And this business is going to be much more attractive. We have already seen, because since the month of May, you have already got this traction that the UK FTA will get signed. And we have already started to see some of the inquiries coming from the people, from the customers. But any inquiry to get converted, because there is a season, autumn, winter, spring, summer. So it will take at least 8 to 9 months. I think what we can see is only in the next year, somewhere around the same time or a little later, the traction of actual deliveries to flow through.
Understood. Interesting. You said it will double from the UK and EU, the garmenting business, which is around 20 to 22% for both UK as well as EU. How long do you think will it take to double the revenues from now? And secondly, do you think this is margin accretive for you?
So actually, you look at it, what used to happen was when we were delivering, the customers were absorbing the duty cost. So actually, they will say they will benefit. But obviously, you have a big advantage that you will be one of the now preferred in terms of the cost as well. So therefore, what used to happen in the past, you were preferred because of your product, because of your quality and integrated supply chain. Now, one big factor, which was the cost, which was a disadvantage, that has added back to you. So now, let me clarify. What I meant was, the UK business will double, not the EU, because EU, we still have not signed the FTAs. And I think that is in the progression. So whenever an FTA gets signed for a country like India, we see very clear path of doubling its business. And there should not be any doubt that this business has great opportunity. UK is still, what we, India as a country, export to UK is in the range of 5-6%. And now 5-6% can easily double itself to 10-12%. Now that happens, people like us will be one of the largest beneficiaries.
Okay. Amit Agarwal there of Raymond Group, but focus really on some of the winners on news and on results, because otherwise market breadth not great. IT seeing the most pain. Having said that, look at the Nifty intraday. So there is a recovery from the lows on the Nifty to some extent. Definitely not IT stocks that are contributing to that. Nifty IT about 0.5% down. The Bank Nifty also about 0.25% down right now. Pharma companies are buzzing today, and one of them definitely is Wockhardt. Now, we've been talking about Zenic for a while. It's a breakthrough antibiotic which treats very resistant infections. It's making global headlines after successfully treating a critically ill liver transplant patient in the United States who had exhausted all available options. Varsha's telling us more about it.
Well, yes, company's magic pill, I would say, Zenit, is a novel antibiotic drug which has treated liver transplant patient in US. The patient earlier resisted all available antibiotics, and due to Zenit's infection cleared completely within 11 days of treatment. Now, just a little bit about this drug. It's a new antibiotic for multi-drug resistant infections, and they've completed global phase 3 clinical trials. Over 50 patients in India and the US have been treated with this drug. The addressable global market, if you see, is worth almost $25 billion. Key highlights when it comes to launch of this product, if I were to say, they're considering licensing deals for Zenit in Western markets, and they plan to offer this drug at 75 to 80% of discount in India versus US pricing, and they'll file US approval for in Q2 of next financial year, and they're expecting the same in 2026 or 2027.
Okay, so Wockhardt is going to be the big one. Would be great to hear from Habil Khurakiwala. I recall the first time he was talking to us about Zenic over a year ago, Neeraj, and his eyes lit up. He said that this is what the world has been looking for, an antibiotic which deals with very, very resistant infections.
Yeah, and a lot of these pharma companies, right? I mean, Wockhardt doing this. There is Suven, who is Glenmark, which has got this massive R&D deal. Suven is working on some product as well, which is apparently going to transform fortune. So a lot of Indian companies are riding on this one specific magic drug for them as well, and other things working parallelly. Maybe could lift fortunes. I mean, Wockhardt 200 to 1800 in about, less than 2 years.
Lift fortunes, save lives, and great innovation coming in as well. So exciting times. Lodha Developers is the other buzzer that we're talking about. The stock is plunging post the Q1 numbers, which look pretty decent in the face of it. What's the reason for that? Hiral is joining us for more.
Thanks, Tamanna, for that. So despite the strong year-on-year performance that we've seen, the significant drop that has come in on a sequential basis, wherein the profits have dipped around 26 to 27%, revenues have dipped around 17 to 18% on a Q1Q basis, and probably that is what has disappointed investors as well, because these numbers actually fall short of expectations for a sustainable sequential growth. So that is one of the major aspects. Secondly, if you read the investor presentation, what the management has indicated is that the sequential decline is attributed to uncertainties during the India-Pakistan conflict in June 2025, which also impacted operations for about 2 weeks with regards to where the company's performance goes. Overall, apart from this, one more aspect that I've just read right now, which I've not been able to highlight categorically, but auditors have flagged non-compliance with NCD convenience and inadequate security cover in the first quarter of FY26. Probably that could have raised concerns about financial governance and debt management, which is further pressurizing the stock as well. And if you talk from a valuation perspective, the stock is trading at a high price to book ratio of almost 6.3 and a PE of almost around 46 to 47 times, which is indicating a premium as per what the numbers have been reported as well. So the sequential decline, despite the year-on-year growth, may have led to investors really talking about our valuations justified with the kind of sequential dip that they've seen so far.
Okay, yep, certainly, and real estate could be down. Hiral, thanks for that. I mean, Lodha has specific reasons, but South-based real estate, etc., could all be down because of what's happened in IT as well, right? It may not have as much impact on IT, but it will certainly have impact on end user industries, because if workforce is going down, that could really have trouble. Now, Sandeep Agarwal has looked at this sector across various cycles, and he joins in right now to talk about the latest flutter caused by the TCS announcement. Sandeep, so good having you. Thanks for joining in. What do you make of this announcement? 12,000 jobs is large, even for a TCS.
Hi, good morning, and thanks for having me on the show. So, if you recollect few of our interactions in the past few months, we have been consistently highlighting that there is a challenge in the sector because the amount of efforts is falling very sharply. Obviously, there will be some mitigating impact of, realizations going up. But again, remember, realizations going up may mitigate the deep decline in the revenue to some extent, but will not mitigate the margin loss because, these people are also tough to get. So that is challenge number one. And challenge number two is that, this is going across the globe. Most of the companies, if you see, they have done this restructuring. And I'm very happy that, TCS has taken the lead and doing it, because this is the only way. You have workforce more than 5 years old, which some of them will not be able to, you will not be able to realign them to the new technology. So it is best thing to, stop your hiring for some time and, restructure the whole workforce. I think this is a good step. It will have some pain in near term. You will see some more pain coming from other companies as well. But I think this is the only solution which is left.
Sandeep, hi, Tamanna here. You're saying you may have workforce which is 3 or 5 years old, which might not be ready. They're talking about senior and mid-level management. So this is at a managerial level that they are making these cuts. Is it more than just not being ready for AI? Are you seeing AI as the prime driver and reason for this, or is it profitability pressure?
So, last 7-8 years since digital has become big, I am seeing this across the IT companies that, more than 5 years, 3 years, there is the utilization or the efficiency is going down substantially because you don't need so many managers in the first place because of the change in technology. So to give you an example, 20 years back, if one project manager was managing 5 or 6 people team, today they are able to manage 70, 80 people team. So, and this proportion is not going down. Also remember, every year, the person is getting 1 more year of experience. So the managerial roles are not there so much to even manage the people which is there. So I think it is a multifold problem. One, there is no need of so many managerial people because of technology and because of efflux of time. And secondly, the requirement of the work is such that you need people to be working in the newer technology and be future ready. So I think from both this perspective, this cut is imminent and it has come at the right time. I think at least an effort is being made on that front, so that you will also be future ready in my sense, in my view, and that is what this company is doing.
Expecting others to follow suit, because today if you see Wipro actually taking even a bigger cut than TCS. Is for the street, is it a negative if you're not cutting jobs right now at those levels?
I would say you have to do, whether it is negative or positive, don't know, but there is no other option because you need the right set of people. You can't have so many managerial people because of the newer technology. So it is a double problem. One, those people need to know the newer technology. Second, you can't deploy them because it will be not cost efficient. So you need less than 5 year experience people to do the new technology work, which will be slightly more expensive than earlier, but at least the requirement of the mid and senior level will go down drastically.
Sandeep, just one more question from mine at least. Is this advantage the smaller, more nimble players' size may cease to become an advantage now? Could that be a possibility?
Yes, absolutely. So if you see post-COVID, this is what is happening. All the small and mid caps have done very good growth and very good profitability. The only challenge is that, they are also trading at a very, very high PEG ratio. So I don't know whether you can make money in them really. Their growth rate may be double of the large names, 2.5 times of the large names, but so is their multiple. So I don't know even if there is money to be made there because they are all priced to perfection.
Sandeep, just one more question. I extended this conversation because you no longer track only IT, but you're a fund manager. What about the IT hiring companies? There are companies which depend on IT sector as a key hiring business, right, for them. Team Lease, Quest Corp, etc. Could these be under pressure, sentimentally or otherwise, near term?
Sentimentally, yes, but actually I don't think, because the hiring which happens from these companies, they are at a lower level, not at the middle and senior level. I think the challenge is in the middle and more than 5 year experience side only. I don't see challenge below 5 years at all. So I don't think, sentimentally can be there, but not actually.
Sandeep, final question really. We were just speaking about Wockhardt a little while back. Zenith has done some stuff for them. Laurus came out with numbers, the stock is active. And CDMO companies in general seem to have done okay. What is your view on the pharma space and particularly the CDMO companies like Divi's, Laurus, Piramal Pharma, etc.? Do you track them?
So yeah, we track them and we are very excited about this space and this space has actually done well, and particularly the deal which happened in case of Glenmark, it was a game-changing deal, but not only for Glenmark, but also for the whole sector. Now, I think more and more money will be directed towards R&D, and it is good because you need to upgrade in this sector, and I think all the pharma companies are going into that direction. We do like some of these names and we believe that CDMO is a very strong story going forward, and we are, playing them through some of the names and also some of the proxies. But we love this space, to be honest.
Okay, you love this space as well, and CDMO space is what we're talking about because it's a strong show from Laurus Labs in the first quarter. Profits witnessed a sharp rise, jumped over 13 times while margins expanded to over 24%. We'll be joined by the management shortly, but let's bring in Varsha to set up the conversation for us.
Yeah, thank you so much for that and good morning. A good set of numbers when it comes to Laurus Lab. You see the revenue growth was led by CDMO segment, and the growth in generic formulation was partly offset by lower API business. Gross margin increase were due to better divisional mix, and the EBITDA margin expansion that you're seeing is led by ramp up in the CDMO business and operating leverage, and of course the change in product mix. If I were to talk about CDMO business, overall if you see grew 103% year on year, but on the bio side under CDMO this degrew 33% year on year, while generics grew 12% year on year, which was the growth was across ARV and developed market portfolio. Onto the management highlights, if I were to talk about, they're expecting healthy year on year growth in CDMO segment when it comes to FY26, which has a potential to touch 50% in medium term, and the gross margin is expected to be at 55 to 60% versus earlier guidance of 50 to 55%. So they've increased guidance when it comes to gross margin. Net debt to EBITDA ratio is expected to be in a range of 2.2 to 2.5x, and overall they are expecting meaningful revenues from crop sciences in next financial year.
Okay, thank you for that, Varsha. Satyanarayana Chava, founder and CEO of Laurus Labs, joining us now on the show. Mr. Chava, a very good morning to you. And it's clearly a robust set of numbers. Profits are up massively. Your margins have grown. Is this a CDMO push that we're seeing? Where is this coming from?
If you look at the overall revenue increase came from CDMO significantly, and also the higher revenue came from formulations. The gross margins area we were giving guidance between 50 and 55. Because of increase in share from CDMO, now we are confident to achieve gross margins between 55 to 65. Okay. We always believe the quality of business is always visible from the gross margins. Our EBITDA numbers were lower in the previous quarters, not in the Q4. Q4 we did very well last time, in the previous years. We were doing a transition from generic to CDMO and attracting customers, getting projects, winning projects, and validation of those APIs is a time-consuming process. That's what we had in the last 2 years. At least now we can say we have seen some good traction. We completed validations. We started supplies of APIs for launch quantities or commercial quantities. That's the main reason for our improved gross margin, as well as also there was an operational leverage also helping us. The equipment utilizations are getting better. We are not significantly investing in new areas right now except ADCs and gene therapy. So our non-core capex and apex is coming down. That's the reason our EBITDA numbers are also.
Do you see the kind of jump in CDMO revenues to sustain, Mr. Chava? And yes, you've said the gross margins will expand, but in quarter two through this year, what is that trajectory that you're seeing?
I think we expect the traction will remain. As you have seen, from 500 crores CDMO revenue in 2021, we are at 500 crore revenue per quarter. We expect that traction will continue. Why we are confident that traction will continue? Our revenue contribution majority coming from late stage and commercial molecules. If we have to gain significant growth in CDMO revenue, if you have too many molecules or too much of revenue coming from preclinical phase 1, it is very difficult. We are in the phase 3 and commercial molecules. Work is going on from Big Pharma. So we are very confident of keeping this traction.
Chava, are you therefore telling the street that if you moved from 500 per quarter to 500 per year to 500 per quarter, and if you are currently therefore at 2,000 crores per year, you will move to 2,000 crores per quarter in the next 3 to 5 years?
No. We have to deliver now. At least now we are confident that we are done very well. And see, all depends on the projects. See, one thing you have to keep in mind, we are playing in the API space for NCEs, or advanced intermediate for NCE space. We are not in the building blocks or early stage intermediates. So the quantum of opportunities for us right now are very, very interesting.
Sure. One of the notes, Dr. Chava, of course, that was just in jest, Dr. Chava. So one of the questions that I have is that one of the notes said that Septiapterin sales, which were very strong for you in quarter 1, may not recur in quarter 2 and quarter 3 before a potential pickup in quarter 4. Or could this be on the button, and therefore, and is this something that could play out in quarter 2 and quarter 3 and therefore make quarter 2 and quarter 3 growth numbers look okay?
See, because of the confidentiality with our partners, we can't tell you when we will supply, how much we will supply, what is. But as I mentioned, we have good traction in CDMO, and we'll continue to grow in CDMO. That's what I can tell you very clearly.
Okay.
See, it's very difficult to predict how much of each API we supply every month. So, but they have plan and they will give orders and we supply as per their plan. One good thing is, it's not like generic companies, they have 5 suppliers.
No. I hear you, Dr. Chava. Dr. Chava, a few years back when we used to interact, you used to say that APIs will be a third, even though they will not grow, but APIs could stay a third because there will be some growth there, and the other business would be one third. Now I'm trying to understand from where you are right now, over the course of the next 2 or 3 years, if CDMO is going to be the big building block, how do the percentages change for you as a company, and thereby does it have an overall impact on the gross margins and the consolidated margins for Laurus as a company, let's say in FY28?
See, if you look at the Q1, we were 59.4% gross margins. Whereas close to 1/3 revenue came from CDMO and 2/3 came from chemicals. Despite of the 2/3, 1/3 mix, we're able to do very well. That means we are running an efficient operations, even in the generic space. Otherwise, our gross margins will not be that. And going back to your question, we expect the gross margins will remain same, grow, because of higher contribution will come from CDMO. In the next 3-4 years, we expect CDMO revenues should grow bigger than what we have today, and we should inch towards 50% revenue contribution coming from CDMO in the medium to long term.
Sir, do you look at possibly listing the CDMO business separately at some point?
No.
Completely out of the question?
Yes. Yeah.
Okay. Tell us a bit about what Laurus Biosciences is doing in terms of innovation. And I'm asking because so many in the space, companies in the space are now looking at these breakthroughs that become huge payoffs and also, of course, breakthrough medication. Is there anything exciting happening there that you'd like to share? Or what is the focus on that bit? Because yes, CDMO very efficiently growing, but what's happening on the innovation front?
In the biospace, we have 3 segments: fermentation, precision fermentation, biocatalysis, and enzyme manufacturing. That's what Laurus Bio is. And they have good prospects. That is the reason we're expanding capacity at Vizag, and we expect the capacity will come online by end of next term. The second segment in bio is cell and gene therapy. In cell therapy, we have investments made in subsidiary Immunact. They're doing good. In gene therapy, we have licensed some patents from IIT Kanpur, and we are building a GMP facility at IIT. We also announced investment in antibody drug conjugates because company already makes payloads and linkers, and we wanted to do bioconjugation, purification, and purification. That is the second initiative. The third initiative is antibody drug conjugate. Second initiative is gene therapy and adenovirus vector management. So if you look at these 3, the bigger one which is going to mature faster is our precision fermentation, where we are investing significant money and also resources. The Immunact, they have 1 product commercial, and second product is in clinical phase right now. Phase 1 is going on, so we can't give you more details at this stage. And in gene therapy and antibody drug conjugates, we are investing, and we are creating a 6,000 square meter GMP facility for gene therapy and antibody.
Okay. Okay. Dr. Chava, very quickly, out of time, but just one quick question. We learned that you were committed to some 5,000, 6,000 crores of capex in Andhra Pradesh over the next 5-8 years. I was looking at your numbers. Cumulatively, the last 5 years, you've done 5,000 crores of capex. In AP alone, you're guiding to 5,800 crores. Are you doing more capex beyond that as well? What's the total capex number then?
We are at, if you look at the last 3-4 years, we are between 800 and 1,200 crore capex per year.
Right.
Depending on the opportunity we want to have. See, we have only 50 acres of land parcel left for our growth. See, developing any new land and getting approvals, getting ready for commercial supplies is a 3 years time frame. So we requested government, and they gave GO yesterday for 530 acres of land, single land parcel. And there we committed to invest 5,600 crores and provide employment over 6,500 and in a phased manner in the next 6-7 years. So we expect to invest that much amount in the next 5-6 years.
Got it. Okay. Wish you all the best for that, Dr. Chava. Thank you so much for taking the time out and speaking to us. Really appreciate your time.
Thank you, Niz. Thank you very much.
That's Laurus Labs. The stock at the day's highs. The company saying growth seems to be continuing. Okay, well, that's Pharma, which is doing well, but all the major banking earnings which have been reported, and an important and a worrying trend needs to be addressed. The asset quality of almost all the large private banks has come off. Vishy Johnson with details on this. Vishy.
Right, Neeraj. So, as you were pointing out, yes, there is a uptick on the gross NPA figure, on the slippages figure as far as private banks are concerned. Let's take you through what the gross NPA numbers are looking like at this point in time. If you see this list, there's ICICI Bank which has a nil sort of movement on the gross NPA. Apart from this, also Yes Bank. But as you can see, 10 bips, 29 bips, 6 bips. If you were to look at IDFC First, that's about 10 odd basis points. RBL Bank, again, an 18 basis point spike on the gross NPA. All of this points to increasing gross NPA or asset quality pressures that is building on the private sector industry. Just take a look at where the slippages are during the quarter. The the slippages have jumped up significantly. Axis Bank, again, 71% to 8,200 crore. I mean, this is because of a one-off, as the bank claims, but we'll wait and see what Q2 looks like. What our reporting suggests is that the RBI pushed them to do this, this recognition, and that's why this is going up. The lowest increase in slippages is actually still about 14% at 2,500 crore for IDFC First Bank. That's a major sort of jump on the asset quality worries as far as the private sector banks are concerned. Even in the public sector banks, the problem assets, which is pre-NPA but still stressed, those accounts have gone up. NBFCs like Bajaj Finance have also pointed out that there are pockets in the MSME sector which are adding to the asset quality pressures as far as the banks are concerned. What does this all point to? Typically, Q1 is generally weak for all private banks, but this quarter has been worse off than what was there previously. Apart from agricultural loans, we are also seeing small commercial vehicle which are adding to the NPA stress. If you look at what HDFC Bank did, they during the quarter set aside about 9,000 odd crore to create a special provisioning buffer. This is because they got money from the HDB financial listing, so they used that to create this. Axis Bank says that it has changed the way it is measuring NPAs and upgrading accounts, so that has added to the stress. Microfinance, which has been a stress point so far, continues as a problem, but still is a much smaller problem now than what it was even the quarters before.
And since we've spoken about bank numbers, IDFC First Bank has reported a mixed bag. Margins have declined owing to credit costs and slippages, but operating profit has found strength. Listen in to that conversation with V. Vaidyanathan, MD and CEO of IDFC First Bank.
I want to start with the 21% advances growth, but the NII at 5%, largely RBI driven?
Yes, because the repo rate, as all of you know, came down quite sharply. So we passed it on to customers, but deposit side will take a year to pass through. So that's one of the fundamental reasons, actually.
The net interest margin drop as well. So that's 24 bips on a sequential basis. I just wanted to get a sense as to what the trajectory looks like. Is this the lowest it could go, or is there more contraction in the books?
Reason we discussed a moment ago, and also because the composition of the microfinance in the book has come down. So, that has also affected that. But coming back to this one, to your question, Q2 could come down even more because the residual, the last 50 basis points of repo rate cut that happened last month, that is yet to fully be effective. But Q3, by the time our fixed deposit will get repriced downwards, Q4, a lot more will get repriced. So think of it like one more quarter, it could come down. Then Q3 should even better, and then Q4 should, of course, be quite good again.
What's the appropriate level to you of the net interest margin for this year?
Like Q4, it should get back to about 5.8% plus again.
Okay, understood. I want to ask you about the CASA side as well, because there's been a positive surprise. We've got 48%. I mean, I say surprise because broadly in the industry, CASA trend seems to still be lower, but you've bucked that trend. Any indication of what's happened and what it could look like the rest of the year?
Yes, we have actually built a really, really good franchise. I mean, I don't know if you're a customer or not, but I can tell you that most customers who enter to the bank, they really, we are getting a really good positive response from customers. So the main thing is that, so that's coming well. And also our branches have become more productive, getting more vintage and so on and so forth. And also we cut down the fixed deposit rates quite a lot. So therefore, by the mix turns out like that. So we feel that, frankly, our strengths are good on this front. By Q4, we should be able to maintain 48 plus, we feel at least.
All right. I want to touch upon the asset quality question because that's something that's been in the discussion for so long. Microfinance seems to be sort of stabilizing now. You've guided that Q2 things might start turning. I wanted to get a sense of what happened in the non-microfinance book in Q1. Was there anything specific that stood out as far as IDFC First is concerned?
No, nothing specifically stood out. Think of it a little bit. Think of it like a bit seasonal, if you may call it so. And of course, the microfinance and both put together, slippage has gone up slightly. But I think if you see the system as a whole, you've seen commentaries from many organizations. There's been a bit of a increase in slippage in the system. But really, the broad asset quality numbers in terms of credit cost and NPA numbers, all that looks to be stable. So for us, nothing specifically to call out really.
Okay. I wanted to get a sense of the cost of funds as well. Now, you said that the deposit repricing will happen over the course of the year, right? Having said that, there was a rate cut before the last one as well, before the last 50 basis points happened as well. That has not shown up yet.
It's come down by cost of funds, come down by 9 basis points quarter on quarter actually for us. We think that on the fixed deposit side, we have, like I said, it's a very sharp cut. We were paying 7.8% on the highest bracket. There are multiple brackets, but I'm talking the peak bracket. Was about 7.8. We brought it down to 6.75. That's like a 110 basis points cut we've done there. And that's, call it like about 50% of the book. So as the years roll by, we expect cost of funds to come down by about 40 to 50 basis points in the bank, cost of deposits.
You've guided a credit cost of about 2 to 2.05%. You're already at the lower end of that band that you've guided for. You're confident of this 2.05% for the year, and what's sort of driving that?
I know people are pointing it out, saying that look, when the system is increasing, how are you somewhere in that zone still? Thing is that we feel that Q3, Q4, because the microfinance issue will go away by that time, so the credit cost from that front will actually come down. So we feel that Q3, Q4 credit cost could be lesser. Q1, Q2 is of course higher because of the reasons we discussed, microfinance, etc. So even we feel somewhere will be in the zone. Our own studies are representing that.
Okay. Just a quick question around the advances deposit interplay at this stage. You're growing at about 21% on the advances front. Deposits are up, 26% year on year. These ratios or these growth rates still hold strong, or is there a chance that you would probably see some amount of boost on that front because the rate cut is coming in as well?
The rate cut is good for the system as a whole. When rates come down, it expands the credit market in that sense. But for us, 20, we're happy. 2021, we're really very happy. We're not, as in the country, the overall environment, it's a comfortable number. And on the deposit side, the reason why we grow deposits, pardon me. Excuse me, please. The reason why we grow deposits much more than loans, that's 25, is that we also need to bring down our credit deposit ratio. So incrementally, we don't want to have credit deposit ratio more than 75%, give or take. And we've been doing that for many years now. And with that extra money, we also pay back the bonds, etc. So 20 of loans and 25 of deposits this year looks comfortable.
One last question I wanted to ask you about a general sort of sense of where the industry is headed at this point in time. If you were to look at the kind of commentary that's coming in, I would classify it as cautious, but still slightly optimistic. To your mind, what is probably standing out as potential risk and potential opportunity for the rest of the year?
You should call it, the commentaries are more cautious, let me say, than cautious and optimistic. It's more cautious because you've seen the numbers coming around. And a caution is very warranted in our industry. We should be very careful. But you asked for what is optimistic. Let me answer that question also. You see, in rural India, the wage growth has been reasonably good from the CMI, AC Nielsen data. Then there was, FMCG sales are looking better. So therefore, a bit of, monsoons have been good. So the kharif crop could be better. So there are some things in rural India which is getting better. In fact, rural demand growth is even better than urban. So that's the one thing to probably be a positive one.
Sorry, I said last question, but I want to close this conversation with one point about the fundraise, which was something that has been in discussions for a while. Are you expecting to close it this quarter now?
Yes, it's certainly on the cards. Things are moving quite well.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
When you took over, this was in the middle of a huge controversy. What's in the Maggi masala, FSSAI action. It was a bad time to take the top job.
I was happily in the Philippines when I got the call to come to India. Yes, it was an existential crisis and what might have turned out to be a catastrophe for the company.
You were the first one to recognize that there is urban consumption distress. You were the one who came out and said the middle class is shrinking. Do you think that some of that urban distress is now eased, or it continues to be a pain point in terms of consumption patterns?
The latest numbers seem to show that urban consumption, in fact, outstripped rural in terms of percentage growth. I think the worst is behind us.
What is the way that one should make Maggi? Should it be soupy? Should it be dry? Should it be with cheese in it?
Make it the way you like it.
How do you like it?
Plain masala. When I am up in the hills, there is everything to believe in something called Pahado Wali Maggi. There's something about that Maggi which is magical.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IPOs CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IPOs CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Select Live. Ask.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Matthew. With me, of course, is Mahima Vajrajani. First of all, as we did earlier in the day, let me thank you. Let me thank you all for watching us, because we've managed to hit the #1 spot in the business news space, and it's all thanks to you. And congratulations to you, Mahima, and the rest of the team. It's hard work, and we're very glad for the support that you're giving us. And this show in particular is where we get the opportunity to speak to you directly. And to that end, you can get in touch with us on either one of the two methods that we have available. One, of course, is the WhatsApp number at the top of the screen, or you can call us on the number that will soon flash on the bottom of the screen. That's the landline number. Let's turn to the equity markets and see where they are this morning. And it was a little bit of a wobbly start, but we've recovered from the low point of the day. The Nifty 50 trading in a pretty narrow range, up about 0.2%. Let's look at the contributors as well. And there are a couple of names that have been proving to be a bit of a drag, and that is on the back of numbers. Kotak Mahindra Bank single-handedly contributing about 43 points on the downside. And a lot of investors will have been a little taken aback by the fact the return on assets has slipped below that 2% mark for the first time in, I think, a lot of people's memory. The fact that asset quality was a bit of a concern, net interest margins shrank quite considerably, 32 basis points on a sequential basis, and all of that is proving to be a bit of a drag for Kotak Mahindra Bank. The other drag, of course, is the IT space, where you have TCS, you have Wipro among the top losers, the top 5 losers. Wipro is currently off the low point of the day, but losing about 2% at this point. And TCS really laying off as many as 12,000 individuals in the mid-level as well as the senior level. And that is proving to be a little bit of a drag for the sector as a whole, particularly the large cap companies, because if TCS, the bellwether, has rung that ominous bell, then the question is, do the other large cap IT companies follow suit as well? But on the earnings front, let's talk about Tata Chemicals, because it was a good set of numbers. Some of the cost pressures that the company has faced dissipating, margins have improved. Varsha joining in to talk about that and also to introduce the management. Varsha, what in the numbers stood out to you?
So Alex, good set of numbers, EBITDA and profit did beat estimates, and also if you see the revenue impact, there was a little impact of revenue. Now this was due to closure of one of their operations and flat volume, of course, and lower realizations due to pricing pressure in all regions have also impacted numbers, and the margin increase was led by cost rationalization initiatives that the company has seen, and lower tax also added a net profit. But to speak more about numbers and what is the outlook going ahead, we are here joined by Mr. R. Mukundan, who is the Managing Director at Tata Chemicals. Welcome, sir. Pleasure to have you. So just wanted to have, how was Q1 FY26 for you? Because I believe that you have mentioned that the overall global demand is estimated to be flat in the near term. So if you could give us some color on the extent of price decline that you have seen.
So let me start with the overall number. As you mentioned, I think if you look at the volume and revenue, these were down because one of the units in UK, we had ceased operation, and that was a management decision to rationalize and restructure the company. And as I mentioned, there'll be 3 drivers in the last quarter when we actually went through and finished the whole round of restructuring. There'll be something like one third benefit coming this year, and that is playing out. Approximately 600 crore was our estimate, 200 coming from the cessation of operation in UK, 200 crore coming from the new capacity additions in India, and also another 200 coming in from cost out, which is a combination of fixed and variable cost. I think all 3 are playing out. As we speak, the only lever which we need to work on is the working capital lever, which we need to sort of rationalize. I think there's about 300 odd crores on working capital, which is to be done. In addition to that, I think the debt has to be brought down at least by another 500 to 600 odd crores during the year. year. So that's a work in progress. In terms of the market outlook, we have actually planned the market to be more or less flat and tepid and flat. The growth engines continue to be India and parts of America, especially the South American market and Southeast Asian market continue to grow. We do believe that in China, there's a bit of a slowdown happening because of the solar glass output coming down. But that is effectively the shift which is happening from China to Indonesia and Malaysia, where the production centers are shifting because of the realignment of the global supply chain. So we are following our customers, and we would fundamentally see our volumes fully sold out. At the same time, we have not planned for any increase in prices. But if you look at the way the trade negotiations have been going on between Japan and Europe and UK, it's already signed. And the second thing, the two other economies which the US is really negotiating is China and India. When you look at China, one of the key blocks they're actually looking to is to Chinese to rationalize their industrial overcapacity. I think that is something which we are keenly watching. Already we have seen in soda ash, one of the units cease operation, Shandong Haiwa. And in Europe, again, we find there are many uneconomic chemical units which need to sort of cease operation, of which two have done. Our own unit has ceased operation, and also a Polish unit, unit controlled by a Polish entity, has also shut down. So I think we will see in the next few quarters and during the course of this year and next year further capacity rationalization of, but I would certainly say that we should just plan for a flattish year in terms of the pricing, and really we need to focus on cost improvement. In terms of costs, variable costs have come down, energy prices are down. We do anticipate they'll remain at the same level, and we are focused on making sure we run pretty efficient operation.
Mr. Mukundan, so there's several aspects that you've touched on, and it's pretty comprehensive what you've told us, including the outlook for the rest of the financial year. I do want to focus on the debt reduction part that you spoke about, 500 crores. What is the glide path to that? When do you anticipate that will get taken out?
During the year, I think our anticipation is to at least take out approximately 1,500 over the next 2 years, of which 50%
more or less remain steady through the rest of the year, or do you anticipate there to be some fluctuations going forward?
That's a good question. There will be a bit of fluctuation. Let me just say that I think Q2 effectively happens to be a more, let me say, a softer quarter for us than Q1. Q2 mainly because in India, for example, during monsoon, the construction activity, the demand for detergent sector comes down, and similarly is the demand in Asian market, because what happens during the monsoon is felt across Southeast Asia and India together. And during this period, there is a bit of softness which comes in. Barring that, I think Q3 and Q4 would again see an uptick and back to normal levels. And also during the course of the Q3 and Q2, we anticipate our pharma salt plant would be operational. So that should start playing in somewhere in the middle of the second quarter. And by the third quarter, we also anticipate, by the end of the third quarter, we anticipate that we would probably get additional soda ash capacities coming in within Mithapur, approximately 50 to 70 odd thousand. And then we'll further debottleneck and bring on stream about 150 odd thousand. That's the plan. So clearly there are 2-3 levers which are playing out. One is the UK Pharma plant, which got commissioned in the first quarter, which is undergoing customer trials, which should then start playing in the second quarter. And by the end of December, we anticipate some debottlenecking would have been done in India, which should give us in the last quarter certain additional volume. So there will be a volume impact. In addition to that, I think we will also see the costs playing out. In terms of market volume or our dispatches to the market, I think we would see a moving number, which means there'll be a slight dip due to monsoon and then again pick up in Q3 and Q4.
Understood. And also progress on your Kenya capacity expansion, what's the update there? And also you were discussing about soda ash expansion and bicarbonate. So any update on that as well?
I'm glad you brought that up. I think I missed that in my commentary. So I think the 50,000 ton electric calcine, which is completely green soda ash, which uses fully renewable power, I think was commissioned towards the end of this end of this month, July. I think it start seeing market is undergoing trials. So by end of Q2, it will start hitting the market. That's about 50,000 ton. It's a much purer product, much better product. So hopefully the realization should also see an uptick in Kenya of that 50,000 in Q3 and Q4.
Mr. Mukundan, always a pleasure speaking with you. Thanks so much for being what is the word for it? Candid. Yes, thank you. That's the word I was looking for. Thanks so much for joining us this morning. Thank you, Mahima. See, sometimes I search for words, and today is one of those days. But we've got that management interview out of the way. Let us know what questions you'd like to. Of course, I pointed out. You can call us on the number that is on the screen, on the bottom of the screen, or you can send us a message on the WhatsApp number on the top. What is the first question we have today?
I'll introduce the guest before that.
Oh, yeah.
Let's welcome in Saurabh Jain, Equity Head Research at SMC Global Securities, joining us, and Brijesh L, Head Technical and Derivative Retail Research at IDBI Capital, joining us now. Welcome to both of you, gentlemen. I'll take the first question, which is from Ekambarai, who's writing us from Hyderabad. He's saying that he regularly follows our program and thanks NDTV Profit for the service. So thank you so much for watching us daily, Ekambarai. He's holding Tejas Network 175 odd shares, bought at 1125 a piece. Wants to know if he can start averaging out or book losses at the current moment. He's a retired person of 73 years of age and wants to know from that perspective. Brijesh, very good morning to you. I'll come to you on this one. What are the charts indicating for Tejas Network? Should he average out or should he book his losses?
Hi, morning. So the charts, the weekly and the monthly charts are not that great. The charts are negatively placed. So there is a fresh sell-off which has been seen in the month of July as well. The stock is down by 17%. And it looks like it can go back to 380, 350 levels. So somewhere I'm not very comfortable. So averaging, there is no question about averaging because it's a weak chart. One has to take the fundamental view because I believe this can go back to 380, 350 levels. Then if it is there in some value or something, some averaging, I don't know. But as of now, 350, 380 is the downside target.
Saurabh, Brijesh, thanks so much for joining us this morning and good morning to you. We got our first caller, Dheeraj, is calling us from Hyderabad. Hi Dheeraj, very good morning to you. How can we help you today? Dheeraj, can you hear me? Okay, we seem to have lost him, but I think his question was on Adani Green. He's got 250 shares at a price of 1,020 rupees per share. The stock is currently very close to that buy price, not too far away, just sub that 1,000 number. And I'm assuming that he's looking for a short-term view here. So Brijesh, I'll come back to you on the charts. How does it look?
I think it is forming a base formation. This level of 900, 950 is quite a good level. So in the short term, I think this can go back to 1100, 1150. So that's a trading opportunity. If it's already, I think he will get that exit kind of thing. So 1150 would be my target. There you need to review the position.
Okay. All right. Standard disclaimer, NDTV Profit is also a part of the Adani group of company and so is Adani Green. All right. The next question then is from Mohit, who's writing us from Ludhiana. His question is on Bandhan Bank. He's bought it at the levels of 187, 500 odd shares and wants to know from a 2 years perspective, should he continue to hold or not? Saurabh, I'll come to you on this one. What's the view like for Bandhan Bank?
Hi, good morning. No, not the best of the lot. I mean, there is a problem with the balance sheet. The NPAs are high, and some of the banks who have reported earnings have said that there is some kind of a stress in the MSME segment. And Bandhan Bank has a good amount of exposure towards SME. So I believe that the numbers too would not be that great. I think it is better to switch over to some PSU bank like maybe Canara or Indian Bank.
Okay. All right. We've got Umesh who's writing in asking what is expected on Waaree Energy's result. Now, unfortunately, we don't have enough estimates to give you a consensus preview on what the numbers look like. But let me go to Saurabh on the fundamentals just to ask whether he's got coverage, what his anticipation is. The numbers, of course, Saurabh, come out today. Would you have a buy on this based on what you've seen, and what would you look for in the numbers?
I think we do not have the estimates, but yes, the market is concerned about the demand outside India. I mean, the company exports a lot of material to the US markets and all, and what will happen to the tariffs and all. And moreover, the growth is likely to taper down and the valuations are high. So my sense is it is better to stay away till the number is out and get the management commentary on how the financial year is likely to pan out.
All right, wait till the earnings come for Vari Energies is the view that Saurabh has. All right, the next question then is from Puneet, who's writing us from Gurgaon. He says that he had invested in high-tech pipes recently, considering the kind of good earnings, the segmental growth in terms of pipes, as well as the investments that were made by FIs and DIs. And now he's saying that he's got 300 odd quantities bought at the levels of 100 rupees, but recently he's noticed that FIs are slightly reducing their stakes in this particular account and wants to know if he can continue to hold or not. He's down 7% from his buying price and wants to know if he can hold at the price or should add more or exit at the moment. Brijesh, I'll come to you on this one. What are the charts indicating for high-tech pipes?
So in the recent trade, the charts are trending down. The immediate swing low for the stock is 84. So I think he should hold the position as long 84 level is held. And by any chance, if 84 is broken, then it will make a lower low. So he needs to be having a cautious view. And most probably, if 84 is taken down and if further if the stock is correcting, I think exiting it will be a better trade.
Okay. I believe we've got our next caller from Hyderabad. And Snigdha, thanks so much for calling us. What do you want to know about?
Hi, this is Snigdha from Hyderabad. So I just want to know regarding, so I have 5 lakhs of corpus and I just want to invest it on either L&T and KPIT. So is this the right time to enter the stock, or else if not, can you please give some suggestions?
Okay, when you say short-term outlook, how have you defined that, Snigdha, and why these two companies?
So, I thought it would be good to enter right now. So it is just my analysis. So
and the time frame that you have in mind?
2 months, either 1 or 2 months.
1 or 2 months, okay. So then, Brijesh, specifically on these two counters, large cap counter Larsen & Toubro and KPIT, would either of these be good to buy for a 2-month time frame? 5 lakhs, a pretty large sum of money she's looking to deploy.
Alex, so basically, see the structure. If I look to the structure for the L&T and KPIT, KPIT looks more weak. KPIT from the level of 1189, somewhere it can comes to the lowest support is 1060. So that the downside is aggressive. So KPIT will not be in my watch list. L&D is something which we can keep a watch on, but then the level to make an entry is somewhere near 3300. So I think close to 3300, if she can make an entry, she can make some trading bounce can be there, because if everything works well, 3500, 3550 can be the bounce back. So she can play for the 200 to 50 points kind of a move. So that can be a very short-term trade setup for the L&D. KPIT one should ignore.
Okay, the next question is on Finolex Cables. Money is writing in and has 210 odd shares of Finolex Cables bought at 955 a piece. Wants to know from a 6 months perspective whether he can continue to hold or not. Brijesh, I'll come to you again on this one. Your view on the charts?
Yeah, KPIT we can hold, because I think the level of this 800 and let's span it to 800 level. This
Brijesh,
is a major
it's Finolex Cables, not KPIT.
Yeah, Finolex 895 is what it's.
Okay.
Yeah. So
I think you'd remembered the last question. We talked about KPIT, so you were referring to KPIT, which is why we thought that we'd clarify.
So the Finolex is trading at 895, right? And if I'm looking at the multi time frame, then the level of 800 is a very decent support, and from there, most of the time the stocks has seen a very strong reversal bounce back. So this guy should hold a long position, and whenever it comes close to this 800 level, like averaging is something what has to be done, and we can see a bounce to 1050, 1100 level. So the view is positive. On a further decline, one should average it off.
Okay, we've got our next caller. Ravi Chandran is calling us from Hyderabad. Ravi Chandran, hi, a very good morning to you. How can we help you today?
Very good morning. So my query is on CDSL.
Okay.
Is it a good time to buy CDSL, or shall I wait for a couple of days so that it gets more correction?
Wait for, I'm sorry?
Shall I wait for a couple of days to get other more corrections on this stock?
Okay, Ravi Chandran, I got your question. Saurabh, I'll take this up with you specifically because we have NSDL opening with its IPO this week. Do you think Ravi Chandran should go ahead and buy a CDSL or apply for NSDL? Although it's completely offer for sale, that's something that the viewer should know about. What's your view?
See, buying CDSL because NSDL is coming is something a tactical view, which is largely a short-term view. On the fundamental basis, in the long-term basis, I think the valuations are quite high. I mean, trading at more than 20 times to book value, 50, 60 times, trailing 12-month earning did not justify the kind of growth that CDSL is experiencing. In the past also, we have seen steep correction in the CDSL, and this same sort of bounce has also been seen. But I would refrain to advise a buy on CDSL. My sense is better to avoid.
Yeah, so the numbers came through post-market hours on Friday, and they weren't the best set of numbers, as a result of which the stock took a little bit of a hit, and it's in fact been losing ground. People have questioned valuations. CDSL is one of those stocks, capital market players, that ran up quite substantially. Speaking of earnings, our next question is also related to a company that posted numbers, Ather Industry, and Shrikant is writing in from Bengaluru. He says, in spite of the good Q1 results, the stock is losing ground, down about 1.4%. And I was just looking at the numbers, Saurabh. The operating profit margin has actually improved. It's on a sequential basis expanded. You have the PAT number that is coming at 40 crore or thereabouts. It's more or less stable on a sequential basis, but not doing okay. It's actually up as much as 30% on a year-on-year basis, so it's pretty decent. Would you say that this is something to hold, something to buy?
I think the numbers suggest that there is certainly a decent growth in the bottom line and as well as in the margins. My sense is that stock has done nothing from the last 1 year, that it is trading at the lower band of the valuation, close to 4 times to book value. And after these numbers, I think it makes sense to hold for another quarter or two and see how the earnings pan out.
Okay, all right. With that, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. Viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. On this side of the show, we're also joined by Ajit Mishra, who's the Senior VP Research at Religare Broking, joining us now. A very good morning to you. I'll take up the next caller. Shweta is calling us from Hyderabad. Shweta, hi, a very good morning to you. How can I help you today?
Hi, Mahima. How are you?
I'm good. How are you?
It's been a very long since I spoke to you.
Yes,
even though I've become quite popular nowadays, it has become difficult to get in line with you.
You can always WhatsApp us also, Shweta, if that's the case.
WhatsApp is tough, actually.
Yeah, no problem. You can always call us. Tell me. Go ahead.
Yeah, my question is regarding PG Electroplast.
Yes, okay.
I have 120 shares at 844 rupees.
Okay.
So I'd like to know how it would be for 1 year of time period.
Okay.
Whether I should hold or I should go exit and take some other EMS stock like Sirma, SBS, like that.
Okay, and this is from a fundamental perspective, I believe, Shweta.
Yeah, fundamental perspective.
Okay. All right, got your question. I'll take this up with Saurabh. Saurabh, she's saying that she's already holding 120 shares of PG Electroplast, but do you prefer this counter in the EMS space or something else?
The company is posting good growth, but at the same time, the valuations are high, trading close to 19 times. The stock got re-rated in the last 3-4 years, and there is a lot of buzz in this segment. I would suggest a hold on to it, but I would refrain from buying more.
Refrain from buying more. But is there anything else that you would buy in the EMS space, incidentally, Saurabh?
In the EMS space, this space is particularly quite expensive, and does business at a very thin margins. So that is my concern.
Okay. Incidentally, do we have Lata joined in? Okay, because Lata is also asking about an EMS player. Lata, very good morning to you. How can we help you today? Specifically on Dixon Tech, right?
Yeah.
Yeah. What would you like to know?
See, I bought it 32 shares at the price of 15,712.
Okay.
So I just want to know, I have to hold it or is just sell it?
Okay, and you have a short-term time frame, is that right?
Yes.
Okay. So we've gotten a fundamental view on the EMS space, and Saurabh has pointed out that valuations are a little stretched. Ajit, on the charts, she's in the green. Should she book out right now or wait for further upside?
Yeah, good morning, Alex.
Good morning,
Mahima. So, Dixon Tech has been a steady performer. And in fact, if you see from the last 2-3 months, we are seeing a gradual recovery. She's sitting on decent profits. The stock is almost on the verge of retesting its previous swing highways. We have a strong resistance around 17,000 mark. Since our view is short term, I would recommend her to book profit and wait for a decisive close above 17,000 to re-enter or a dip towards 16,000 area. So yes, it's time that she should book some profit current levels and wait for a dip or a breakout.
Okay, so that's with regards to where Dixon Tech stands. The next question is from Sai Karthik, who's writing us all the way from Dallas, Texas. Interesting.
He's up late.
Yeah, he's up late for sure. So his question is basically on Geo Finance and wants to know if he can take up 3,000 to 4,000 odd shares for the next 6 odd months. Ajit, I'll come to you on this one. What are the charts indicating for Geo Finance?
So Mahima, it's been almost very strong recovery in last 3 months. We are very close to the 52-week high, and still means the stock is hovering around the short-term averages. Since the view is to buy in quantity and hold it for 3 to 6 months, he should rather accumulate, not to buy at one go. So in this range, let's say 290 to 310 is the area where he should accumulate. And for the entire position, his stop should be at 260. Since it's a high beta counter, and gradually 345 to 360 is something that he can maintain as a position target.
Okay, so that's the view on Geo Financial Services. We've got a couple of questions coming through on HDB Financial, which, as you all know, is the recent listing. It got split from HDFC Bank. It was issued at a price of 740 rupees per share. And we've got Likita as well as Jerry who are asking questions about this. Likita has got 20 shares which he's got at that listing price of 740 rupees. And Jerry's also got 20 shares on allotment. He's asking whether he can add more for the long term, and Likita wants to know what the target is for the next 6 months. So unfortunately, we cannot get your view on the charts, but Saurabh, on the fundamentals, would you hold for the foreseeable future, long-term, short-term view, both?
I think it is a hold for the long term, coming from a very good, it is a subsidiary of a very good bank. In the short term, I think the market was a little bit disappointed because of a slower than anticipated growth. The profits grew about 14%. There was a lower growth in the business. And that is why I think some selling is there. And moreover, the issue was priced on the higher side because of the good conditions of the market. I think from the long-term perspective, yes, it is like expected to reap benefits.
Okay, all right. So that's a view on HDB Financial Services. There was a little bit of a pocket of concern, I think, if I'm not mistaken, the CV space, the commercial vehicle space, where asset quality was a little bit of a question mark for the company, and that got the stock beaten down a little bit post the numbers. Let's take the next caller. We've got Pradeep calling us from Bengaluru. Pradeep, very good morning to you. How can we help you today?
You, Alex, I'm having 20 shares of Gujarat Fluorochem.
Okay.
Bought at 2727.
Okay.
So I just wanted to know whether, because now chemicals are on a bit of a rise.
Yes.
So just wanted to know whether I should hold for another 1 or 2 years, or should I book profit?
Okay.
And if I book profits, then at book level.
Yeah, okay. Okay. So, but the first question is on a month, on a year or two. And so therefore, I'm assuming that you're talking about the fundamentals of the company, right, Pradeep?
Yes, yes.
Yeah.
Yes.
So Saurabh, Gujarat Fluoro, what you make of the company, he's bought at an attractive price of 2727. So he's making some money. Does he double down, add more at this level, hold for the next 1 to 2 years? What are the prospects?
I think the valuation is correct. In the last 2-3 years, if you see, the stock has done nothing. I mean, it is close to 3,500 only. The profits are going and the valuations have gone down, which is giving good amount of comforts. My sense is, yes, the cycle is expected to turn for the companies like Gujarat Fluoro into the specialty chemicals. My sense is it is better to hold.
Okay, so that's in regards to where the company stands. And it's interesting also because, Alex, Gujarat Fluorochemicals is set to benefit from the UK FTA as well.
Right.
Because almost 25 to 30% of their revenues comes from UK plus EU. So it stands to benefit from that as well. So that will also be an interesting peg to watch out.
Right?
Correct.
Refrigerants and fluorochemicals.
Correct. So and a lot of these companies stand to benefit because of the UK FTA as well. And sticking with the same theme, the chemicals theme, we've got another question on PCBL Chemicals. Jay from Mumbai is writing in. He's got 1,000 odd shares at the price of 450 and wants to know a long-term view on this and wants to also know if he can add more at the current levels or not. Saurabh, I'll stick with you again for this one. PCBL Chemicals, what's the view like?
I think it is a very good large company in the carbon black segment, which finds its usage in the multiple segments in the automobile industry, in the tire industry and all. It is a good, they export to the US markets also. I think the last quarter numbers were, there was some amount of pressure. I think do not add more, but it is good to hold and wait for the June quarterly earnings and the company is guiding for the foreseeable future.
Okay, so hold is the view on PCBL Chemicals. Our next caller, Hari, is calling us from Chennai. Hari, hi, a very good morning to you. I believe you have a question on TCS.
Hi, Magma. This is Hari here. Yeah, my question is on TCS. I have like 70 at 3,845 is the average price.
Right.
I know like overall IT pack is not doing good. I don't want to sell it. Like I'm continuing to hold. My question is like, can we accumulate at this level, or we need to wait and watch how the entire the sector is going to do, or the geo factors as well. Yeah.
Okay, Hari, I got your question loud and clear. I'll take this up with Saurabh again. Saurabh, considering everything that's happened in the IT space, the earnings, etc., what's your view on TCS, and especially with something that's happened today? It's set to cut around 12,000 odd jobs amidst the demand slump that the entire sector is seeing. What's the view like?
I think the news was not taken good by the markets. But if you look at the overall industry scenario, IT industry scenario, I think there is no point in buying contrarian buying, because till now there is no signs of good higher spending or discretionary spending. How the US markets will pan out and the Europe market will pan out is another question. Till you see the signs of growth, I think there is no point of buying more. And albeit you have said that you want to hold it for the long term, then you can hold for the long term.
Got it. Okay, I do want to point out, Hari and everybody else watching, we have a special program that we lined up for you at 12 p.m. today, because if the bellwether of the sector, Tata Consultancy Services, has announced job cuts of 2% of its workforce, and more importantly, if it is in the mid-level and the senior level that these job cuts have taken place, then there are likely to be implications for the rest of the IT sector as well. It's not necessarily only a factor of the demand situation. It could also be a factor of the fact that these individuals have been on the rolls but have been benched for over a quarter, and redundancies tend to creep in as you go higher up the pecking order in the IT space, and because of the way that technology is changing so dramatically. So what do you need to know? Watch at 12. We've got a next question from Gul, who's writing in from Kerala, and he's got Punjab National Bank, or rather PNB Housing, that he's bought at levels of 1,038 for a period of 1 year. Is it advisable to add more, and if yes, at what price should he do so? So the question is to you, Ajit, on the technicals. What should he do with this? He's bought at levels of 1038.
So Alex, it's currently quoting closer to its buying price, and PNB Housing is among the top performing name within the housing finance basket of late. In fact, if you see that most of the name, they are struggling, either trading down or trading in a very tight range. On the other hand, we have seen a very sharp recovery, and it's currently hovering in a very tight range here after this recent rebound. Fresh buying, I would recommend him to wait and let this stock surpass 1150 mark, because that's the area basically where we have multiple resistances. Once we surpass this level, then we might see a next leg of the up move, which could help the stock to inch toward 1300, 1400 zone. At the same time, 950 is important to hold. So since the view is short to medium term, he can continue to maintain his position with 950 as a closing stop loss.
Got it. All right. So that's a comprehensive view on PNB Housing for you. We've got another question from the NBFC space, and Ranganathan is calling us from Bengaluru. Very good morning, Ranganathan. How can we help you today?
Good morning, sir.
Good morning. Please go ahead.
Okay, I am bought Punawala Park Sim Carpo for 445 rupees.
Right.
Short term, what is target price?
Okay. I got your question. The stock is up 7% in trade today, and there are news triggers on this. But let me go to Ajit on the short-term price trends that he sees. Does that momentum continue, and where would you place the stop loss for this particular trade?
So Alex, off late we are seeing extreme volatility in this stock, means from 480 to 410 and then again to 445. So we are very close to the short-term averages. So let's say we reclaim this 445, 446 area decisively on the closing basis today, then probably we can see the further recovery in the stock, which could help the stock to inch toward 475, 480 area. So as of now, the kind of volumes, price action that we are seeing, definitely he should stay put. Since the view is short-term and it's a highly volatile counter, 420 is the area basically on the closing basis where he should maintain as a stop loss. And on the higher side, in fact, he can wait for much higher levels once it surpasses 480 area.
Okay, so hold is the view on Punawala FinCorp that Ajit has. The next question is from Kiran, who is writing us from Hyderabad. She's got 52 odd shares bought at 4767 a piece, and wants to know if she can continue to hold or sell. She's a long-term investor is what she's saying, and sitting on profits of over 1 lakh rupees. Saurabh, I'll come to you on this one. Should she book profits right now, or continue to hold to see further steam left in the counter?
Well, valuation of the companies are high, but it is a very good company, great company in the cable segment. The management is quite confident for the foreseeable future for the next 2-3 years, and the numbers of the last quarter were also good. My sense is if you want to book some profit, I think partial profit taking can be done, but hold for the long term, rest for the whole long term.
Okay, so partial profit booking could be on the cards, but you can continue to hold from a longer term perspective. All right, our next caller, Sriram, is calling us from Chennai. Sriram, hi, a very good morning to you. How can we help you today?
Very good morning, and I'm returning to NDTV Profit question after 6 months.
I've not been there. Thanks and nice to meet you all.
We are so
My
glad that
question
you're
is,
back, Sriram.
Oh, yeah. Thanks so much. My question is, I have some shares of ICICI Bank and HDFC Bank, about 200 shares, which I bought some time back. Now I have some funds. Question is, which one should I invest, ICICI or HDFC Bank over a long-term strategy?
Okay, got your question, Sriram. I'll take this up with Saurabh again. Saurabh, your view. Should he add more of ICICI Bank or HDFC Bank?
I think out of the two, I like ICICI the most. I think the quarterly performance is great, quarter on quarter from the last so many quarters. In the case of HDFC Bank, yes, the growth is likely to resume after the merger, and there was a bit of lean period, but the stock has done quite good. Out of the two, my priority would be ICICI.
Yeah, and out of the private banks as well, bear in mind that there was net interest margin compression for most of them, but ICICI Bank has seen the least. But do bear in mind, of course, that valuations also come into play. And okay, very quick question, Saurabh, since we're on the subject of private banks, Kotak Mahindra Bank taking a bit of a beating today, and price to book is what a lot of people look at. It's trading at what? Trailing 2.7 times now, maybe, or 2.8 times. Compared with historical valuations, it's very attractive. Do you think that it can bounce back, and would you bottom fish, if at all?
Alex, you are right. I think the valuation for most of the banks, if you take HDFC Bank or ICICI for that matter, they are trading lower than their long-term averages at which they were used to trading on. I think the market is more, the investors are more likely to see the interest is where the growth is, where is the balance sheet is doing great, and how the growth profile is likely to pan out. In case of Kotak Bank, there was a good amount of disappointment because of the good compression in the net interest margin. And the bank has also highlighted about some kind of stress in segment, which is likely to continue in the next quarter also. So, in my opinion, I think it is better to avoid as of now, only because of the valuation. It is not justified to buy Kotak.
Okay, we've got our next question from Rajesh Maheshwari, is writing us from Indore. His question is about Globus Spirits. He's got 125 odd shares at an average price of 1197 and wants to know, from a shorter term outlook, what's the maximum level it can touch? Ajit, he's not defined short term for me, but let's say from a 6 months perspective, what are the charts indicating?
So Mahima, it's almost V-shaped rebound, means from 950 to 1300 levels. We are very close to that mark. And in the past two instances, from last almost 3 years, the stock failed to cross this hurdle around 1350, 1370 area. If the view is short term, I would definitely suggest to book at least partial profit around that zone, around 1340, 1350. And let this stock sustain above that mark for the next leg of the move, which could help the stock to reclaim its record highs close to around 1700 mark. So as of now, he can stay put with a trading stop loss of let's say 1210, and around 1350, he can book at least partial profit.
Ram from Pune is writing in and asking about Gujarat Ambuja exports. I'm just going to try and pull up the all-time chart for it because he has been holding since IPO and since 1994, he says. So let's just pull up how it is done, and I'm pulling up the max chart. It is up. Oh wow, okay, so I can't even talk about this in terms of a percentage because it is 28,737%. So there's no point really talking about percentage. I'm hoping that it doesn't form a very large portion of his portfolio. But do you have coverage on this, Saurabh? And if so, what should he do with it?
Not really, not in coverage, but it is largely into the food business only. And there is a lot of volatility in the business. On the valuation side, it looks like it is on the value side. So my sense is if he's holding for the such long term, I think it is better to wait. for more.
Okay, I must say Ram is smart enough. He's not given us the quantity yet to determine the price, the kind of profits that he's making. So Ram, if you're listening to this, do send us the kind of quantity that you're holding on Gujarat Ambuja Exports. And this is another counter that could benefit from UK FTA trade deal. Keep that in mind. All right, we've got our next caller. Gautam is calling us from New Delhi. Gautam, hi, a very good morning to you. How can we help you today?
Hi, very good daybreak for you. My question is very simple. It's about Finolex pipes of Finolex Industries and Finolex cables. You see, I have, my wife has 500 shares of Finolex cables, from a very old time, a long time in fact.
Okay.
And Finolex cables I have bought recently, but that's in scores, that's all. But the thing that I want to know from you is, what is the kind of management commentary about them? Because what I find is it's in a band. Finolex cables is in a band from 200 to 220 or something, and cables is between 850 to 900, 950 or something. What is the evolution? These are long-time companies. They are good names. They are established organizations.
Right.
What is the reason for their I can't see a positive volume growth in terms of you call it parameters like market share, penetration, or whatever.
Correct.
And also in terms of technology interventions in today's world.
Right. Right, Gautam, got your question. I'll take this up with Saurabh quickly. Saurabh, the point that is made is quite valid because competition is heating up in this space quite significantly, and that's probably one of the reasons why market shares and volumes are not growing up. What's your view like? Would you recommend him to continue to hold this from a longer term perspective, and what's the view like?
See, on the valuation side, if you look, it clearly looks like it is a value buy only. But if you see in the markets, these companies being so old were not able to stand tall in case of competition. The companies like KEI, Polycab, Havels have gained a lot of market share, and these companies haven't marked their presence in entire their business arena. So that is the reason I think there is a lot of gap with respect to the valuation. Those companies are trading around more than 10 times, 15 times to book value, and these companies are trading close to their book value only. See, when you are investing in the markets, you are investing for the growth, and when the growth is not visible, the market does not give valuation unless and until these companies find the way to grow and prosper. Till then, I think we will not see any kind of valuation re-rating. So yes, on the valuation, it looks like a value. But if you are looking for the growth, go for the companies who are gaining market share.
And do have a look at the cable companies that have posted numbers. Apart from Finolex, you had quite a few bumper results that came through in the first quarter. It is time now for the rapid fire segment, which, as you know, is where we throw as many questions at our experts over the course of 2 minutes. The first one is on Datamatics, and this is Ram Rao from Pune. He's asking whether to hold for a 6 to 8 month time frame. His buy price is 53.8 rupees. Ajit? No, this can't be right. 600 rupees. 600 rupees. 600 rupees. Apologies.
Right. So still, Alex, it's a fresh breakout. Stock is up. So definitely hold 840 closing basis stop loss and keep on trading stop loss on the rise.
Okay, Lodha Developers is the next counter. Seema from Jodhpur is asking this question. Wants to know if numbers were good, why is the stock down? Saurabh, is ban dips the good is a good opportunity on this counter?
I think it is a good opportunity. The management has guided for a long-term growth.
Actually,
it's a hold.
Did buy at 53.8. Congratulations to the viewer. Neeraja has got a question on SBI cards, bought at levels of 935, looking to hold or sell for a period of 3 months. Ajit?
SBI cards hold 820 stop loss, 920, 940 target area.
Okay, Tilak Nagar is the next counter. Sriram from Visakhapatnam wants to know if this is the right time to buy. Your view on the charts, Ajit?
Looks overbought. Wait for consolidation.
Okay, and the next one is on Deepak Nitrite. We've got a question saying that they've bought at levels of 2,961 rupees and holding at no profit, no loss. So should you wait for 2 months? Ajit?
Exit.
Okay, JSW Infra or Adani Ports, which is the right counter to continue to hold for the next 3 odd years? Pakshar from Bellary wants to know. Saurabh, your view?
Adani Ports.
Okay, can you buy Gujarat Pipavav right now?
Ajit, on the charts?
Gujarat Pipavav, yes, you can buy 150 on the basis, closing basis, stop loss, 175, 180 target.
Okay, very quickly, Suzlon for a period of 1 year, would you buy, Ajit?
Yes, buy.
Okay. All right, that brings us to the end of the rapid fire segment. Thank you so much, gentlemen, for taking the time, for answering all the questions you did today. And that brings us to the end of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Up next is Know Your Company. This is NDTV Profit.
That's huge. That is a biggie. It's out of
Gold Class Clear Glass. पार हो या नियर, सब कुछ दिखे क्लियर.
हेलो बोलिए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ. कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator, Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ. कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the expert.
Hello and welcome to NDTV Profit. You're watching Know Your Company. Today on KYC, we are looking at Lodha Developers. The reason why we've picked a Lodha Developers is on the back of Q1 earnings, a good set of numbers that the company has reported on a year-on-year basis, but a sequential decline that has come in here. I'm Hiral Dadia and with me is Mahima Vajrajani. But let's quickly address why Lodha Developers today. Firstly, what has led to the sequential decline that we've seen in terms of where earnings are concerned? On point number 2, the other question that we will ask the management is about the India-Pakistan war. The management has indicated that this did lead to around 2 weeks of downtick in terms of execution. So how much is the impact in terms of quantifying it if you have to look at the financials? On number 3, you're talking about the first quarter FY26 pre-sales. That number is below the guidance. So what does this mean? Will it mean that they will not be able to meet that FY26 guidance as a whole or not? On number 4, the auditors have flagged non-compliance for NCDs. Now, what is the impact? Because here, you're talking about the security deposit that they have to leave for the bondholders or the debenture holders. That is not in line with the security deed. So what happens then? And the competition that they are seeing in the Mumbai metropolitan region, you have a lot of other developers that are coming in. The strategy, what they are going to look at in terms of Bangalore and Pune also is going to be crucial. And very lastly, FY30 guidance, what are going to be the key growth levers that you should be watching out for them to meet this guidance? So that's what you're looking at in terms of where FY30 goes. But let's shift focus in terms of the key parameters that you should be looking at. Firstly, before the parameters, we look at about the company in terms of what the company is doing in trade. Firstly, as we know, Lodha established in 1980s. It's one of India's leading real estate developer. They have strong focus, if you talk about residential projects, nearly 4 decades of experience is what you're looking at. They cater mainly to luxury as well as premium, and they've rebranded itself from Macrotech Developers to Lodha Developers. And this is after the stew, that Lodha Developers had with House of Abhinandan Lodha. Moving on, apart from this, if you talk about the other details, the markets that they operate in, Mumbai around 10% market share is what they had in FY24. Their flagship, and this is their flagship and dominant market, and the largest contributor to the pre-sales. If you talk about Pune as well, that's the second market that they operate in, third largest in Pune, and they're growing fast over there. Over 11% of their gross development value is planned from the Pune market. Moving on, when you talk about Bangalore as well, they've entered Bangalore in November 2023, and recently they moved from pilot to growth phase in the Bangalore market. They're around 4% of their FY25 pre-sales comes in from Bangalore, and they're aiming for 15% market share in the medium term from the Bangalore market. So hence we've said that strategy with Pune and Bangalore is going to be crucial for Lodha Developers. Very quickly, if you talk about their split, in terms of Pune 14%, Bangalore is 7%, and largest 70% comes in from the Mumbai metropolitan region so far, Mahima.
Right, so it's interesting because almost 75, so a lot of concentration in the MMR, which is actually heating up in terms of competition. So that's an interesting question to ask the management as to how competition is shaping up. But in terms of the key offerings, of course, residential real estate is their core business. Luxury premium is something that they concentrate on only in luxury and premium housing. In terms of the overall digital infrastructure parks that they have, that's industrial, warehousing, logistics and data centers, that uses the annuity income model. So that's one of the things that they have in their basket. There is also commercial real estate, which is very small as compared to where the residential real estate stands, but still select office and retail developments mainly as a part of mixed use of projects is what comes under them. In terms of the overall facilities that are being managed by them right now, they're managing over 70,000 plus residential units. Recently also launched the Bellevue digital platform for integration of residential services as well. So that's an interesting one, and we have to ask the management as to how this is faring for them. There's also in terms of the product wise mix in terms of Lodha Developers as of FY25, the mix in terms of the revenue, around 89% of the total chunk of revenue comes from property development. Then there is sale of land and development rights, which is 9.3%, and around 3.5% annuity and lease income, which generally comes from the digital infrastructure parks. Now, in terms of the overall key projects that the company is looking at right now, there's the Palava project, which is India's largest city-scale greenfield development project, and this is located on the outskirts of Mumbai. So again, one big project that they have in the MMR region. Then this is designed for walkability, sustainability, as well as an emerging data center hub. This is something that they're aiming along with the overall project. In terms of the Upper Thane region, that's the another Upper Thane project, which is another big project on their cards, which is a large township development positioned for long-term and high margin growth. So this is something that is going to be a margin accretive project for them. And then there is one Lodha Palace, which is 100% renewable powered, grade A commercial complex, and it's one of the company's headquarters as well. So this is going to be a very interesting project to watch out for. This is everything that one needs to know about Lodha Developers so far.
Absolutely, and I think the key from here on is going to be the rating parameters that we are going to discuss right now for knowing Lodha. Firstly, you have the income statement check, operational matrix, balance sheet, cash flow. These are the top four. Moving on, we will be talking about their shareholding, their street credentials, the street coverage, as well as the outlook that the company has from here on. But let's start with the first one, which is the income statement. If you look at the revenue, EBITDA, margins, and net profit, that's the crucial aspect wherein you've seen a growth of around 14%. That's the 3-year CAGR. EBITDA has seen a growth of around 15%. Again, that's the 3-year compounded growth. Margins have been in that range of 35 to 36%. So that there you've seen some bit of stability that has come in. And the profit has grown faster than your revenue, which has seen a growth for almost around 30% on a 3-year compounded basis. So a strong number coming in on that front. Your margin trajectory, if you talk about it, that range again has been between 31.4%, which they achieved in FY23, to a high of around 36.1%, which they achieved in FY25. The first quarter of FY26, if you talk about that, the margin has been in that 28 to 29%. Now, whether they are able to cover up this gap in the next 3 quarters is the question that we need to check with the management, because if they are not able to do that, there's a potential for them to miss that 31 to 36% kind of a band trajectory as well. Moving on, if you see in terms of what has not worked, sequentially they've seen a degrowth in terms of revenue, EBITDA, margins and profitability, and I think that's what the street is reacting negatively to, because year-on-year basis it's a strong number that the company has reported. Revenues have seen a growth of around 20 to 22%, margins have expanded and come in at around 28.2%, and your net profits have seen a jump of almost 42%. So year-on-year, good growth. Sequentially, there has been a downtick, but I think the management will be here to answer that question. But overall, a thumbs up.
Right. So, it's the same has happened with key operational metrics as well. And that is because that is one of the reasons as to why the revenue is also impacted in terms of where the year-on-year number stands. The guidance was to achieve a growth of 20% in terms of pre-sales for FY26 as a whole, but this quarter the overall pre-sales growth is around 10%. So the key question would be whether they'll be able to achieve the overall 20% guidance by FY26 or not. In terms of the yearly change in terms of how operational metrics have fared, pre-sales has seen a good growth of 21%, collections also a good growth of 29%, collections in terms of quarterly performance, the YY growth has been around 7%, so slightly lower in terms of where the quarterly performance stands, but overall a good growth when it comes to over yearly performance as compared to FY24 where FY25 stands. So because the overall yearly performance has been good, and generally real estate companies need to be seen from a yearly basis, we've given it a thumbs up when it comes to the key operational metrics.
Right, so that's with the operational matrix, but let's quickly look at the balance sheet. It's very interesting to see how the balance sheet of this developer is panning out, because you've seen an expansion in terms of the equity. From a 480 crores, it's been stable over the last 2 years, that's FY24 and 25 in that 1,000 crore range. Other equity has also seen a sharp improvement. The book value has also nearly seen a growth of around 80% if you have to compare from FY23 to FY25. The borrowings, what's interesting, has nearly reduced from 9,050 odd crores in FY23. It's come down to almost 7,080 crores in FY25. So that's one of the positives, because of which if you see their debt to equity as well, that's been in the pretty manageable range what the company has guided for. The only thing which is dwindling is in terms of the cash and bank balance. If you have to compare to FY24, their FY25 cash and bank has come down to 2,320 odd crores versus a 2,950 odd crores. But if you have to compare it to FY23, it has improved. So on an overall basis, the balance sheet is still looking strong, and that's the reason a thumbs up on this one.
Right. Moving on to the cash flow statement, it's an interesting one, because I mean, if you see the overall picture of operations from cash flow, that has been on a declining trend from a 2,750 crores in FY23 to a 1,500 odd crores in FY25. So that's been on a declining trend. Overall, when we take a look at the percentage of operating cash flow to EBITDA as well, that's been on a declining trend and almost come down from 93 odd % to 32 odd %. So that's almost 1/3 of what it was doing in FY23, and because of this reason overall, plus net cash flow has gone to negative, but that's also because they've repaid borrowings in FY25, and that's the reason as to why the net cash flow position in FY25 has gone into that negative territory. But overall, considering the declining operating cash flows plus the cash flow to EBITDA, operating cash flow to EBITDA ratio declining quite sharply, we've given it a thumbs down when it comes to the cash flow statement.
So that's the cash flow. Let's look at the shareholding. If you see in terms of where the shareholding pattern goes, the promoters have reduced stake from 75% to 71.9%. FIs, though, have been increasing stake from a 19% to a 24.6% in the last 3 years. What's interesting is you have your DIIs, which is your mutual funds, have been reducing stake to an extent, not a major one, but from a 3.7% to a 2.4%. The only concern is the public free float. It's pretty small, 2.3%. It's come down to around 1% right now. So the liquidity with regards to Lodha is not very strong, but it does not really give you a bad picture. Taking into consideration your FIs have been increasing as well. Promoters are not selling to that extent, and that's the reason a pretty neutral looking shareholding pattern is what we're looking at right now.
Right, so in terms of street cred, the stock has not done much in the past 1 odd year. It's down around 9 or to 10 odd % in the past 1 year, and 5 years also. It's not been that sort of multi-bagger that we've seen in a lot of counters. It's up around it's given returns of around 366 odd %. So we're taking a conservative approach here and giving it a thumbs down when it comes to street cred.
So that's the street credentials that you're looking at. And very lastly, if you see in terms of street credentials as well, the coverage, I mean, you have 13 buy ratings, 4 hold and just 1 sell. If you see the upside, it's almost 21% on a consensus basis from the current market price, so a strong number coming in. So a pretty neutral coverage that we're picking up there.
It's a strong outlook, that's the last parameter, because companies remained on track. FY26 pre-sales guidance of around 21,000 odd crores. It's added 5 new projects with a gross development value of 22,700 odd crores. Has achieved 90% of FY26 guidance already of 25,000 rupees, 25,000 crores. Expects collections to be stronger in second half of FY25 is something that the management has guided. The new project additions to reach 250 by FY26 is something that the management has guided for. And an interesting one that I observed in their presentation was the 2020 action plan by 2030. That's focused to deliver 20% pre-sales CAGR, as well as to deliver 20% ROE with net debt ceiling of around 0.5 debt to equity is something that the management has guided for. So this is the overall outlook that the management has given so far.
Absolutely. So now let's look at the final performance rating that NDTV Profit has given a Lodha. Income statement, operational matrix, balance sheet, a thumbs up. Cash flow, as Mahima explained, is a thumbs down. Shareholding, street coverage is an absolute neutral. So your credentials are a down and your outlook again is a thumbs up. So on an overall basis, you're looking at a rating of 5 out of the 8 parameters that NDTV Profit has looked at. But let's quickly address this with the management. We have Mr. Sushil Kumar Modi, Executive Director Finance at Lodha Group, joining in. Sushil, good morning and welcome to the show, and a pleasure as always to speak to you at NDTV Profit. On a year-on-year basis, a very strong set of numbers that have been reported by Lodha. I think what the street has taken negatively, at least at the beginning of the trading session today, is the sequential decline. If you could help our viewers understand as to what has led to the sequential decline and how big has the Indo-Pak war had in terms of execution, if you could quantify that for us.
Good morning, Mahima. Good morning. So nice to be there on the channel today to discuss the quarterly results and the performance. So, to your point, just to first understand our industry. In our industry, generally, the performance of the second half is significantly superior than the first half, as in our country, the festivities coincides across pan-India into the second half. And housing is being such a phenomenal asset class and a wealth that is being perceived. People end up in consummating their purchases more and more coinciding with those festivities. So to that extent, nothing different. In fact, this quarter is the best ever quarter in terms of the Q1 that we have registered, and pretty much on track to deliver 40 to 45% of our yearly guidance in first half, just like any other year, and the rest 55 to 60% to come into the second half. So there is nothing perhaps that is unusual that one would notice when you see the performance, be it the pre-sales, be it the collection or our business development. In any case, you would have picked up the business development side. We ended up in doing 22,700 crore, which is 90% of our yearly guidance in the very first quarter itself, which enables us to kind of enhance our launch pipeline further, which at the beginning of the financial year, we had indicated to be around 18,000 crore. But for the fact that we have ended up in doing such a large scale business development in Q1, the total launches for the year as a whole has got enhanced to 25,000 crore from 18,000 crore, of which 8,000 crore we have already launched in Q1, and the rest, another 17,000 crore, is to come in the next 9 months. So thereby the launch pipeline is very, very robust.
So Sushil, we'll talk about the launch pipeline, but my key question over here is, you did mention that the 2 weeks of uncertainty due to the India-Pakistan war did have an impact. Otherwise, you would have performed much better. If you can quantify that impact for us as to how much is that going to be? And secondly, will it have any impact on your full year FY26 guidance? Because the pre-sales growth, yes, it's 10% to around 4,450 crores, which is below the company's 20% full year guidance. So is there any possibility that the 21,000 crore target could potentially be missed because of this impact?
So you said right. So to the extent our business being so granular, wherein we look for our sales week on week basis, and in fact our business perhaps amongst in the industry is one which is less and less to talk about the launches, but more and more to talk about the sustenance sale that we achieve week on week. Our sustenance sales up till last year was more like 250 odd crore on a weekly basis, which we have now enhanced and getting to the trajectory of more like achieving 300 crore. So if you see that, then to the extent we had some bit of a geopolitical tension within the country in last quarter that we are all aware of, automatically to say that the consumers ability to move around or think about consummating their purchases has got depleted then in those 2 weeks, and to that extent the sales of those 2 weeks did got impacted. So isn't it fair to say that perhaps we could have achieved another 3-4% higher sales, and thereby instead of growth of 10% potentially would have been more like 13-14% growth YOY? Yes, definitely it would have been possible, but nonetheless, knowing pretty well that the 9 months are still ahead of us and the launch pipeline being so strong, the interest rate trajectory having gone down significantly. As we know, RBI has reduced the interest rate by around 150 bips in last 6 months.
Right.
And the income tax benefit also kicked in this year by the government.
Correct.
So all of those combined creates a phenomenal environment for a brand like us to deliver and capture the demand that is humongous sitting into the country. So
Right.
we remain absolutely confident of achieving 21,000 crore sales guidance that we have given for the year.
Okay. Mr. Modi, just want to get your sense on competition. Just give us a sense of what's the kind of market share right now that you garner in the MMR region, and considering the entire space of MMR region is heating up when it comes to competition, especially in the luxury and premium space, what's the outlook like? Do you see some threat when it comes to competition?
Frankly, we need to understand the industry a bit differently. The fact of the matter is this industry is going for a robust consolidation. The consumer, having burned their fingers big time in pre-COVID era, is no more buying from any tier 2 developers, and which is what has created a phenomenal opportunity for the tier 1 top-notch players to kind of come in and take that market share and consolidate this industry, which obviously is healthy. So much so that pre-COVID, perhaps we were more talking about just touching double-digit number in terms of the consolidation, which has now, at the end of the last year has come to around 30% handle. So which is very healthy, and we are moving towards furthermore consolidating. So to that extent, some of the players, and in fact, that's a bit of a crisscross, right? The players from south or north coming to Mumbai, or Mumbai players going to reach south or or north, including us. We have gone, as you know, is into the south in Bangalore and doing phenomenal. In fact, we have now entered into the growth phase in Bangalore, where we are aiming for doubling our sales in the current year in Bangalore to achieve more than 2,000 crore per head. So to that extent, it is healthy. It kind of it takes away the market share and make the so-called tier 3 and tier 4 players out of the system, and creates a healthy pipeline, thereby the supply and demand all being sanitized. So that's healthy.
Okay, Sushil, in terms of the NCDs, auditors have put out a red flag that the security that is needed to cover the NCDs has not been enough this time around. What would you have to say on that?
So you have few questions. So to start with, in terms of end of the decade, our guidance of achieving 50,000 crore sales, which is nothing but achieving 20% CAGR growth year on year. And to that extent, we remain confident because we have set the stage for ourselves to be only looking for 20% growth, not much, not higher than that, though the opportunity perhaps exists, and which also will come as a combination of potentially 5, 6, 7% from a price growth year on year, ensuring that the prices remains affordable and robust in the ecosystem, enabling the consummation of the purchases from the consumer side. That allows us to have only seeking more like 13 to 15% of a volume growth. And now entering into the Bangalore and potentially getting into the NCR in next year, that set the stage for ourselves to be so much so that margin of safety that we have created for us to deliver 50,000 crore sales is more like 40%, because taking into account our market share target, which is more like 20% for Mumbai, and any new city that we get in is more like 15%, we have an opportunity to actually deliver 70,000 crore of sales by the end of the decade. But we are only aiming for 50, which means we have the margin of safety of around 40%. So that kind of makes the business far more robust and granular. And as I said, our sustenance sales capability to deliver week on week ensures that we are in any case no more so much dependent on launches. If you look at overall environment where the interest rate trajectory in the country is so low, the inflation is all in control, that is the effective setup that this industry needs. and the fact that the home ownership in the country of an organized housing in any case is more like 22-25%. This is perfect set to kind of grow with the economy growing anywhere around 6-7%.
So Sushil, all of that said and done, what about the auditor report which is stating the security cover available for debenture holders against the outstanding listed entities is not in line with the debenture trust deed? What would this mean and where is the discrepancy?
Frankly speaking, that is our strength, right? Because we have got the AA rating from all the rating agencies, starting from CRISIL to ICRA to India rating. That suggests that now the lending ecosystem, be it banking ecosystem or a capital market, in fact, now NCD, when you talk, that means it is getting into the capital market, which we have commenced now to diversify our debt pool of capital that we want to be keeping, which in any case is very conservative. So that doesn't need that much amount of security, which in the erstwhile period, perhaps, a lending fraternity would have been looking or expecting from Lodha. So that's kind of is a strength of ours, and which is what you see in terms of our cost of fund, which has gone down by 40 bips in this quarter. In last 3 years, every quarter our cost of fund has continuously going down. In fact, our newer debt is now being raised below 8%, while the exiting cost of overall debt weighted average was more like 8.2. So that means you are going to further see continuously every quarter our cost of debt continuously going down. Just to kind of set few things right, because I saw you indicated our margins are going down. That's not the case. Our EBITDA margin adjusted with the interest, because in our P&L cost of goods sold, there is an interest element also because of the accounting issue that is there. If you strip that out, then actually our EBITDA margin for the quarter was around 34%, which is pretty much in the band of the 31 to 36 that you were mentioning.
Correct. So 31 to 36% is the band, and it's in line with that if you have to remove and change the accounting method. But thank you, Sushil, so much for joining us on the show and sharing the views, and that gives a clarification that in terms of the security cover for the NCDs, that's not an issue, and that's a positive that the management is looking at. But completely out of time, but that it's a wrap on this edition of Know Your Company. Please stay tuned to NDTV Profit for more. In fact, the next breaking is TCS cutting jobs, a special show by Tamanna Inamdar on NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
When India's most trusted IT giant slashes 12,000 jobs, it's not just a concern limited to a single company, but perhaps sounds the warning bell for the entire IT industry and policymakers at large. Tata Consultancy Services, India's flagship tech titan with over 6 lakh employees globally, has decided to lay off 12,000 of its employees. That's about 2% of its workforce. It is its biggest ever job cut in history. Among those affected will be including mid and senior level management roles. Now, without explicitly blaming artificial intelligence for the job cuts, TCS has said the decision was part of a broader plan to become quote-unquote future ready, involving realignment of the workforce, AI deployment at scale, and new investments in next-gen technologies and markets. And if you look at some of TCS's recent moves, it all comes together. This is clearly not an isolated incident. Points perhaps to larger troubles that have brewing for a while. In the Q1 earnings con call, for example, TCS announced that it will delay wage hikes due to global uncertainties. Earlier in Feb, it reduced the quarterly variable pay for senior employees. It also tightened its bench policy, which now mandates at least 225 days of billing every year for employees, with the permitted bench time being reduced to a maximum of 35 days. The company was also under fire from the Labour Ministry for delaying the onboarding of 600 lateral hires. Now, for an industry that was once the beacon of job security, upward growth and mobility, this is truly a rude awakening and raises serious questions, because it's not just about TCS. Is this a transition to AI that we're seeing playing out? Will we see mass firings in other top IT companies as well? Are we going to hear from other bellwethers next? Is the firing of mid and senior level roles indicative of cost saving, or something much more? And have Indian IT companies failed to reskill in time for an AI shift? Were these 12,000 people who will be identified and laid off over a year offered the opportunities to upskill if that was what was required? Have large Indian IT companies underinvested in the AI transition? These are some of the questions that we'll be exploring in this show. Kamal Karnat joins me now. He's co-founder of Xfino. Ramani Dati, CFO of Teamly Services, with me on the show. I'm speaking with Harpreet Saluja, Advocate, Bombay High Court and President of NITES. That's Nascent Information Technology Employees Senate. They've put out a statement also condemning what we've seen. Ashank Desai joins us, Chairman of Mastech and a veteran of the IT industry, really. Mr. Desai, I'm going to start with you just to get your sense of what is happening, how you see TCS's decision. Is it a one-off? Is it cost-cutting? Is this just a start of a tactic shift across the industry?
Tamanna, it's great to see you.
Likewise,
after a long to look at IT industry over last 30-40 years, which is where I come from. And some of the inflection points that we have come across are not less. Just after Y2K, when this whole dot-com bust came about, there was this issue of slowdown and job cuts and so on. Then came 2008-9 financial meltdown. We saw an issue there. Then came, of course, COVID, and first reaction was about job cuts and so on. So I think one has to look at the context, is what I would first say that. So I think ascribing everything to AI may not be a fair answer to all this. The issues that IT industry is facing are not just AI. AI, of course, is impacting us, but it is also about the slowdown that are happening because of tariff and related issues in US and some uncertainties globally. So I think industry is trying to realign itself to the coming era of AI plus uncertainties in demand and so on, which have nothing to do with AI, as I said again, and then making those calls. So I think, and IT industry, as I said to you earlier, have passed through some of these three and come out well out.
No, that's
so I am coming from optimism that yeah, this will happen, and we will come out very successfully out like all other challenges we had.
So, Mr. Desai, I'm sure you're feeling optimistic as someone from the industry. There are a lot of employees right now who don't know if their number is up, who are definitely not feeling optimistic. There are various ways that we need to look at this, and one very important way to look at it is how the IT services industry and the high quality jobs they offer is something aspirational for middle class India. It also leads to an economic virtuous cycle. These are the people who are buying those expensive apartments and paying those EMIs and boosting that kind of consumption in the industry as well. So there's more to this than just what the IT industry is going through. I want to come to Ramani on this, Ramani Dati, and how you see this panning out in terms of jobs. This is not at the lower end. This is mid and senior level. If I add to this, Ms. Dati, on what is happening with beginner salaries in companies like TCS and others, those have not moved over the last decade or so.
Hi, Tamanna. Yes, definitely we are seeing a big shift, especially on the IT services side, because to some extent, IT services also haven't invested in upskilling their employees or even in reinventing themselves and moving up the value chain. So while they have right now come under cost pressure and other challenges with respect to decline in the overall discretionary IT spending and global headwinds, apart from that, during COVID years, many of the IT services also have expanded their overall capacities. Some excess capacities also have been built. To some extent, that correction has already happened over the last 2 years. But the ones that we are seeing right now is definitely a huge shift. And what we are noticing on the ground is that many non-IT companies are setting up their own internal IT teams. Earlier, they used to outsource a large part of their transformation projects and IT development projects to these IT services companies. But now many of the large organizations are preferring to set up their own internal IT capacity centers. So because of that, even like at Teamly's, in the number of hirings that we are doing right now, majority of the IT hirings that we are doing right now are for the non-IT companies. So it's not a complete bad news for the skilled IT employees, because the GCC hirings are good. and senior level, mid-level IT hirings in non-tech companies are good.
But ma'am, will these GCC hirings absorb mid and senior level? They seem to be stuck in a dead end over there. Is there space for the manager level?
No, definitely it can't absorb and completely offset the numbers that we are losing on the IT services side. Definitely no, because the volume of hiring that happens in GCC and non-IT is relatively much smaller compared to the IT services hiring. But having said that, for high-skilled jobs and which are the niche technologies, there is definitely demand in GCCs and non-IT sector. If employees can upskill themselves and definitely on these niche skill set, there is a scope.
You know, Kamal, let me come to you on this and how you see this whole situation. TCS in its statement, and we'll pull up bits of that statement, saying that, you know, they're going to offer all kinds of support to the employees, etc. This is part of themselves being future ready. Do you see this as just a start when it comes to bellwether large IT companies? Because this is the biggest one. And if this is about protecting margins, then others will follow suit.
Tamana, there's a bit of an inevitability around what's happening around us. If you look at the last 3 years per se, the clear tectonic shift has been the number of net additions, global capability centers in India have added. And I think clearly the IT services companies have missed that bus. If you look at the number of people, global capability centers added in terms of employees over the last 3 years, between them and the big four, the consulting companies also are in a way lone staffing companies. So they have sort of become competitors to IT services companies. So the last 3 years, the IT services companies added a net number of about 3.5 lakh people, whereas GCCs and consulting companies put together added close to about 5 lakh employees. So collectively, if you see, the IT services companies moved from what you can call as a base of 22 lakh to 25 lakh, number of employees in this time, whereas the GCCs and consulting moved from 16 lakh to 21 lakh. So I think clearly there is a bus that IT services companies have missed by not focusing enough on GCCs. And you can see that they've made a slew of announcements about, exclusive heads they've appointed to focus on GCCs. So if you look at the number of people employed by GCCs today, I could say that almost 50% of them could have been employees that, IT services companies could have got. So that's one. Two, if you look at the global scenario, the global product companies, the FANG, as we used to famously call them, the Metas, the Apple, the Amazons, the Microsofts, the Netflix of the world, and the Googles, they were one of the largest customers for the IT services companies. If you look at last two and a half years, they have cut down almost 1 lakh jobs in US. So in a way, that demand also has cut down for the IT services companies. Third, definitely there is a demand issue, tariffs, the wars, all put together has sort of slowed down. And, these companies have been talking about discretionary spending coming down. And clearly you cannot forget the threat of AI, which is looming. Yeah. Though you clearly see the attrition refilling numbers, though it still shows that linearity is still at play and they've not really cut down too many numbers. But if you look at the first 4 things that I said, global capability centers, the consulting companies eating their pie, the product companies, the macroeconomic indicators, and AI put together, clearly is putting the pressure on the IT services companies. And like I said, there's a bit of an inevitability that we have to see this situation today.
So I don't know if it's a like for like in terms of the numbers. Yes, TCS in this quarter has said that they will have 40,000 people that they will add on in FY26. But then if you're letting go of mid-level managers, what happens? Just for an additional point here, when we're speaking to experts today, they're saying there was a time when managers in large companies like this would handle 5 to 7 people in their teams. Now a manager can handle 60 people, 50 to 60 people in a team. So your numbers are going to come down. My question is this really something to blame on TCS? Because Harpreet Saluja, I'm coming to you on this and I'm reading out the statement that you put out in which you are saying that this raises ethical and legal questions. At the end of the day, Mr. Saluja, this is a private company. This has a responsibility to shareholders, to its board, and its intent is to make profits. They are within their legal rights to cut jobs if they need to.
See, Tamanna, though it is a private limited company, I do understand, but the laws and labor laws are particularly applicable to private organizations also. They currently falls under the ambit of Industrial Dispute Act and the Shops and Establishment Act also. Particularly, every TCS office across every district might have registration and license under the Shops and Establishment Act from particular Labor Commissioner office. So coming to the legal perspective, yes, the laws are applicable to them. The retrenchment, if these lays off, if the lays off are done without the prior permission of the government, whether it is a private company or a government organization, they need to take a permission under this act from the appropriate labor commissioner office and authorities before initializing these layoffs. Once they permit the layoffs, then the company can go ahead and do the retrenchment. Coming to the human perspective of these, it is just not 12,000 is just not a number on Excel sheet or a spreadsheet. These are 12,000 jobs and 12,000 employees who are human capital to this organization. And if we are particularly talking about the mid and senior level management, these people have spent approximately 5 to 10 years or more than 10 years tenure in this organization. They have given their blood and sweat. They have given the best possible years of their lives to this organization. And what the organization is giving back to them on a Sunday afternoon, you are just sending one email to the employees that we are trying to get future ready and we are just laying you off.
Mr. Saluja, this is not an email to employees. They have not started the process and identifying people.
No, they have sent an email yesterday on 27th of July.
Okay.
It is on employees portal. I have gone through that and I can share it with you as well.
So okay, so please share it. But Mr. Saluja, have employees individually started getting notices from TCS? And
no, they are saying that it is a spread over for financial year 25-26, but they have already started the process. They have put people on bench and they are pressurizing the employees they're forcing them to resign just to mitigate this retrenchment section from the Industrial Dispute Act. They are pressurizing the employees to resign on their own. They have, this is an unethical and illegal practice that we are setting up people on 35 days notice period, that within this 35 period, if you are not able to come out of the bench and if you are not able to find out the appropriate projects, then you will be, terminated from the job.
Okay.
And this is highly unethical. And one point I would like to make clear, see, Tata, just not talking about Tata Consultancy Services, the whole Tata group is a very big conglomerate. So, for every Tata company like Tata Steel or any other Tata organization, there is a separate IT department. So for these 12,000 people, why there is no opportunity of redeployment given to other organizations within the Tata group only?
Mr. Saluja, but this is not a government organization that they have to, redeploy people. They have a choice not to. I think what we're talking about is, and let's be very clear, we are not saying that TCS is not well within its rights. In fact, maybe a lot of IT analysts we talk to are saying this is great for those who hold the stock, because this means the balance sheet will be healthier. But there's a very real human cost as well. I'm trying to understand from the jobs purview. And let me come back to you, Ms. Dati, and a reaction, if you can, give to some of the points that Mr. Saluja made. The way this has been done, do you think there's a requirement to understand if there were enough attempts at reskilling? Because clearly, a company of the size of TCS will have to continue to hire people with talent. We've heard that again and again. Specific talent will be required. Should there not be an attempt at least to reskill those who are existing within the organization and see if they make the cut?
So Tamanna, to our understanding, definitely attempts have been made to upskill their existing employee base. Otherwise, this number would be much larger. So right now we are only talking about 10 to 12,000 numbers. So if not for the internal L&D programs conducted by these large IT services, the number can be much larger. Also, I want to highlight the fact that almost after 6 to 7 quarters in a row, this is the first quarter where we are seeing green shoots in terms of new hirings being done for IT services companies. So this includes TCS, Wipro, and other large IT services companies. So that means they also have started hiring new talent, definitely at mid and senior, not much at senior level, but definitely at entry and mid level. And to accommodate this cost, maybe they have to take some amount of restructuring in existing base. I completely understand the implications that it will have on the employee side, but in terms of organization, to some extent, they have made efforts in upskilling their talent base, and now they also have started hiring new employees.
In terms of the demand that you're seeing for talent within IT companies, has the requirement changed, Ms. Dati? Has it changed? What does this mean for those who are right now preparing themselves for these jobs?
No, in terms of hiring, the numbers are much lower what it used to be 2 years before this overall IT headwinds. The numbers are still very small, but it's a good recovery because, as I said, almost after 6-7 quarters, we have started seeing some green shoots. And in terms of skill set, right now, they're largely at higher end skill set, and mainly areas like cloud security, AI, ML related jobs, and niche technologies, new age technologies is where we are seeing jobs. The traditional coding and DevOps, we are not seeing that many new open positions at this stage.
So then my question to you, Kamal, is what happens to all of those coders who are training out there? How does this work out? And my question there for Kamal Karant, how does this work out? And going forward in absolute terms, will companies just need much fewer people to do the same work in terms of IT companies?
Maybe the indicator of most of the companies that we speak to is that we might need lesser workers going forward. But when you look at the open jobs, Tamanna, out there, we're looking at a steady number of IT open jobs. And specifically, if you look at the last 6 months, we have seen a kind of a stagnation of open jobs. In fact, what used to be almost 122,000 tech jobs that was open in, let's say, in Jan, the June numbers are at about 1 lakh numbers. So you can clearly see that, it is sort of coming down. So that's one part of it. But you still, on the positive side, if you see, you can still say there are 1 lakh open jobs in the tech sector. 65% of them are from IT services companies. So I think if you look at the overall job openings out there, clearly there is a space for people who are getting, let's say, retrenched for an opening out there. But there again, if you look at the mid to senior level, the IT services industry, especially the top 6, if you look at the top 6 of, let's say, the Infi, TCS, LTI, TechM, and HCL kind of companies, collectively have a very large number of people who are above 15 years experience and above. Now, just looking at the numbers as you're speaking, so the 10 years and above numbers are in the range of almost 5 to 6 lakh people. So there is a fair number of people whom you can say are experienced and mid to senior level, and that could be an area of concern. And that many jobs commensurate to their experience and maybe skill set may not be available in the market, and that could be a concern. As far as people who are younger, the number of job openings for them, between the 4 to 10 years experience range is still higher in the market. It's a challenge for freshers, people who are studying computer science, especially, if you look at 2.5 lakh engineers are passing out with computer science qualification out of the 8 lakh engineers who are passing out. So there is a bit of a worry because the IT industry last year absorbed about 1 lakh of freshers. Looks like the numbers could be a little less than last year. Yes, a bit of a worry if you ask me.
And what are the fees these people are paying to get those qualifications? Those computer science courses are not closing overnight. They're going on churning out more engineers who may not be required in that large a number. Mr. Ashank Desai, you started by striking an optimistic note on what happens to the industry. What happens to the workforce of this industry, the lifeblood of this industry? I think you're on mute, sir.
I'm sorry. Let me answer you the question about keeping employee ready for tomorrow's technology. All of us have trained 70-80% of our people in AI, cyber security, and cloud areas. So it is not that we have not made everybody ready. We spend tremendous amount of time, money, and effort as an industry compared to any other industry in terms of training people, because that's the cost of doing business in any case. And that happens. When that happens, please also realize that there are certain persons who may not be able to cope up with some of these changes. So one has to look at the overall workforce that we have and how many people can cope with the changes, etc., etc. So that's one point. Coming back to your question on the scales, see, I think this AI issue has an impact is one part. Do you want to discuss that, or do you want to discuss the uncertainty because of demand issues in the economy?
I want to discuss the people. AI issue is now blue sky, right? You have maybe some people saying it's not AI, maybe it's headwinds, maybe it's Trump's fault, maybe it's tariffs. What about the people, the lifeblood? You are churning out people for jobs that are no longer existing or do not matter as much to the largest company in this space. Isn't that a red flag, an alarm bell, Mr. Desai?
See, again, as I said, I take a very long-term view of all of this.
Okay.
Last 30 years, 40 years, there has been a constant churn of skills required in the industry. I come from area where we were doing punch card for doing programming. I'll not go there. But the point I'm making is this change in the skills required is nothing new. We continuously train people all the time. There are some people who do not get trained so fast, they remain behind, but they continue in the industry or they may go to some other industry, so on and so forth. So I'm saying what is happening is not something catastrophically new. Yes, we have to be cautiously looking at the impact of all these changes, and we are looking at it, A, by training our people so that they are ready for tomorrow. 2, restructuring ourselves to meet the structure of our whole industry so that we meet the customer demand. Please remember, we serve all 500 Fortune companies as an industry, FTSE industry, so on and so forth. We need to meet their demands.
No, of course. Of course, you need to meet customer demands, shareholders, run the company completely. Just a quick word from Mr. Saluja. You've heard all of the commentary. This is changing times. It's going to happen, Mr. Saluja. There's no point blaming the company for what is inevitable.
There is a strict need of stringent labor laws, I believe, because if we are talking about numbers and profitability of the organization, I do personally understand that they have opened a company to make profits only. But the thing over here is, if you are making profits and in May only, if your CEO salary is going and it is getting raised by 4.8% or close to 5%, you're taking 26 crores of rupees per year as your remuneration, then why, when it comes to increasing the profits, the employees in the mid-level management or the junior level, they are taking the hit of this? Why only the layoff is the only possible solution that is visible to the organizations when it comes to cost cutting? See, we need to have a human perspective also to it. We need to add some sort of human perspective that these are the employees who build the organizations. These are the employees who stand by the organization.
There is no doubt a huge human perspective. But maybe this is just a starting of a problem which needs a comprehensive solution. Because,
absolutely.
Because like I said, this has a ripple effect, right? These are the jobs that provide salaries to boost an economy. And then if that dries up, then where are we going from here? I'm completely out of time. I will have to thank all of you for joining us on this special edition. We'll continue to track the story very closely right here on NDTV Profit. There's a stock impact. It means a lot to investors, workers, companies. Are mid-cap IT companies taking the boost ahead, and have they planned better? All of these questions will come up. Another question is also that these companies, the large IT companies, are very cash rich. They provide great dividends to their shareholders. Should some of that have been invested in better AI preparation? All of these questions will linger for many, many days to come. That's all the time we have. We'll take a very short break. We're back with all the latest business news on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IPOs CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IPOs CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and
welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Bazaar. I'm here, Lodha, and with me is Varsha. Varsha, good afternoon. An interesting day of trade because clearly, if you see in terms of markets as well, you have Nifty 50, which probably in the beginning of the session was showing a downtick of around 20 points in terms of implied open. It did open lower and currently as well seeing downtake of around 0.2%. So 50-point downtick coming in terms of Nifty 50, and we're trading below that 74,800 mark, 24,800 mark, I beg your pardon. From the day's highest levels as well, we've seen that downtick that has come in. So Monday blues to continue for the markets. Let's quickly look at Bank Nifty because that's where the pressure is going to be, taking into consideration how Kotak Mahindra Bank has reported 0.3% lower there. Let's look at the private bank index and the PSU bank index as well. And then we will look at individual sectors and stocks. If you see the private bank index, major cuts there, 1.2% is the kind of downtick that you're seeing there. PSU Bank Index, though, is slightly more resilient as compared to the private banking index in trade today. Overall, let's look at the sectoral picture and see what sectors are actually leading and where the pressure is. Pharma is the only one which is trading in the positive. FMCG seeing some gains of around 0.4%. Oil and gas up around 0.3%. But apart from that, real estate is the one which is taking a major beating in trade today, followed by India defense as well, media, metals, IT, all of them trading under pressure. Let's look at the heat map in terms of individual stocks on Nifty 50, because that's going to be an interesting aspect to consider. If you see in terms of individual stocks, what's losing out? Kotak Mahindra Bank, Wipro. You have BEL, which is ahead of numbers, trading under pressure. Bharti Airtel, Titan, a few of the other names. What's actually gaining is a Shriram Finance after earnings, almost a 3% up move. Cipla, Hero Moto, Grasim, Tata Communication, Consumers, I beg your pardon, Asian Paints, SBI Life, Bajaj Finserv, JFS are a few of the other names which are seeing some strong moves. What's interesting is even in terms of broader markets, a lot of stock-specific action. And there is a lot of action in the small cap index taking into consideration the ESM rule changes that have happened. So good moves there.
Yes, absolutely. And for ESM, Hiral, a lot of action is actually happening when it comes to SME market. But let's shift our focus to mid-cap 150. Let's see what that counter is doing. Is down, 0.17%, mirroring the benchmark index. A lot of stocks are buzzing on the back of Q1 results as well. You have Poonawalla FinCorp, which is buzzing now as, they aim for 40% growth in their asset book, which will be led by expansion in the product portfolio, including gold loans. You have Emphasis, you have Paytm, Coforge and Global Health, which are buzzing when it comes to, mid-cap 150. Well, on the loser side, though, you have SBI Cards. Now it's under pressure due to the response to its Q1 quarterly results. You have SAIL, you have Greenwell and Prestige, which are, under pressure. Let's see what Nifty Small Cap 250 is doing. Is down almost 0.46%, and a lot of stocks are in focus on the back of Q1 earnings. Let's see Sterile. On the buzzing side, on the gainer side, though, you have Sterlite, wherein good Q1 results though, and it came in market hours, and the stock is buzzing. Eclerx, again good numbers. You have SBFC Finance and Intellect Design, which are buzzing on Nifty Small Cap 250. Lastly, on the losers side, though, you have Home First, you have CDSL, which is under pressure. CDSL, you have flat revenue with sharp deterioration when it comes to margins. You even have EIL and IEX, which are under pressure. IEX on the back of brokerage from Jefferies, which has projected a downside, cutting down the target price. Even Brigade Enterprises is under pressure. So Hiral, as you were saying, a lot of stocks are under pressure when it comes to mid-cap and small-cap 250 on the back of Q1 numbers.
Absolutely, and I think the moves are much larger as compared to individual stocks in the broader markets as compared to the benchmarks. But let's shift focus and talk about IPOs. A total of 14 new issues are opening this week, with the total capital raise amounting to more than 7,000 crore rupees. Mahima is here to tell us more about the money being raised, how many listings are there, how many IPOs are opening, and what should be on our radar. Mahima, over to you.
Right, so Hiral, as you rightly mentioned, it's an action-packed week for the primary markets for sure this week. 14 new IPOs will, open for their offerings this particular week, and out of which 4 of them are main board IPOs, and 10 IPOs in the SME space will also open their offerings this particular week. In terms of the ongoing IPOs also that have been carried forward from the past week, there is Shanti Gold in the main board space that will close on 29 July, that is tomorrow. And in the SME space, there is Cellorap as well as Shree Refrigerations and Patel Chemical Specialities, which will close tomorrow for their IPO offerings. Now, in terms of the listings this week, there are 11 companies that are set to list this week. This also includes tentative listings. Right now, there are 4 main board companies that will list on the streets and 7 SME companies. In terms of the overall capital that's being raised, total of 7,215 odd crores is being raised via IPOs this particular week, and there's and out of this 7,200 odd crores, almost 5,700 odd crores is being raised in the main board space. In terms of the main listings in the IPO, in the main board space, a few listings that you should keep your eye on. There's NSDL, of course, the dates start from 30th July to 1st of August. The issue type is completely offer for sale when it comes to NSDL. Price band is set between 760 to 800 and lot size is around 18 odd shares. This particular company is basically the largest one of the largest depositories in India. So that is one major IPO this particular week. Then we have Lakshmi India Finance. The dates are 29th of July to 1st of August. So that's the kind of date band that the company has. It's a fresh issue and an offer for sale. It's a mix of both. The price band is between 150 to 158 and the lot size for this particular counter is 94 odd shares. The company is basically into a non-deposit taking. It's an NBFC. The last one on the list in the main board space, there is Aditya Infotech, where again the IPO dates for this particular counter are from 29th of July to 31st. The issue size, the issue type is basically a fresh issue and it's an offer for sale overall, and the price band is 640 to 675 per share and lot size is around 22 odd shares. In terms of lastly what the company does, it basically offers a range of advanced video securities and surveillance product. So these are the few IPOs to watch out for, and of course an action-packed week for the primary markets as I mentioned earlier.
Right, absolutely, Mahima. So a lot of IPOs, coming this week. So thank you so much for that. Well, moving on, Tata Sons board meet expected ahead of August 14 annual general meet. In fact, the AGM agenda includes discussion pertaining to Tata Sons IPO. Sajid joins in with more details.
Tata Sons is expected to have a board meeting in the run-up to its annual general meeting, which is on August 14. As part of the AGM, Tata Sons shareholders will approve the financials for FY25. They will also appoint Noel Tata as a director on the board of Tata Sons. Noel Tata came in as an additional director in October 2024, pending approval of shareholders at the next AGM, which is on August 14 there. Aside of that, there are two other appointments which are going to happen, which is one of Saurav Agarwal as a director and the independent director, which is Anita Marangoli George. She's also up for reappointment in the forthcoming annual general meeting. The AGM is also likely to discuss two things, which is one, the Tata Capital IPO, which is in the process of getting coming to the market, and it's expected by end of August. And the second is a pending application before the Reserve Bank of India, wherein it wanted to be declassified as a CIC or core investment company so that it can avoid an IPO. RBI is yet to respond to the application of Tata Sons, but it is seen as one of the issues which will be discussed in the forthcoming board meeting as well as at the AGM.
Right, thank you so much for that, and this is going to be a crucial event that the street will be watching out for, Sajid. But let me get in our guests. We have Avinash Gorakshakar, Director Research Profit Mart Securities, and Astha Jain, Senior Research Analyst at HAME Securities, joining in. Welcome to the show, Astha and Avinash. Astha, let me come to you first in terms of the IPOs. We're talking about 14 new issues that are opening this week, out of which you have a couple of listings also that are lined up. Your sense in terms of how the IPO week is expected to shape up, because you're talking about 7,000 odd crores.
Hi, good afternoon to all of you. See, talking about this IPO week, I think this week going to be very, very busy, and that is what's happening right now, because all these IPOs have got their own attraction. Now, if I talk about NSDL, it is like an oligopoly market. If we talk about the depository services market, and it is among between one of the two players. So again, this space is already getting so much of traction. That is what we have seen in the CDSL case also. Now, talking about the other IPOs, like one NBFC is there. If I talk about Aditya Infotech, then it is completely into a different space, which is the video surveillance industry. So now this industry is also getting strong traction. And in fact, Sri Lotus Reality, it is one of the major realitors in the Mumbai, and the kind of financial performance this company has posted, it is very attractive. So I think, yes, this week is very, very busy for the primary market. And the most important point is that most of them, that the 5 IPOs will be opening, I think from 30th. So most of them are a very good quality companies with a very good financial performance. So definitely a lot of retail investors as well as institutional and QIB investors interest will be there in the primary market for this whole week, at least for the main board IPOs, I can say.
Thank you, Astha, for that view. Well, Avinash, let me come to you on, the NSDL, which is the largest depository, and this IPO, considering, the offer for sale. How does OFS structure will influence the, valuation approach for NSDL, and what key metrics are you focusing on to assess the attractiveness when it comes to, 760 to 800 price band?
Yeah, I think good afternoon. See, my sense is NSDL is probably only the second depository after CDSL, although they are smaller in size. I think a lot of hype and expectation has been built. I think a lot of people have already, purchased in the unlisted market. But if you talk about the offer, I think the company is coming out with a fair to reasonable valuation kind of offer. And most importantly, I think you've got to view this company from a slightly medium to long term kind of angle, because in the very near term, valuations on earnings could look a little bit expensive at say 42, 44 times. But if you look at the longevity of the business and the opportunity which is there for India, more and more companies are hitting the capital market. So obviously it's an annuity kind of business for NSDL. My sense is till now, NSDL was focusing more on the institutional kind of customers. Going forward, once they are listed, I believe they would also look at the retail market, which is a very large mass-driven market. So net, I think, somebody who's looking at the next 12 to 18 months can consider applying here. Because I would say that, this could be a good portfolio addition for a good long-term kind of value accretion. Maybe in the short term, one may not get that kind of listing gain, but longer term, yes, good amount of risk reward can be possible.
Avinash's view on NSDL. Astha, a quick view on NSDL. Would you consider it a listing gain candidate or a long-term candidate, taking into consideration the kind of returns a CDSL has given investors?
So we are recommending it for a limited listing gains, but mainly for the long-term purpose. So what we are recommending to our client is that, yes, one can go for this IPO, but listing gains cannot be expected on a very, very higher side, which we used to see few months back or a year back. But yes, for the small listing gain as well as for the long-term portfolio, this IPO is looking good to us, and we are recommending it to our clients.
You have IndiCube, J&K Electronics, Brigade, all of them, and Ashanti Gold listing between the 30th and the 1st of August. Would you advise investors to book profits on listing day gains, or would you advise investors to hold any of these as that?
So regarding IndiCube, we were not very much confident about the listing gains for this IPO, and we have not recommended it to it. Regarding J&K Electronics, yes, we have strongly subscribed to that, given a subscribe rating to that IPO. So what we believe, yes, on the listing day also, one can book partial profit if this IPO will list at a hefty premium of more than 30%. But partial of the quantity should be kept in the long-term portfolio for J&K Electronics, because we find that counter to be very, very attractive, because it is into the refurbished markets and refurbished markets of laptops, desktops, premium smartphones, and the kind of financial they have posted, it looks to be very, very, very strong. So we are recommending to book profits on the listing day if it get list above 30%, but partially. Regarding other IPOs like Brigade, I have given a neutral rating, because again, we find this IPO, Brigade Hotel IPO, is to be on the little bit on the higher side. The valuations are on the higher side. So we find it expensive, and in that way, we have not recommended to apply for that IPO. And regarding IndiCube, I have already told you that we have not recommended. So regarding Shanti Gold, yes, we like this company just for the reason, the kind of financial performance it has posted and the kind of valuation at which it has bought the IPO. So for Shanti Gold also, we have recommended to subscribe for listing gain and long term. So regarding IndiCube and Brigade Hotel Ventures, we have given neutral rating, but for Shanti Gold and J&K Electronics, we recommended to subscribe and book partial profit on the listing day and keep them in the long-term portfolio.
Well, thank you for that view, Astha. Avinash, since we're speaking about the specific stocks, Lakshmi India Finance, which is an NBFC, given the current regulatory environment and competition in the NBFC sector, what are the primary risk or opportunities you identify with this company, considering the valuation, considering the peer valuation as well? So, any thought on that?
No, I think Lakshmi India Finance is a large player operating in the MSME space, and it's basically got Rajasthan as its key market. So you can compare it to a player like, say, Mass Financial Services. But I think the opportunity in MSME construction, typically funding the MSMEs is a very large opportunities in our country. Roughly, there are about 6 crore MSMEs, and I think the company has managed its asset quality quite well. Now it wants to geographically expand into new markets, and obviously, funding is very important. So hopefully, I think they've got about almost 25 to 30, financing intermediaries, including banks as well as other large NBFCs, which give them funding. So I would say that once the company gets listed and you see 1 or 2 good quarters of consistent performance, the market should definitely look at it positively. As of now, I think one can definitely take a chance to apply. Because my sense is that NBFCs which operate for the MSME space have got a good runway for growth. And I think in that aspect, Lakshmi India Finance, if somebody wants to take a long-term view, can definitely look forward to subscribing.
Astha, quick view in terms of the SME IPOs that will be in the offing this week. Any topics which you would recommend? 30 seconds.
Sheetal, as we are ourselves merchant bankers in the SME space, so for the regulatory reasons, I cannot comment on any of the SME IPOs.
No problem. Thank you so much, Astha, for joining us on the show and sharing your views with regards to where the IPOs go. Avinash, stay with us. In fact, the next focus area is J&K Bank. Let's quickly pull up that one on the screens and see what the counter is doing in trade. The bank has reported numbers. The stock is at the day's lowest levels with cuts of 2.5% coming in there. Margins have seen a decline sequentially. Deposits, however, are growing faster than the advances. The yields have fallen while the cost of funds have increased, and the asset quality has remained largely stable. Joining us on the show to discuss more is Amitava Chatterjee, MD and CEO at J&K Bank. Amitava, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, what have been the key highlights for you which have not worked this time around?
Very good afternoon. It's not a matter of whether it has worked or not. There were a few events. The entire nation knows that, and also there was a amalgamation of regional rural banks, one state, one bank, one RRB. So there, our sponsored RRB was amalgamated with another bank, which was not doing so well. So the profits sequentially, quarter on quarter, would have been much better had we not had to provide for the investment impairment on those. Otherwise, the first quarter, mainly, normally the start is slow for most of the banks. We have been concentrating mostly on the deposit front. Advances, I know there is a very strong market that we have in Jammu and Kashmir, market share of almost 60%. So, and the business in Jammu and Kashmir has also been pretty good in the first quarter. So what we now plan to do is to expand it in the rest of the country also.
Okay, one question, Amitava, I have that you mentioned about the geopolitical concerns that have impacted. Are you seeing significant vulnerability with regards to a potential increase in NPS that could come in the coming quarters in sectors like tourism and hospitality, because that is the space which has been impacted as well?
Essentially, that is the sector which has been impacted. And since Jammu and Kashmir depends quite a bit on tourism, so the other sectors also have indirect linkages to the impact on tourism. The impact has been there. It is visible. Openly, you can say that the bookings have gone down. People have stopped coming. Essentially, the way it was going for the last 2 years, it has dropped considerably. But having said that, if you look at the revival that has happened post the introduction of the train, the Vande Bharat. And then subsequently, we have had the Amarnath Yatra, which was again, there was a lot of enthusiasm in that. So tourism has been picking up now. That is one. The other part is whether I see any substantial increase in the NPS. No, I do not. You must see that even after almost the full quarter, there is hardly any increase in NPA. The percentage sequentially might have, gone up a little bit. The essential reason is that the advances have not grown to that extent. Otherwise, on absolute terms, the NPAs have not gone up. SMAs, yes, a slight increase, but I expect it to come down substantially in the next quarter.
Right, got that view, Mr. Chatterjee. Hi, this is Varsha here. Pleasure to have you. Well, sir, your capital adequacy ratio, if you see, that I saw quarter on quarter there was a dip, though it is comfortable. But how do you see this capital position, supporting your growth aspirations? Number one, particularly if advances growth accelerates, and are there any plans for capital raising in the near to medium term to bolster your growth?
See, on all three counts, at the moment the capital is comfortable if you look at the regulatory requirement. The second is if you look at both the capital at the moment as well as the CD ratio, we have sufficient headroom to grow in advances. However, we still plan to improve our CRAR going forward. I think we will end up the year at around 17.5 or something close to that. This 15.98, which has come down sequentially, is not inclusive of the profits that we have booked for this quarter. So it is excluding that, and also it is mainly on account of the operating profit increases that have happened. Some increase in the trading portfolio of the bank, which has increased the overall risk-weighted assets of the bank, but that is on the positive note. So sufficient capital, and also there are plans to increase it. I am not able to say exactly at what time, but then during this financial year, definitely we will be trying to reach a level of 17.5.
Okay. Amitabh, what is the kind of provisioning that we've done this time around? Because we're looking at around 34 odd crores. Are you seeing a potential that provisions could probably go up, or is this just a signal that potential asset quality concerns could come in? Because initially we were talking of a write back of 24 odd crores in the previous quarter.
Yes. See, the kind of recoveries that we have had in the past on the technically written off accounts, even this quarter we have had slight increase in provisions, but also write back. The net amount has been a little high. I told you the reason, because since we already have a fair amount of buffer and we do not want to go down on it, and especially looking at the possibilities. Although I must say that because of the steps taken by the UTLBC here, in all probability in a few days' time, this geography would be declared as a disturbed geography for the purpose of restructuring of loans as per the RBI master circular. So taking into account all those things, I'm not worried, and I don't think that provisions will go any further. We have taken precautionary measures as we have already done in the past.
A quick update in terms of the 16,000 crore GST notice, I think, what the bank had received in February. Any update on that? Has that been resolved, or are we missing anything?
I won't say it has been resolved, but the thing is, we have got stays from the high courts. That is one. And the mistake that was evident has been noticed. Even the stays have not been challenged by GST in the courts. So I believe that it is just a matter of time before a final announcement can be made. I can say only this: I see no probability of that coming into effect in this bank any time in future.
Got it. Thank you so much, Amitava, for joining us on the show and sharing the views. So that's the management of J&K Bank categorically indicating as to what has led to that provisioning and the stock falling further at the day's lowest levels with cuts of 2.5% coming in there. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IPOs CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching Profit Buzzers. Let's shift focus to the pharma pack of Laurus Laboratories, which is in focus, and the stock is reacting to the kind of numbers that have been reported. Let's quickly see what the stock is doing in trade. At the day's highest levels, nearly 7% kind of up move. We spoke to the founder, Satyanarayana Chava, and he explains how the company's pivot to CDMO is set to transform its revenue mix, boost margins, and drive long-term growth by FY28. Let's quickly listen in.
See, if you look at the Q1, we were 59.4% gross margins. Whereas close to one-third revenue came from CDMO and two-thirds came from chemicals. Despite of the two-third, one-third mix, we're able to do very well. That means we are running an efficient operations, even in the generic space. Otherwise, our gross margins will not be that. And going back to your question, we expect the gross margins will remain same, grow, because of higher contribution will come from CDMO. In the next 3-4 years, we expect CDMO revenues should grow bigger than what we have today, and we should inch towards 50% revenue contribution coming from CDMO in the medium to long term.
Right, so this was Laurus Lab, saying us about the outlook when it comes to FY26 and years ahead. But sticking to pharma, Wockhardt is in focus. Let's see what that counter is doing. So stock was up almost 5% this morning. There you go. Oh, that has come off. But the reason why the Wockhardt is in focus is their product or their drug Zenich. So, which has treated US liver transplant patient, and the patient resisted all available antibiotics, but because of Zenich, because of this drug which is made by Wockhardt, the infection cleared completely within 11 days of Zenich treatment. Now about Zenich, now this is a new antibiotic, novel antibiotic drug for multi-drug resistant, has completed global phase 3 clinical trial. Over 50 patients in India and the US have been treated with this drug, and the addressable global market, if I were to talk about, stands at around $25 billion. On the key highlights, so they are considering licensing deal for Zenich in Western markets, and they are expecting approval in US in 2026. Let me go to Avinash. Avinash, wanted to have your view on Laurus Lab, considering the upward movement when it comes to financial numbers the Laurus Lab has seen. It's fantastic. So your view on Laurus Lab, and also Wockhardt, considering the Zenich, which is the key product for the company, and of course any other pharma pick that you have in your mind.
Yeah, I think, Varsha, I think on Wockhardt, I think the opportunity to scale up is significantly large. And as you rightly said, it's a $25 to $26 billion market. Definitely, I think you could see a long runway for Wockhardt. And I think after a long period, I think you're going to see this company gradually get re-rated. Already the stock has moved up quite significantly. The company has already, got a lot of good institutional investors now on board. But our sense is that FY26 and 27 could be a lot better. And I think obviously the margins as well as the top line growth could see a significant amount of re-rating and a substantial move. So I think, somebody who wants to take a 12 to 18 month call, I think any decline in the stock price is definitely a worthy candidate to add to their portfolios. As far as Laurus Labs is concerned, a very strong performance after a very lull kind of performance in the earlier quarters. As the management clearly indicated that operating leverage has also kicked in, they've managed to actually deliver more on the numbers. So my sense is, I think years, probably you should wait for some time before the stock cools off. But definitely, I think the next 12 to 18 months is going to be very strong. And I think the markets would like to look at sustainability of these numbers because this quarter has been a very robust quarter. How sustainable is it going to be in the coming quarters is also going to be very crucial. So if they do maintain the momentum, it should be good.
Absolutely. In fact, let's get in Rajesh Bhosle of Angel One as well. Rajesh, Laurus Laboratories, Wockhardt and RPG Life Science. 3 stocks, what are charts indicating?
So yeah, pharmas are definitely showing strength, and if we come to the Wockhardt Pharma, the stock had a strong strength during the June month. We saw great volume, and then after that we are seeing the stock is trading in a range, but overall undertone remains positive, and it has come off from the morning highs, but bias remains positive, and any dips towards 1620, 1610 would be a great buying levels. And on the higher side, if we see 1850 is a key resistance that has been acting as a supply zone for the last couple of months. So on the lower side, 1650 would be the buying zone, and above on the higher side, 1860 would be the resistance. The second counter is Laurus Labs. The stock is showing strength, is up already 6%, and we continue to have a positive bias, and the stock has formed a flag pattern breakout. We expect possibly the stock can move towards the 1000 levels, but since the indicators are a bit overbought, a buy on dip would be suggested. Any dip towards 860 to 850 would be the ideal levels, and on the high side, 1000 levels would be the targets.
Okay, so that's with regards to the 3 names, but let's look at our RPG Life Science. That stock has been trading under pressure right now, seeing cuts of nearly over 8%. Let's understand from the management, Ashok Nair, in terms of what has gone wrong. Ashok, good afternoon and welcome to the show. What has not worked this time around that the street is really taking this with a piece of stride? 8% downtick in terms of the stock price. Though if you see at the face of it, revenues a 2% growth. Margins, yes, have seen a dip, and your net profit is down marginally 2%.
Good afternoon, Hira. Thank you for having me. First and foremost, if you see 70% of this is from domestic business, and in fact, it's continuing to grow at 10%, and we are delivering a robust growth across. Now, what is a subdued performance is because recently, if you were aware, the API business plant, we had a temporary sales impact from a fire incident at our API plant in January. However, having said that, a dedicated team of 155 professionals are already working on restoring the plant. And the good thing is there was no casualty, and the emergency response team took charge over immediately. So this is a one-off thing, and because of this, our international formulation and API, the orders which were in the pipeline actually is getting deferred to the second quarter and maybe third quarter. But having said that, the domestic is in the right path, an approach in which we are on a pace to see that we reach 100 crores, has already achieved 17% growth in the first quarter. Our other key portfolios like dermatology, immunosuppressant, MABs, all are growing at double-digit growth. So the temporary setback which you would have seen is basically because of the API fire incident.
Right. Hi, Mr. Nair. Varsha this side. Pleasure to have you. Sticking to the API segment, so when will you see the accelerated growth in the API? I mean, will it take few more quarters when you can see that, bounce back in the growth?
So the API, as I said, the plant restoration will happen in quarter 2. So from August onwards, we should be able to start serving the orders of the pipeline. So from second quarter, API should look back, and we don't see any challenge from their side. And as the API also gets into, our international formulations also gets back, as because some of our products are backward integrated and we manufacture it from our own APIs.
Right. Got that view. And so since you are expecting that recovery from, quarter 2, what is the margin outlook that you're seeing when it comes to FY26 and of course FY27 as well?
So if you see our past for the last 3-4 years, our margins have been consistent, and you've seen that it is actually on the growth stage. So it will continue to remain the same, and I don't see any challenge from that end.
Understood. And also, Mr. Nair, so now let's speak about your domestic formulation business, which has shown growth in this quarter. What was the volume growth versus value growth? Number one, if you can, update us with that. And also, can you please comment on the new product contribution to the overall revenues in Q1 FY26?
Sure. So the volume has grown at 5%. And the price growth has been 2.5, and the NPI also has been 2.5. Our contribution remains consistently as what it was at the 20%. There's not much change in that. Going forward, we are entering into super specialty segments like rheumatology and gastroenterology. So there is a pipeline which we'll be starting launching it in the second and the third quarter. So as you're aware that we are a strong player in nephrology, so we would like to replicate the same in the rheumatology and the gastroenterology space.
Can be a reason. Okay. So from here on, Ashok, if you have to look at growth, what would you be targeting in terms of FY26 if you have to see a recovery? And then how is 27, 28 expected to look like, specifically taking into consideration the revival that could be coming in the API and the international formulation business?
Growth which we are looking at is the double-digit growth, which has been consistent with the last 2-3 years. So the exact growth I would not be able to tell you, but yes, we'll be at a double-digit growth.
Okay. And for which would you be looking at any capex plans, any investments, taking into consideration any new launches that you're looking at?
Yeah. So the capex, as we've been in the last, every year we infuse around 45 to 50 crores. That is continuing. Basically, it is to modernize our plant and to see that the manufacturing capabilities improves, and thereby our regulatory approval gets. And as you see, we have a 266 crore cash with us, and we are seriously looking into acquisitions, both either in an API or a formulation plant.
Also, Mr. Nair, so, if I look at the trajectory over the last 2 to 3 years, I would say from March 22 onwards, you were around, when it comes to, your debtor days, you were around at 30 days. And this time around, if you see, it has changed to almost 48 days. Now, my question is, how are you seeing this going ahead? Will the debtor days rise, or it will go back to 20-30 days, which was which was before 2022?
So if you see the last 2 years, our international business has grown, and the nature of the international business is such that the days are above 45 to 60 days. So that we will see that how to bring it down. But then the nature of international business is such. So as the business of international grows up, but then it is healthy. This is what the industry is. So I don't see any challenge on that front.
Mr. Nair, last and the quick question, any inorganic opportunities that you're eyeing up?
I just mentioned now, we are having a cash surplus of 266 crores. So we are looking into an inorganic, either in an API sector or the formulations, and we are very serious about it.
Right. All right, Ashok. Thank you so much for joining us on the show. Outlook is positive, but yes, there has been pressure this time around. Let's see how the turnaround pans out from here on the stock. Mild recovery was down a little over 8%, now down 7.5% as we speak. But moving on, you have the US-UK, the FTA that has been signed. And basis that, if you talk about the US-EU deal, the Indian automakers are the ones which will benefit. Overall, they've announced a 15% tariff across most product categories. So the tariff on cars from European Union will be 15% versus a 27.5% currently. And this deal comes ahead of President Trump's tariff deadline of the 1st of August. Overall, if you talk about the impact, Tata Motors will see a positive impact because the tariffs on exports will come down to 10%. JLR has a plant in Slovakia, and the tariff will come down to 15% over there. And 33% of JLR's volumes come from the US market, which is significant volumes from Slovakia plant, though the stock has cooled off from the day's highs. Samvardhana Motherson as well, they have exposure of around 6 to 7% to the US market, the stock trading in the positive. You have Sona BLW, around 43% of the revenues is in terms of the US. And very lastly, if you talk about the last stock, which is Bharat Forge, around 35 to 40% of the company's standalone exports are to the US. The stock still trading at the day's lowest levels. Avinash, a quick view. US-EU deal, do you see any of the benefits percolating to any of the companies that we mentioned about?
Yeah, Hiral, I think within the choice of companies, Tata Motors definitely would benefit. I think the markets were expecting a slightly higher degree of tariff. This duty tariff is definitely a good sentimental booster, and I think once things start progressing, my sense is that this tariff hike can definitely be passed on, and I think it will not be very much detrimental to JLR's profitability. I think other companies you mentioned, Samvardhana, Motherson, and Bharat Forge, I think these are also large players which operate, of course, in the US market, so they definitely, would now we'll see how the India-US trade deal pans out. But otherwise, I think even Samvardhana has a decent kind of exposure in the European markets. So clearly, I think what was expected to be worst has come out to be slightly better. So net, I think very positive. We are structurally positive on these companies and expect that second half of this financial year, I think things should get better for them.
Right. Rajesh, any charts look interesting basis what you're seeing today?
So today the auto packs are a bit lackluster because of the broader market. But as you highlighted, this counter, Tata Motors, Samvardhan, Sona BLW, all these counters are relatively showing strength. If we see Tata Motors last 2 to 3 days, delivery volumes has been picked up. Tata Motors is trading in a range of where 700 to 710 is acting as a resistance. And once that is crossed, then we can expect some momentum towards 750 to 780 levels. The second counter which you highlighted was Samvardhan Motherson. The stock is already forming a higher bottom and good volumes has been picked up in the last few months. So even Samvardhan Motherson looks positive with a stop loss somewhere around 97 to 95. We expect the stock to move towards the levels of 112 to 115.
Right. Thank you so much for that view. Moving on, India-UK FTA boosts India's textile exports, says Amit Agrawal, the Raymond Group CFO at Raymond Lifestyle. Listen in to where he spoke about the FTA will benefit the company.
It is a great thing. It's a big achievement. And we have been waiting for this FTA to happen for quite some time. And I think it is a beginning of the journey. If you see, if we have done with UK, over last 18 months, we have done with Australia and few other countries. I think as you see one big FTA like UK has happened, it will open up EU on the next line. I think that will enable us, Indian, to export much better. And when you are getting this status, you are actually becoming a level playing field compared to what you call having Bangladesh on your neighbor, Vietnam, Indonesia. Many of these countries have got a zero duty benefit. So when we were competing, and especially in a textile sector, when you compete, the margins are quite thin. So this would make a large difference. And considering this impact of the duty, which was in the range of 11-12%, depending upon the product to product, especially in the textile sector, it made us difficult to export into these countries. Only we were able to do a very high value product, and India has got an integrated supply chain, which I think is going to be a very large beneficiary. And it creates a lot of employment. Textile industry creates a lot of employment. So that all is going to be a big boost to the Indian economy and to our foreign exchange earnings.
Okay. Rajesh, very quickly, what is Raymond Lifestyle telling you in terms of charts? A good stock to look at?
So if we see during June month, there was a strong rally from the levels of 1030 to 1400 levels, but then it has fizzled out. But fortunately, this correction has been with low volumes and the prices are retesting that origin buying point. So somewhere around 1000 levels, the stock can be a good bet once again for a bounce back towards 1250 to 1280 levels. 1000 levels would be the buying zone with 950 as a stop loss.
Okay, that's Raymond Lifestyle. Let's quickly look at TTK Prestige. Revenues, a marginal growth of around 3.6% is what you're seeing. Profits have seen a major dip on a consolidated basis. A 36% downtick at 26.6 crores is what has been reported for a TTK Prestige. But revenue has remained absolutely stable. The reason in terms of the profit dip is something that we will look at closely. Let's just quickly pull up the stock price, not seeing a major downtick in terms of the stock, remaining absolutely stable as we speak right now. But apart from that, Zen Technologies, that stock has also reported numbers on the back of which you're seeing a major downtick on that one. Revenues are down around 37-38%. Margins have dipped as well. Profit is down around 37-38%. And with this, you have a Paras Defense, which actually reported numbers in terms of Friday's session during market hours. That stock also from the defense pack has been trading under pressure. Very quickly, Avinash, both the defense names, Zen Technologies as well as Paras Defense, what would you advise investors to do? Because these companies are very much dependent on the kind of defense spends that you look at.
Yeah, I think Hiral, as far as Zen Technologies is concerned, it's been a horrible quarter. Top line down by 36%, profit margins down significantly. I think the management has, put out some clarification saying that it's a temporary kind of phase and they would bounce back. I would say that, I think investors who invest in such companies have to take a slightly longer term period because, on quarter-on-quarter basis, it may not be possible to evaluate these companies because growth can be lumpy, growth can be slightly volatile. And considering the fact that Zen Technologies has an order book of almost 750 odd crores, I think the revenue visibility over the next 12 to 18 months is pretty solid. So I would say that those investors who probably get in these stocks for short-term momentum should avoid them. But longer term, I think yes, the company can bounce back, and I think one should stay invested here. But don't expect anything in the near term.
Okay. So that's with regards to Zen Technologies. But thank you, Rajesh. Thank you, Avinash, so much for joining us on the show and sharing your views. But completely out of time. But before we wrap up, as we're talking about IPOs, they're once again the talk of the street this week. And one of the IPOs that opens later this week is M&B Engineering. We earlier spoke to the CMD, that is Chirag Patel, and joint MD Malav Patel. Here's what they have to say on the company's growth prospects going forward. Let's listen into a slice of that conversation.
Chirag, to begin with, take us through what exactly your company does, your business model.
Good afternoon. Thank you for having us with you. M&B Engineering is a 4-decade-old company based out of Ahmedabad, Gujarat. We are into two verticals. One is pre-engineered steel buildings and self-supported steel roofing system. We have two brands. For pre-engineered building, it is Phoenix Construction Technologies, and for self-supporting roof, it is a Proflex system. We are a pan-India company doing business across all the industrial, warehousing, large construction spaces across India. We are also supplying our pre-engineered steel buildings to 22 countries and exporting from here. We are one of the largest exporters of steel buildings from India.
Malav, if you can take us through 250 crores is what you're raising through the IPO as fresh issue. What is it going to be used for?
See, out of the 275 crores, which is primary, we are planning two expansions. We are planning two expansions, one in our Sanand facility, which is located in Gujarat, and the other one in our Cheyar facility, which is about 2.5 hours from Chennai, Tamil Nadu. So about 125 to 130 crores is going to go towards these two expansions.
The first phase of our Tamil Nadu facility got operational last year, and we had raised money from the banks, about 60 crores. So that amount is going to be paid off through, that's one of our objects in the 275 crores. And the remaining is towards GCP. This is how the 275 is distributed.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IDFC CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IDFC CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Select live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? No.
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Soumit Sarkar, and my co-anchor Varsha. Well, if you look at the markets, the benchmark, that is Nifty 50, is down over 150 points. It has fallen below the 24,700 level. The Nifty Bank is down over 450 points in today's trading session, but that's what is happening when it comes to the large cap. But let's get in Hiral with more details on which are the stocks that are buzzing when it comes to the small cap segment.
Thanks, Soumit, for that. What's interesting is the small cap index. So let's quickly look at the BSE small cap index and then we'll see Nifty small cap 250 as well. Again, at the day's lowest levels, we're seeing cuts of nearly 1.2% in terms of BSE small cap. And if you talk about Nifty small cap 250, if we can show that one as well, similar are the kind of cuts again at the day's lowest levels. So pressure does continue. Let's look at individual counters. Now, Paras Defense reported numbers on Friday from this pack. That stock is trading under pressure. 10% is the kind of cuts on Paras Defense, whereas Zen Technologies is locked in lower circuit to the tune of 5%, again on a back of weak set of numbers. Shankara Building Products, again reacting to numbers. Let's pull up that one on the screens. Then the RPG Life, 6% on a Shankara Buildcon, but that stock has recovered slightly. RPG Life, we spoke to the management, mild recovery, was down almost 8.5%, 9%, now down around 7.5%. Suraj Estate is another one which has been trading under pressure as well on the back of a weak set of numbers. Let's pull up Suraj Estate on the screen, 7.5% downtick there. SG Mart, 3 consecutive sessions of declines is what a SG Mart has also seen in trade. So that's another one you should be watching out for. DAM Capital, since the time the company has reported numbers, the weakness has continued on a DAM Capital as well. Today down 6.5%. Home First also reacting to numbers, and a GMDC from this space that has been trading under pressure. Let's look at a Northern Arc, CDSL, Engineers India, all of these counters that are buzzing in trade in terms of today's session on the back of that weakness that they have been seeing. Again, CDSL is an earnings reaction, and you have an NSDL IPO which is in the offing. Engineers India also under pressure. Companies which are gaining, Sudarshan Chemical is absolutely interesting, which is one of the gainers in this space, 15 to 16% at the day's highest levels on this one. Advait Infra is another one which is seeing some smart moves in today's session. Car Trade, again, reacting to numbers. So Car Trade is a stock that you should be watching out for as well pretty closely. There you go. Again, near the day's highest levels, 10% is the kind of up move on this one. Vimta Labs, Acme Solar, both these names, if you can pull up the charts, you will see the kind of strength that it's being built. Vimta Labs as well, 10% up move. You have Acme Solar, 8% up move on this one. Sterlite Tech, Tasty Bites. Tasty Bites is contributing to the kind of gains that you're seeing to the FMCG index as well, 7.5%. It's cooled off from the day's highest levels, but still gains in today's session. Laurus Labs, Poonawalla FinCorp, and Aadhar Housing. These are few of the names that have been buzzing from the small cap universe. Over to you, Soumit.
Thank you so much, Hiral, for such a deep market check. Well, the other stock which is in focus is Rainbow Children Medicare. Let's see what that counter has done, because the stock, if you see, is down 1.4% mere, but it came out with the Q1 FY26 numbers, and numbers were pretty much in line with the expectations that they had. Just on the key highlights, you have revenue growth was led by strong performance from newer facilities, EBITDA growth was led by operational efficiencies and cost discipline, and the total beds by FY28 are targeted at 2,865. Well, to speak more about the numbers and what lies ahead, I am here joined by Mr. Vikash Maheshwari, who is the Group CFO of the company. Hello, Mr. Maheshwari. Welcome to the show and pleasure to have you. How was Q1 FY26 for you? What were the misses as per you, or what stood out for you?
Yeah, thank you for inviting us, and thanks and good afternoon to you and your viewers. As far as the quarter first is concerned, since we are pediatrics and mother care hospital, it is a seasonal. Quarter first is generally is a seasonally weak, which is not in our terms, but it is a global trend. Wherever the children's hospitals are there, the quarter first is generally very healthy and will be slightly muted. But our new units which we have opened plus the matured units, we have done a good job in terms of revenue growth of 7%. We had the great good cost discipline, which has improved the EBITDA by 1% and slightly being contributed to the new units which were opened last year. And there was a drag. So that drag has come down, improving our EBITDA margin. And PAT has gone by 35%, led by slightly better treasury income. So the quarter as such was good, but it would have been slightly better if the general pediatrics business, which we have seen, slight continuation from the March quarter to June quarter, whether the slight slackness continues, but now things are improving. And as the seasons progresses and the upcoming quarter comes, we hope whatever the guidance we have given for, a high teens to mid teens growth, we should be able to catch up in FY26.
So you are maintaining the guidance of mid-teens revenue growth that you have, given. Well, on that, what kind of capex would you be incurring for this 150 new greenfield hospital? And one question is that, and the other question would be, are there any brownfield expansions, that you're eyeing for? Because a lot of hospitals, if I'm seeing, they're going more towards the brownfield capacity expansions rather than greenfield. What is your view on that?
Yes, this 150 beds which we have just announced for the Pune, it should cost at around 75 to 85 lakh rupees per bed. It should cost something, between 80 to 100 crore rupees for the full capacity. But that is some 2.5 years away from here. And the money will be being paid over a period of time. Here is the builder and the landowner who will build suit to the hospital to us. We'll do the furnishing, fixtures and the medical equipment and run the hospital. As far as your point is completely valid in terms of, it's a brownfield expansion. But in case of pediatrics and the mother care, there is a hardly any, good quality hospitals which is available, which we can acquire. Generally the people have built like maternities and nursing home type of things, or some added value on the pediatrics on that. But the level we is, operate that type of levels and the size that hospitals are not available for the acquisitions. We were lucky that last year we have got this year last, July, 2nd July, we could close one transaction at Warangal, which was built on the same principles, same ethical principles and the result oriented hospitals at Warangal. 100-bedded good size hospital which we have acquired. At the same time, in the previous calls also we have stated that we are looking at something at the northeast which is of great size, good clinical outcome and the good name. We are in progress with them. Hopefully you will listen something happening on that ground soon.
For the first quarter, your revenue growth was 7%, but your guidance is to achieve late teens to 20% revenue growth for FY26. Are you confident that you will be able to achieve this number in this financial year?
Yeah. So if you look at historically, also the quarter first is generally is the slack quarter, and the growth will be in the similar range. And since the season is picking well and the company is progressing well, we remain confident of the mid-teen to high teens growth on delivering for FY26. And also at the same time, we have just acquired Warangal. There may be something happening in the northeast. At the same time, this year is going to be very busy because we are opening 3 new facilities before September. The Rajmundry facility, which is our regional hub hospital, is getting slated to open sometime in mid-August, subject to all regulatory approvals. And 2 hospitals at spoke hospitals at Bangalore will also get commenced between September and October. So it's a very busy year. We are getting a lot of bed capacity being added. On back of that, we remain pretty confident of delivering mid-teen to high-teen growths.
Lastly, sir, if you could tell us what led to the decline in occupancy of your mature units to 44%. Wasn't that supposed to be higher usually?
Your point is absolutely correct. The pediatrics, which is our large business, general pediatrics remains slightly muted. That is why you are seeing is the less IP number and the less occupancy. But the good part was that our tertiary and the quaternary care business, which is our main forte, that continued very good. There was a good surgical businesses which we have done. That is why if you leave apart the occupancy apart, the matured units as a revenue, they grew by 2%, though it is a very muted one, but they grew in terms of revenue because of on the back of our surgical and high-end tertiary and quaternary care business.
Right, got that view. Well, thank you, Mr. Maheshwari, for joining this conversation and answering all the questions, and all the best for the business.
Thank you very much.
Well, this was Rainbow Children's Medicare, giving us outlook when it comes to FY26. They are maintaining their mid-teens growth for FY26. Now, let us, invite our guest for the day, Vinit Bolinchkar, who's the Head of Research at Ventura Securities. Well, hi Vinit, and welcome to the show. Pleasure to have you. What's your view when it comes to, Rainbow Children Medicare? Are you tracking this counter? And if any other, hospital picks that you have in your mind?
So, I think Apollo is the best bet to go with. I think the segregation of the demerger of their other units is very much going to happen soon. And they've got good capex and good growth plans. So we remain bullish on Apollo with a target of around 8,000.
But any picks in the small cap space, Vinit?
Shelby is a very interesting play. I think they've got a lot of cash there. Their other, apart from orthopedic, their other businesses are also doing pretty well. So I think this stock can turn into a very decent stock pick over the medium term. You can easily get 20-25% compounding in the next 2 to 3 years.
Well, let's also welcome in the management of SBFC Finance in our show. Mahesh Dayani, the ED of SBFC Finance, is joining us. Sir, the AUM growth was quite strong, 7% Q on Q. Are you confident that you will be able to maintain this kind of AUM growth even going forward?
So if you probably would look at our commentary over the last 8-9 quarters, we've been maintaining a 5 to 7% growth on a quarter-on-quarter basis. I think we're coming off from a low base. So while the percentages may look slightly elevated, but given our base, we're comfortable to stomach anything between 5 to 7. We disbursed close to around 809 odd crores. We were a shade at 7% and slightly above. Given the current dynamics at play, we're still very confident that we'll continue to be at 5 to 7.
Right, sir. But sir, when it comes to the MSME segment, we are seeing some stress building up there. Could you take us through how long do you expect that stress to persist in the industry, and what does that do to your credit cost here?
So if you were to dissect where the stress is coming from, you would see that most of the stress is coming out from specific geographies, which we personally feel that's transitory, that's temporary in nature, that can be solved for. The other stress which is actually emerging is from the smaller ticket sizes, and that's something that probably we'll pause or we'll tighten the filters. If you were to exclude a combination of both PIN codes and the smaller ticket sizes, I guess you won't shave off more than 20-25 crores, on a monthly run rate. So we would still be comfortable continuing the momentum. Having said that, while there was some bit of slippages that happened during the quarter, but we've seen those slippages in the past as well. As a result, what we've called out is that our credit costs might move up anything by 15 to 20 basis points from where we are. We are at 1.1, at best probably between 120 to 130 base, 1.2 to 1.3%.
Right. Hi, Mr. Dayani. Varsha this side. Pleasure to have you. You have also guided for a compression in return on assets from current, 4.5 to 4.6% to 4.25%. What are the primary drivers, for this anticipated compression, especially considering your stable cost of borrowing?
So, ROAs are a function of your leverage, and obviously, as your borrowing goes up, then the ROAs tend to, move in slightly on the downside as the leverage moves up. The right way to probably look at it is the return on equity. But if I were to just take you over the past 3 quarters, you would see our leverage has moved up, but our ROAs have by and large remained constant at 4.5 odd percent. So even in the current quarter, we are at 4.5 odd percent. Our leverage is slightly marginally above 3, taking our ROEs to 13.5. So as our borrowing tends to go up, you might see a slight dip, but the ROEs will tend to look a lot better from where we are.
Right, sir. And lastly, one question on the increase in gold loans that we have been seeing. What is the kind of guidance you could share on this front here?
So in terms of gold loans that you see, we've been investing in branches. So we've been investing close to 20 to 30 odd branches in a year. We've invested almost 10 branches in the first quarter. The momentum is going to continue for the current year as well. Largely because of the confidence in the way our OPEX is now beginning to sweat. Our models are a lot more, our business models are a lot more modular now. So our ability to scale is significantly better now. So we feel that we'll be able to sustain the growth momentum in gold. And we will be able to take the lift both in terms of price and volume as we move into the current year.
Right. Thank you, Mr. Dayani, for answering all the questions, and all the best for the business.
Thank you.
Well, one of the company who is the direct beneficiary of India-UK FTA is Apex Frozen Foods. Now, Vansh joins it with all the details why this company is a beneficiary. Vansh, over to you.
Right. So firstly, let's understand the business of the company. The company is in the business of operating and processing and exporting of shrimps. And the company caters to customers such as food companies, retail chains and restaurants. So if you look at the export mix of the company, the revenue from US accounts for 53% of the company's revenue, and 39% accounts from Europe, and 8% accounts from other countries. Now let's understand why the company is the beneficiary from the India-UK trade deal. As the deal will lead to zero duty access to Indian suppliers for 99% of the marine exports to UK. And this previously India lost its top shrimp supplier position in the UK due to tariffs up to 20%. However, despite facing these tariffs of 20%, India maintained its market share of 15% in the export shrimps market in the UK. However, now this deal is expected to double the India shrimp market exports to 35% by current year 26. If you look at the financials of the company, the top line of the company has remained stable for the last 5 years, and the margins have shrunk sequentially from 9% in FY22 to 3% in FY25. However, now interesting thing to watch is the key investor highlights in the company. MIT holds 3.65% stake in the company as of June 2025 quarter. So this is some of the developments that is coming up for Apex Frozen Foods.
Right. Thank you, Vansh, for all the details. Well, Vinit, let me come to you on this. Are you tracking, Apex Frozen Food, considering the company being the beneficiary of, India-UK FTA?
Yeah, definitely. I think the company in the Q4 has seen a good performance. Their realizations went up while their raw material costs went down, and so the margins are back. And we think that this business, which contributes about 39% from Europe, can go up to its sales. And US also, it's a major export market for the company. So we think that this company can do very well. Valuations are very benign. So there's a lot of room both for growth from operations, net earnings, as well as from valuation of.
Asian Energy Services is the next stock that remains in focus. Now, what's interesting here is that the company's order book before this order win from Vedanta was at 800 crore, and they have won an order of around 800 crore. Now, Jasmith is joining us with all those details.
Well, yes, rightly said. The stock is buzzing in day today. It's up 15% on the back of order win. Let's quickly understand the size of the order, and the order is won by which company. Well, firstly, the stock has gotten an order from Vedanta. The order is secured for integrated services. Now, what this order would mean is the order is in the field of operation and management. While this is the biggest segment for the management, the management has won an order in the segment where they are already doing well. Now, if you look at the order size, the size of the order size is 865 crore. While as Somi already said, the order book back in FY25 was around 900 odd crore. So this order adds up to that. While now what does the company do is that the company offers oil field services and seismic scanning for the company. They have been in the business in the last 24 years. Looking at the operational metric of the company, the total order book as of FY25 stands at 973 odd crores. When you look at the segment division, the O&M sector contributes roughly 56%. That's the operation and manufacturing. When you look at the infrastructure, that contributes 36% of the overall terms, while the seismic contributes 8%. Now, when we look at the FY20 financials, the revenue from operations were up 81% YOY basis. When you look at the margins stood at 15.5%. So, we just have to watch out how the Q1 result turns out for the company going forward.
Well, that was Jasmeet on Asian Energy. Vinit, any views on this counter Asian Energy? Have you tracked this big order win? Would you advise investors to get into this counter?
So, we think it is one of the most resilient companies in the infrastructure space, as they do a lot of business in the mining sector. Order wins are very good, multiple year order book, and margins also ticking quite nicely. So definitely a buy from current levels.
Right. Thank you so much, Vinit, for that view. Well, the other stock which is in focus is Jagsonpal Pharmaceuticals. Now, this stock, if you see, is buzzing. It's up almost 13%. Now, this is on the back of Q1 numbers that the company has posted. Let's see how the numbers were. The growth that you're seeing is led by performance across its key brands, and the focused brand building strategy have continued to yield results for the company. Margin expansion that you're seeing is on the back of brand strength, and the gross margin improvement also is backed by strong brand equity and cost management that the company has seen. Well, onto the FY26 outlook that they've given, they're expecting 15% of revenue growth. EBITDA margin is expected at 20%, and beyond 2026, if I were to talk about, they're expecting a revenue growth of almost 12 to 14%, and they expect operating margin improvement of almost 100 to 150 basis points. So, a lot of growth drivers when it comes to Jagsonpal Pharmaceuticals. Well, Vinit, coming to you on this counter, the stock is up almost 13%. Company gave good set of numbers. What is your view on the counter?
I think we've seen some very interesting performance coming in from their gynecology, pediatric, orthopedic, and dermatology segment, and their brands are getting solidified here. Their margins are also very strong at 20% and inching upwards. And the guidance given by the company is very good. They've done a lot of investments in their brand building, and hence we think that this stock can do well going ahead.
Well, thank you, Vinit. Thank you for joining us and discussing about the companies that we talked about in this show today. Well, with that, it's a wrap on this edition of A Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I
or
hold CDSL for the long term?
buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I
or
hold CDSL for the long term?
buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
You're watching India Market Close at NDTV Profit. I am Mahima Vachrajani and with me is Neeraj Shah. Well, before we move on to the different elements that are planned out for you on the show today, let's take a quick look on how the markets are doing. The Nifty 50 down by about 0.6 odd percent, trading within that range of 200 odd points. The Nifty Bank also down by about 0.6 odd percent. Majorly, the Nifty Bank down by about 0.8 odd percent, majorly dragged by Kotak Mahindra Bank on the back of its earnings. The Sensex also down by about 0.7 odd percent. Let's try to pull up the Nifty heat map map and see what counters are doing in trade today. There's Shriram Finance with stopping the chart up 2.6%, followed by Cipla up 2%, Hero Moto, Grasim, SBI Life. Some counters doing well in trade today, but some counters facing pressure. Kotak Mahindra Bank, the biggest loser on the Nifty 50 today, down by about 7.4% on the back of its earnings. Wipro down 3.6%, Bajaj Finance down 3%, followed by BL, Bharti Airtel, Indusand, Titan, Nestle, all down by about 2%. Let's also try to pull up the advanced decline ratio and see what is the broader end of spectrum looking like. Well, it's as wide as a crocodile's mouth. There's 473 odd advances versus that of 1800 odd decline. So the market's clearly on the sell side today. Let's also try to pull up the sectoral heat map and see how sectors are doing in trade today. It's only the Nifty Pharma in the green today, up by about 0.5%. Nifty FMCG slightly in that green, hovering here and there. But Nifty Realty under pressure, down almost 3.6%, followed by Nifty Media, where profit booking is seen. Nifty Defense, continued profit booking seen there as well. Nifty Private Bank down 1.7%. Nifty Metal down by about 1.2 odd percent as well. Nifty Bank again seeing that beating of around 0.8 odd percent. But Neeraj, I come to you on this one. How are the broader markets doing?
Yeah, I mean, there is pressure for sure, Mahima. So suffice to say that there is quite a bit of selling that's happening, and this is not just retail selling getting absorbed. I think there is fair degree of insti selling that seems to be the case in the session today. I'll start off with some losers, and beyond the Nifty, I think there is weakness today in SBI Cards, for example, down 5.5% after the results and the brokerage downgrades. You're also seeing some bit of pain happening in Zen Technologies after the results have looked wobbly, and that stock has come off. Mahima highlighted how real estate has looked weak and is amongst the top sectoral losers. Lodha, DLF, Marathon, that list is looking fairly long in terms of real estate stocks that have cracked in the session. Almost everything has looked slightly wobbly in trade. On the flip side, some bit of value buying being seen in Chennai Petro, for example, today. Remember, on the day of the results, the stock cracked about 7%. In today's session, it's bounced back very, very smartly for itself. Acme Solar has done very well for itself. There is strength in e-clerks on the back of the management commentary. Emphasis has done well from among the IT packs, so a bit of an outlier there. And Paytm also does well today. So yet another day when Paytm is up in the green, about 2.5% higher for the stock, 1094. This is in and around the levels that it was on the day of the results, or the day after the results rather, when it first reacted to what was a reasonably strong quarter. Okay, let's get in chart checks going to start off the show. By the way, as we speak, Q1 earnings up on the screen as well for TCI, but as you can see, a 17% uptick in net profit. Nothing dramatic. It doesn't bring about too much of a cheer on the street. Hemant Kapadia of DR Choksi FinServe, excuse me for the fly, he joins us on the show. Hemant, good having you. Thanks for joining. Good afternoon. How are you viewing this? I mean, this has been now a number of days of pain, Hemant. Are we reaching a point from wherein a bounce back could be imminent or not quite?
A very good afternoon to you, Neeraj. Thank you for having me on the show. So it's a pleasure. I think I agree with you because we took 7 weeks to break out from a 700-point range. We gave a 300-point move, which flopped, came down, gave a recovery, couldn't overcome 25,200, flopped again. And now we are going to 24,500. Levels were 25,002, 24,792, and 24,492. That's 24,500. So the rate at which we are going, if it comes there tomorrow or day after, maybe tomorrow, I believe that's a very significant support, and I would go with you. I think it's getting oversold. Chances are we are going to give a decent bounce from here. So maybe we are preempting it, anticipating a day early. But yeah, at 24,500, I would stick my neck out and say I'll keep a 100, 150 point stop loss and go long, because I think chances of a reversal, I'm not seeing a reversal of trend, but a decent bounce seem pretty high, Neeraj.
Okay. Heyman, hi, good afternoon. What about Nifty Bank? It's largely backed by Kotak Mahindra and IndusInd, which is expected to post its earnings today. But those are the top two losers on the Nifty Bank today. But your sense on what is the kind of support and resistance that you're seeing on the charts?
Yes, Mahima, if you look at the Bank Nifty, we spent 6 weeks. There's a sixth week where we've done nothing. It was the strongest. It made a new all-time high. Thought we would carry on the momentum and traction and go towards 59. Now that's not happened. Having said that, in terms of support, 55,961 in Nifty spot is important support. We are almost there, 55,961. So if that breaks, then we could slip another 500-700 points. Now we'll have to wait and see what happens. There's also the 55-day exponential moving average over there beside the normal support, Mahima. So I believe this is a significant level. And if Nifty reaches 24,500 tomorrow and Bank Nifty doesn't break 55,961 decisively, I'm not talking about intraday breach, I'm talking about a closing close, then chances are that we see some respite there. And with Nifty bounce imminent, I think this could also sort of, salvage the situation. But normally when the Nifty breaks, IT saves it. This time that's not happened actually. Mahima.
Okay. And your top picks for the day, Heyman?
I would avoid giving picks today, Mahima, because too late to sell, too early to buy. I'm not sure that if the Nifty has come off from 25,650 to 24,650, it's already 1,000 points, Mahima. I'm not saying it's not going down. Intraday sales are there. But positionally, I wouldn't be comfortable shorting the Nifty when we are very close to 24,500. And if I give a buy at this point in time, stop loss is going to get triggered in 24 hours. So I'd refrain from giving a call right now, but at 24,500, I'd go long on the Nifty itself with a 150 point stop loss. Mahima.
Achima, I mean, can I ask you a follow-up question? And fair call, you don't want to do that. But there are some stocks which are either bouncing back or some stocks which are continuing their uptick, and I want a view on both. So one of them is Chennai Petro. Fell off after rising all the way to 800 on the back of weak results. But this shows that there is some buying that has happened today. If you were long in Chennai Petro, would you stay long?
This current small recovery seems more like a bounce, Neeraj. So if I was long, I'd probably book profit if I was in the money. And if I wanted to hold on, I'd keep today's lower the stop loss. But I think it's going to take a little bit of consolidation before it recovers. So not very comfortable at this point in time.
The other thing is, if you were long into a Laurus Labs, would you book profits now? It's been a one-way incessant rally all the way to 900 now.
I would. We are very clearly, without any rocket science, Neeraj, in a short, medium. It's in an uptrend on all time frames, short term, medium term, long term, long term. So no rocket science over there. But looking at the quantum and the speed of the move, everything is hunky-dory, everything is fine. But even then, I'd book some profits because the stock moves from 570 to 901 in what, 4-5 months. I'd say one shouldn't get too greedy. There would be some time price retracement sometime down the line. So I would book profit. There's no question of shorting it, but I would book some profit.
Okay, what about something like Paras Defense? The earnings came in during market hours on Friday, and it's seeing a tank. It's locked in lower circuit as we speak. It's down 10%. Any view on the charts for this particular counter, and anything that you're liking right now in the defense space, because it's been correcting for quite a while now?
Frankly speaking, 770 was an important level after the split of the stock, Mahima, Paras Defense. So currently that's broken, and what seemed like a possible consolidation, that was around 7.5 weeks, Mahima. Now that has broken with a bang. So I'd wait. If I were to buy, the next support level is 660 and 580. I'm not sure if it goes to 580, but if it does, rock solid. That's where you would sort of buy. So in terms of defense, I think most of them, whether it's HAL, Cochin, or Mazgaon, all of them have been humongous multi-baggers. I think the laws of gravity needed to catch up with them. That's happening. But if you have a 2-year view on a decline, I think they are all a buy.
Okay, Heyman, thank you so much, for giving us those insights, and thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you.
All right, now, shifting focus and, talking about IndusInd, because most of the banks have come out with their earnings so far, but IndusInd is yet to announce its earnings, and it's going to come out with its earnings later today, and Hiral joins us with what to expect from this particular lender in terms of its Q1 FY26 numbers. Hiral, what are you picking up?
Overall, if you see, thanks Mahima, the stock has been under pressure ahead of the numbers. It's trading near the day's lowest levels as we speak. The key question over here is IndusInd Bank actually returning to profitability this time around after posting a loss in the fourth quarter of FY25. The profit, however, is expected to dip by around 70% and come in at 653 crores. NI is expected to see a dip by around 14%. Your net interest margin, that number is seen at around 3.57%, which is higher versus a 2.25% if you have to compare it on a sequential basis. And the provisions are expected to go up by around 36%, and that number is seen at around 1,424 crores. Now, apart from that, if you talk about the business update that they gave in, it was slightly weak at that point in time, where the advances were down 4% on a year-on-year basis and down sequentially, and similarly, deposits have also seen a degrowth on a sequential basis. However, they have remained flat on a year-on-year basis. Talking about the pre-provisioning operating profit, that is expected to come in lower this time around. Credit costs probably could remain elevated as well, because in the March quarter, that number was around 2.8%, and overall, an easing of around 90 to 100 basis points is what is on the cards, but still that number will be elevated. Gross slippages, there could be some bit of a decline that could be coming in there, but again, that number is going to be elevated. Net interest margins as well, we already spoke about, so that's going to be a monitorable. Apart from that, the progress with regards to appointment of the bank's new MD and CEO is something that the street will be watching out for. The guidance in terms of the bank's pace of net interest margin expansion is what the street is eyeing. The MFI asset quality as well as the growth trajectory are few of the key monitorables that the analysts and the street are watching out for so far. But clearly, a number that the street is closely looking at, because overall, it's the derivative mess is what will impact this quarter.
Okay, thank you so much, Hiral, for breaking that down for us in a detailed manner. To take this conversation ahead, we are joined by Ashutosh Mishra, who's the head of institutional equity research, joining us now. Ashutosh, hi, a very good afternoon to you.
Hi.
I'll take this up. Hi, good afternoon. I'll take this up with you. What are your expectations with respect to where the business growth stands for IndusInd? And overall, how are you viewing the entire quarter shape up for the company?
So business growth will be muted in this quarter. We all know that because of the implementation of the guardrails, MFI books across the sector, both in NBFC and banks, are coming down. So this will be case with the IndusInd Bank, and they have a fairly large MFI books also. So because of that, we will be seeing the business growth remain muted for them. And the focus at this point of time is not about the business growth for the banks. Focus is about how they are able to defend their liability franchise because of the concern which was there. Are they able to do that effectively? That will be the main thing which I will be watching out for, if they are able to do it. And then who will be going to be the next MD of the banks, and what is his vision and going forward, that thing. And third will be to see that on a credit cost point of view, is there any incremental pains, because they have taken very large write-offs in the fourth quarter. So whether all the pain has been addressed, and how the credit cost will be stepping out for the coming all 4 quarters of this year.
Okay. Ashutosh, what about the kind of outlook on fresh slippages, recoveries, etc.? What's the kind of view on that, the operational metrics?
So we are going to see an increase in the slight increase. Sequentially, it will be decreased, but year on year, we will see increase in the fresh slippages. 2 parts of the portfolio which they have, commercial vehicle as well as MFI, which are under slight stress. We all know that other players has also reported that part of it. IndusInd is also there, but they have taken a very thorough cleaning up in the fourth quarter, and management has indicated that almost all the account which were any of the problem they have recognized in the fourth quarter too. So that's why what we are clearly seeing that on a sequential quarter basis, this will be improvement on a quarter-on-quarter basis. So nothing much to worry on that front. But yeah, how the things has progressed for these two portfolio will be important to watch.
Okay. What are your expectations with respect to where it comes to your net interest income? Analysts are suggesting a growth of around 24% on YOY basis and 34% QOQ basis. Do you also agree with this kind of number?
Yeah, broadly it is in that, and it is very hard to project also on quarter-on-quarter basis the NI, because there was a large reversal of the income in the fourth quarter. So if suppose some more account goes to NPA because of this two sector which they have a fairly large presence and is under stress, then we may see a disappointment on that front. But otherwise, I don't expect on NI front any major disappointment. And my numbers is also in line with the industry estimates.
Ashutosh, the other quick question that comes to mind is that if IndusInd can't deliver a surprise, but if they show chinks in the armor, this small bounce back that we've seen from those erstwhile lows, is there a possibility of those being revisited, or are those days a thing of the past?
So if you look at connect the dot last few months, the way things are panning out, like RBI has allowed Hindujas to appoint 2 more board of director. We all are buzzed with this is his name of now MD and CEO who is going to come up there. If you look at the business model of the IndusInd Bank in a declining interest rate scenario, they are very well placed. So I don't think any major correction in the stock from here. If clarity came and the current valuation at which it is trading at, probably some more upside can be from here.
Okay. Okay, Ashutosh, thank you so much, for taking out the time and giving us those insights. We'll have to wait and watch out for as to how the earnings pan. It'll be an interesting set of numbers to watch out for. As Hiral was mentioning, net interest income is expected to see a growth of around 24%, operating profits at around 41%. This is YY basis, and overall provisions also expected to see a good rise, but advances will decline around 3.5% and deposits will remain flat as the kind of expectations right now. But sticking with the banking space, Tamil Nadu Bank is another counter which is in focus, came out with its Q1 earnings. The stock is down 1% as we speak. But to take this conversation ahead as to how the quarter is panned out and how FY26 is shaping up for the bank, we're joined by Seli S. Nair, MD and CEO of Tamil Nadu Mercantile Bank, joining us now. Mr. Nair, very good afternoon to you. Before I move on to company specifics, I just want to get a sense overall, your view as to the way the entire quarter is panned out. What were the hits and misses according to you?
Yeah, thank you for having me on the show. The quarter has been a quarter of stabilization. I think that's how I read it, because when I look at some of the numbers that we have delivered, particularly the business, I think business growth is something that we have been trying to push for some time. And deposit in particular, when we look at it, year on year, particularly the deposit side, the pace of growth, we have nearly doubled. It was 4.64% in the first quarter of last year. Now it is at 9.38%. So we are trying to push the growth back into the deposit space without impacting significantly on the advances side. Advances also, if you look at it, the growth year on year is 10.44%. I think so. Both the deposit and advances, the first quarter, very clearly this bank has delivered, and that gives us the confidence that typically first quarter is the quarter where a lot of disruption happens, and a lot of disruption particular to GMP, because we have put in place a lot of initiatives, particularly on the IT side, which is sapping some kind of a managerial bandwidth in that towards that. And despite that, to deliver this kind of a number, this kind of a growth on the business side is something quite satisfying for us and gives us the momentum to look for an accelerated growth in the coming quarters. I think on the other side, when you look at the financial performance itself, the profits, I think we have delivered 6% plus of profit. And that too after upfronting, what we call performance-based incentive that normally we amortize it across the year, across the quarters. We have taken the whole thing, we have upfronted the whole thing in the first quarter itself. So that is 41.27 crores that we have taken. If you look at the first quarter of last year, the amount was just 8.74 crores, which was essentially it was amortized across the quarter. So that is something that we have taken upfront. And that, if you look at it, has impacted the operating profit, but I'm not worried because, and also the net profit, like I said, this is something that, should do us good in the coming quarters. The confidence for taking this upfront came from the fact that our slippage ratio was just 5 basis points. We were able to contain the slippage ratio to just 22 crores. So that, which means the credit cost came down to just 6 basis points. So that gave us the confidence to take the PBI, the cost of PBI upfront. So 6% plus profit on the riding on the fact that we have upfronted the cost and the growth coming back, and which should see getting accelerated in the coming quarters, is where my satisfaction on the first quarter performance comes from. Yeah.
Naya, good afternoon. So can you give us some color on that particular piece, which is the kind of growth that will come in for the next few quarters?
See, we are doing a lot of initiatives on the MSME space. If I'm looking at the advances first, a lot of pieces on the MSME space. We are looking at appointing a lot of relationship managers, credit analysts. And apart from that, in the first quarter, we spent a lot of effort and bandwidth in training them and getting them skilled in managing the portfolio. Apart from that, we have also we are also putting in place a platform, a tech platform, a loan management system, which and also a BRE, business rule engine. Incidentally, the business rule engine is something that we have already completed. The risk modeling that is embedded in the BRE has been validated. Now we are in the process of getting that embedded into the LMS, the loan management system. And the loan management system itself, the implementation is on, and the phase 1 should happen by September, I think, sometime during September. And the skill set that is being developed and the technology put in place, I think should give us some real growth on the MSME, even in the second quarter and certainly in the second half of the current year. So, and we are also already seeing that, the relationship managers panning out, the credit management centers that we have put in place in Thoothukudi on a pilot basis, and, on the leadership that we have appointed in the other regions are already having an impact. First quarter, I may not have a significant growth, or it's almost a flat quarter as far as MSME is concerned. But from June itself, I can see the numbers moving up in terms of a healthy pipeline. So that gives me the confidence. The second quarter, MSME is going to do well. And going the second half, I think that should get accelerated. Incidentally, we have, our own, apart from the retail, we do have a sizable loan under the jewel, what we call the gold loans. I think that's about 40% of the book. And that's also delivering us some good results. And the yield, from that is quite substantial for us to maintain, improve on the yield, the NIM as I see it going forward. So both your gold loan holding ground and the MSME getting back into shape, and the retail. Incidentally, we have also sourced a new loan origination software which is aimed at the retail segment. So all the three firing, which I expect to happen more in the third quarter, I think we are looking for good times on the advances side. And deposits also, we have taken quite a few initiatives. If you look at it, right, last year we have seen a slide in the CASA ratio.
Right.
It was almost 3%. And the first quarter, I did mention to your viewers and to the investor community at large that several initiatives are being undertaken in the deposit side, right, particularly focused on CASA, where we put in a transaction business group.
Right.
And in the first quarter, we also launched our elite services group.
Right.
So that these two combo is sort of beginning to show some results, and that is where I see a year-on-year growth of 4.51% against the negative growth last year. So even the CASA, I think, beginning to show some results, and the CASA share, as I speak, I think it is up 34 basis. So from after hitting 26.44%, it is up 34 basis. So I think some confidence is coming back to us in that performance in the CASA, and the term deposit always has been generating some growth.
Right. Got it, Mr. Nair.
Yeah.
Got it. Thank you so much, for giving us those detailed answers, and thank you so much for taking our time and speaking with us at NDTV Profit. Now, shifting focus slightly, important update from Jammu and Kashmir. 3 terrorists have been neutralized in a high-stakes encounter on the outskirts of Srinagar in a joint operation dubbed Operation Mahadev. The Army, CRPF and J&K Police launched a swift offensive in Lidwas and acting on precise intelligence inputs. My colleague Shiv Arur joining us with more details on this.
What the Indian Army appears to be doing as part of this update is, it says Operation Mahadev update. 3 terrorists have been neutralized in an intense firefight. Operation continues. Very, very interesting. Let me decode what this means. 3 terrorists being killed. We are hearing categorically from the ground and from the J&K police that these are HVTs. HVT means high-value terrorists. What does high-value terrorists mean? Terrorists who have been definitively linked to previous terror attacks or have been pursued by the security forces for a significant period of time, who have a bounty on their heads and who have been evading the security forces for a while now. We don't know just yet. This is all very tantalizing because it comes 3 months after the Pahalgam terror attack. It has been one of the most grueling and difficult terror hunts by the security forces, a blend of the Army, the CRPF, the J&K Special Operations Group and others, including the intelligence agencies and special forces. We are awaiting a categorical confirmation now on whether these HVTs belong to the Musa gang of the Lashkar-e-Taiba or the TRF. I hate calling them the TRF because they are, after all, the Pakistan Lashkar-e-Taiba that were involved in this particular terror attack in which 26 people were killed. So the next step after a confirmation of this kind would be the identities of the terrorists, which group they belong to and which terror attack they were responsible for. Whether they are the Pahalgam terrorists, we will know once the Army confirms.
Thank you, Shiv, for breaking that down for us. But with that, it's time to slip into a very short break, but we'll be right back on the other side, so do stay tuned.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research.
Welcome back. You're watching India Market Close, and it's that time of the show where we get you all the chatter from the dealing room. I don't know if the chatter's turned into a whisper, considering that the market mood is quite muted. Samit, what are you hearing?
Well, as the market mood is quite muted, but there is stock-specific action that we always see. And today, firstly, it's SBI. Dealers are indicating that there are buy flows on institutional desks. Both foreign and domestic institutions have been buying this counter at lower levels. The price also, if you look at for SBI, it's way below the QIP price. The bank had raised around 25,000 crore at 817, and the stock is now trading below 800 rupees. Second stock on the list is Sterlite Tech. There are buy flows on large HNI desk, and this has been triggered after the company's strong management strong commentary that has come in on order wins. So the outlook for order wins is quite strong, and that has triggered this rally, and HNIs have been lapping up this counter. In fact, if you see at the opening trade, the stock was just up 1%. It is after 10 a.m. that we have seen such kind of spike when it comes to Sterlite Tech. Second stock on the list is GAIL. Now there are high sell flows on this counter, and dealers are anticipating that most likely the numbers will be pretty much in line with what the street was estimating, but there could be a cut when it comes to the volume guidance number that the management has given, and that's the reason the stock is down 1.5% before the numbers. For Mankind Pharma and Exide, there are sell flows on institutional desk in trade today in anticipation of weak Q1 earnings. Godrej Properties is another stock that has been under pressure in trade today on anticipation of a block deal. Now, a foreign investor who had put in money during the QIP, which was done a couple of years back, will look to exit, is what dealers are indicating. Hence, the stock is down 5% in trade. And lastly, when it comes to Lakshmi Dental, Bharat Rasayan and Hind Rectifiers, dealers are indicating that there are buy flows on HNI and PMS desk in trade today.
Okay, so stock-specific action is where it is, and where actually the action is so negative that you should hope for some stock-specific action. And Kotak Mahindra Bank is the big shocker. I mean, I know the numbers and the commentary was a little negative, but I don't know if it deserves a 7.5% hit down today. Same likewise for Lodha. Otherwise, on the face of it, seemed like good numbers. The mood has turned a bit somber, Neeraj.
Yeah. And maybe in Kotak's case, it's got to do with the fact that when the update came in, the stock really zoomed in trade. So is the market given an equal and opposite punishment now that the quarter is look weak? But yeah, buy your point on Lodha, buy your point on a lot of other stocks today. The only question is, Tamanna, are we coming to a point wherein the risk reward is not in favor if you go short from the current levels? I mean, let's figure that out with our experts on the show. Meghna Malkan, wealth mindset coach and author Johnson right now with her sense. Meghna, good having you. Thanks so much for joining in. What's the risk reward, Meghna, in the market currently for somebody who is wanting to initiate fresh trades, either on the long side or on the short side as well, after we having corrected nearly 750 points?
Hi Neeraj, very good afternoon. Thank you very much for having me over. I believe both Nifty, Bank Nifty, broader indices seem to be on a retracement zone. So for someone who's already in, let's talk about that scenario, I think should work with very strict stop loss on the support zones. And the support that I see, Nifty could correct up to around 24,400. That's the level I see on Nifty. And when it comes to Bank Nifty, looks like around 55,000 rough on Bank Nifty. For someone who is sitting on the sidelines wondering whether, to get up some position into the market, I think it's a wait and watch situation. Wait for the current retracement to take hold at these support zones and then think of entry.
Meghna, hi, Tamanna here, and good to speak with you as well. Just trying to understand on Kotak Mahindra Bank, after the kind of hit that we have seen, some might say outsized, do you see an opportunity here for accumulation?
Hi Tamanna. Not as of now, I would say on Kotak Bank. A lot of technical reasons for this. First of all, if you pull up the weekly chart, after a very long time, it seems to have reached the 20-period moving average. It's trading below the 20-period moving average right now. The momentum is extremely weak. I mean, the candle is not yet over. We are just beginning the week. But this itself says the bears have taken control right at the beginning of the week. So I would say this is a breach of quite a medium-term support, I would say. So I would rather wait for it to see where it is going rather than take a call. A very important level of support that I'd be looking at is around 1900 level, honestly. Below that, it would turn even the monthly charts into a very bearish zone. So I would stay out of Kotak right now.
Yeah, so 1900 is where you start seeing some comfort. If I were to ask you this question on TCS, the other sort of stock under pressure, but not as much as we started out with, TCS and maybe add a Wipro as well.
Yeah, TCS, I think it's a knee-jerk reaction because of results. But overall, even the higher time frame chart seems to show intense weakness. So TCS is something, again, I would, in fact, TCS is something which, if it comes to the moving average on the weekly chart, I would look for shorting opportunities because the momentum has gone inherently weak. So that is something I would look at. And if I open the Wipro chart, technically, Wipro seems to be on the same zone. It's just that hanging around a very important support zone on moving average on the monthly chart. But I wouldn't think it's going to take a lot of pressure from the bears to put it down. So this one I would stay away from as well.
Okay. And Meghna, in light of such a view on the markets, what are the ideas for this afternoon?
So I like the two sectors that seem to be pretty confident right now is the pharma sector and the cement sector. Pharma by default, when markets under retracement, pharma seems to be doing well. PPL pharma is something that I really like in the pharma sector. Technically, it's good. Momentum on the weekly basis is good, which gives me good confidence. You can buy with a stop of around 200 for targets of 220, 235 on the higher side. Second one that I like is from the cement sector. That one is Ramco Cement. That seems to be good. Monthly charts do look good. And what I love about Ramco is the volumes that are building up with bullish candle patterns. So Ramco is again a good buy with a stop of 1145 for a higher target of 1230.
Well, the risk reward on Piramal, viewers, is extremely favorable because Meghna is keeping a very tight stop loss and the target's some distance away. So keep an eye out for that one. And I wonder if it's got to do with the fact that the CDMO companies are clocking in good numbers and the reactions showing on those stocks. Siddharth Khemka joins in here. He's the head of research wealth management at Motilal Oswal. And Siddharth, I'm tempted to ask this to you, right? Because of the fact that Piramal is coming in the list of buying on a day like this. Laurus is trading at life highs after the results that have come out. What's happening with these CDMO companies? Are you constructive here or have they done up a bit too much too soon?
So good afternoon, Neeraj. Yes, glad to be on the show. I think within the pharma space, which is one sector which has shown a lot of resilience in the current volatile market, there are two segments which clearly stands out. I think A is the CDMO players, where we are seeing very strong earnings growth delivery, and the other is the healthcare, or you can say the hospitals, which are again showing strong growth in terms of numbers. So we are definitely very constructive and positive on the CDMO companies, including the likes of within the large caps. If you say you have DVs, but in the mid cap space, Laurus, we still have a positive view. We believe that the strong earnings growth trajectory could continue in FY26, FY27 as well going forward. We believe that earnings growth could be in excess of 60%. Hence, if you see, there are products, so the new commissioning of Vizag plant, enabling of higher margin of opportunities. So those kind of developments, plus the robust execution in the CDMO, I think, which is still 31% of the overall sales for Laurus, where you have strong growth. that is contributing to the overall momentum. So we continue to remain positive on Laurus. We have a target of 970 out there, but I think with the earnings growth continuing to be in the excess of 50-60%, there could be even further upside to a name like Laurus.
What about her walk hard, Siddharth?
So Tamanna, Wokhart, we don't have coverage, but again, good strong numbers. We are seeing improvement on a quarterly last 2-3 quarters, but unfortunately don't have it under active coverage.
Nevertheless, I mean, Wokhart today come off its highs, but exciting news in terms of Zenic really coming in as a blockbuster miracle kind of a drug. You know, let's get a technical view also on Wokhart right now. Malika with us for more on that. What do you make of Wokhart? Okay, we'll try and get that line sorted. Let me go across to Puneet right now for stock of the day. We're talking about car trade right now, and that stock is completely surging. What's working for it, Puneet?
Well, the company did come out with its quarterly earnings today, and it's again been a quarter which has exceeded expectations, as well as really strong commentary for its OLX vertical. So let's first look at the key numbers. Revenue was up 22% in this particular quarter. That has of course been led by strong EBITDA as well as profit. So EBITDA is up 98% in quarter one. Profits as a subsequent is up 92% as well. The other key aspect is the all three verticals have been firing really strongly, both on revenue as well as on profits. If we can load up the table really quickly on that, the revenue growth for the consumer business is up 32% in this particular quarter. Remarketing is also up 36%, while OLX still finding its feet after its acquisition by Car Trade is up 12% in terms of revenue. But when you look at the profits, and this is where the real story is, 70 to almost 258% of profit growth for all the three key verticals, and the subsequent turnaround in OLX is what the company had mentioned in the last couple of conference calls as well. Let's also look at some key highlights from what they mentioned in the OLX business in this particular quarter. They've launched the Elite Buyer program, something that they promised in the last quarter. They're also looking to have multiple new launches in OLX in this year. So they're having 3 more by October of this fiscal year. And this will enhance the company's total addressable market, not just for used products, but across that category as well. The other positive for OLX was, which led to the 71% growth in terms of profits, was costs which have started to subside now. So ESOP costs which were there in FY25 have disappeared, because these are ones which were vested in 2020 and 2021. The OLX's market share has also inched up to 37%, and that's for used products specifically. So that's actually a key positive, because of all the used car market, 37% of market share is now resting with just one company that's also listed. So that's one key benefit for car trade overall. The other aspect that they mentioned is slowdown in the car industry. Now that's actually hasn't hampered the classified industry. So they've actually had 7% growth in this time, despite a 1% drop in car volumes. And finally, in terms of new growth areas, they're looking to go into the real estate space. That's the second largest category now created after auto. They've already had some product establishment, but essentially it's the new searches within the auto as well as real estate that's benefiting the company. So overall, really strong numbers. Another quarter where they've beaten estimates, and going forward with new product launches in the OLX space, that should help the company going forward in terms of growth aspirations for car trade as well.
What a jump in for car trade, and actually it's quite heartening to see platform companies start talking about profitability in better numbers as well. Thank you for that, Puneet. Meghna, if you can hear me, just come in on car trade, and earlier I asked you about Wokhart as well.
So car trade, definitely, it's got a very big monthly breakout, and of course the volumes have been above average in this month's bullish candle. It's clearly a breakout, it's a little breakout trade. Risk reward ratio as of now, it's really far to have that kind of risk. I would believe mid candle range, which is around 1940 to 1960 is the zone where you could be looking for buying opportunities. So that is one on car trade. And when you talk about Wokhart, yes, similar to all the pharma companies, even Wokhart is on the monthly chart, it does look good. But if I have to compare a work hard with Piramal or something like the one that we just discussed on the pharma side, I think the other ones are way bullish than work hard. There seems to be a little bit of indecision when it comes to monthly chart. The candle patterns somehow seem to have a bearish shadows, that's called the supply shadows. The volumes are getting a little dry at the top. So that is something I would not choose if I have the other pharma sectors, stocks to choose from.
Okay, so what would be, then let me press on that. If you not choose Wockhardt, what would be your top pharma pick right now?
That's what yeah.
Good.
Well, because she just gave it today as a trade.
Okay. So Piramal Pharma, is that it? The start and end of the
Piramal
pharma list?
Pharma, yes. PPL Pharma is a much better than Wockhardt, yes.
Okay, Piramal Pharma it is as one of the key picks over there. But, I just want to get Siddharth Khemka in on the kind of, I would say, negativity around banks and NPAs right now. We're going to wait to hear from IndusInd today, and that's going to be the big one, Siddharth, considering a lot of issues. With IndusInd, it's a whole Pandora's box. So I don't want to be glued to that, those numbers and any commentary if there is from the management. But in terms of what you've seen with Kotak Mahindra Bank, let me expand it to BFSI space, SBI cards, Bank of Baroda was relatively okay. How are you looking at that space right now? Do you see it with a bit of concern?
So yeah, Taman, I think some of the banks, larger ones, have already announced the numbers. I think SBI is the one which is still left. But clearly the indication is that there is some stress definitely in the industry in terms of asset quality. We heard that from Bajaj Finance. We also heard that from Shriram Finance. So some of the NBFCs, I think they are clearly facing that struggle. What looks decent is that if you look at the advances growth as well as the deposits growth, I think what we were expecting is at about 8-9% of advances growth in the system, and that is a decent number to look at in this environment. Deposit growth, some of the larger ones have managed to do that. ICICI Bank clearly outperformed in terms of advances and deposits growth. HDFC has been focusing on that deposits growth in the last 2 quarters, advances mid-single digit, but definitely a lot of focus on deposits growth. So these are the two ones which we feel in the current environment they have managed to report steady asset quality control and healthy business growth. Apart from that, Axis, I think pretty weak numbers. Kotak also, the elevated provisions led to some decline in the profitability. I think advances growth was decent. So that is something we believe that over the next few quarters, Kotak might see some improvement. But for now, the focus clearly within banks is with ICICI, which has consistently reporting outperforming numbers. And the second one is HDFC, where we are seeing the efforts and focus to drive deposits growth to bring down the costs of funds. That is really working out. So within banks, remain very selective, and the larger ones prefer HDFC Bank and ICICI Bank.
Okay. Now, numbers were flashing on your screen. Adani Green, decent numbers. I think the revenues are up 60%. EBITDA numbers look strong too, and as a result of which that stock too has moved up. Net profit up 60%. In fact, revenues up 36. Excuse me, but the net profit is up 60%, and the stock revved up a little bit in trade. Watch out, margins came off a little, but with these companies which are trading at such high margins, usually 4 or 5% dip here or there gets taken in its stride. I think the revenue growth numbers is something that would have maybe pleased the street a little bit. Wonder if you look at some of these green energy companies, Siddharth, fundamentally, Adani Green, and if not Adani Green, any other in this space?
Yeah, I think Adani Green, we don't have coverage. Suzlon is something that we have been covering quite recently. I think overall this green energy space looks interesting. There is a lot of focus from the government, a lot of order inflows has happened. And if you look from a global perspective, what has changed since Trump has taken over is that within the overall renewable energy space, solar, which was a key export focused products, that kind of struggled with the sentiments changing, with US saying that they are looking more at the traditional fossil fuels and not at the renewable energy. I think some of these domestic focused companies especially on the wind turbines, wind energy side, that continues to do well. Even we saw the earnings from the likes of Wari and Premier coming out pretty strong. So I think the overall renewable energy theme looks decent. And while we don't have much coverage there, Suzlon is the only one where we have a coverage. We see strong earnings growth there, and hence we remain positive on this entire space.
Okay, stay on with us. Just let's take a look at some of the buzzers at this point that are buzzing on for various reasons, and among them earnings. Well, by buzzing, I mean either moving up or down or showing massive movement, because Zentek, GMDC and SAIL among others on that list. Yes, Vansh?
Right, so quite a few disappointing numbers today. So let me start off with Zentek. Now the company has an order book of around 750 odd crores, and the management believes this to be a temporary adjustment phase, and the company targets a cumulative revenue of about 6,000 odd crores in the next 3 years. If we talk about the results, the revenue was down 38%, EBITDA was down 42%, and the margins were at 40.9% versus 43.7%, and the net profit was down 37%. So clearly a disappointing numbers on all parameters. Second on the list is SAIL. Now the company has missed the estimates. There has been a significant decline in the net profit, and it has been dragged by the increase in the stock trade expenses. If we talk about the numbers of the company, the revenue has been down 11%, EBITDA is down 20%, margins have shrunk to 10.7% versus 11.9%, and the net profit is down 40%. Also, Morgan Stanley has came up with a note on SAIL. The brokerage expects the realizations were higher than the expected, and the raw material cost and other OPEX costs were also higher than the expected. Third on the list is GMDC. Now stock is already down 5% in trade. They have also missed their numbers. There has been a slight cut in the margins. The profit has been declined by the revenue, and there has been a decline in the lignite sales volume on a sequential basis. If we talk about the numbers for the company, the revenue was down 7%, EBITDA was down 12%, and the margins were at 23% versus 24.6%, and the net profit was down 27%. So these are some of the buzzers that are reacting on the negative earnings in trade today.
Okay, well, that's a rare earth play, but come off very not really very strongly. I mean, Kotak Bank is 7%, so all the others falling about 3-4% is not really a very strong downtick, but a downtick nevertheless. Okay, moving on to what is arguable. I mean, actually, just wondering, Meghna, do you have a view on maybe a stock like GMDC, which is down about 4% today? It's being touted as one of the key rare earth plays in India, right? So the long-term charts may look good. What about the short-term?
Well, I would start with medium term first. The medium term doesn't look bad actually, because if you see the recent trend, right from 2024, it's managed to move over the moving average. It's managed to touch the upper band, the volatility band is called. And that is an indication that the medium term trends have turned. Now, if that being in the positive zone or in the side of the bulls, I think daily or every dip is an opportunity to buy. Moving average supports are usually considered to be good supports, but considering the strong reaction that the stock seems to be giving, I'd rather wait for a stronger retracement to around 375 levels. That should be a good zone for me to have taken a support there. And if I do get bullish candle patterns at that zone on the daily chart, that would be a good indication to get in on the long side.
Since you talked about rare earth, the Finance Ministry's monthly outlook is here, and there it has a mention on rare earth as well. It says, according to the Finance Ministry's latest monthly report, India has its task cut out, is what it says, amidst momentous shifts in global supply chains in the area of semiconductor chips, rare earths and magnets. As the world restructures its sourcing of critical technologies and raw materials, India's ability to position itself in these strategic sectors will be crucial to sustaining long-term economic growth and resilience. Just in terms of hint of how serious the government is going to get on rare earth, that's an important one. It'll take some time for it to really fructify, but definitely one space to watch.
Most certainly. And Like we said, the short-term blips notwithstanding, the long-term trajectory, India would certainly want to be, as would any country, not want to be too dependent on any other external nation for this. Okay, time now for the bull and bear segment, and that too is something to watch out for today. Well, little surprise, it would be one of the top contenders for the bull versus bear space, and that's Laurus Labs, because it's posted third consecutive earnings beat this quarter. But do valuations become a concern? Are there other concerns? Varsha joins in to present a bull and bear case on this one. Varsha.
Well, thank you so much for that. So as you rightly said, third consecutive earnings beat, which is led by CDMO. Now Laurus Lab is finally, on track. Investors were expecting, investors were waiting, for Laurus Lab to set a good set of numbers, and finally, it's the third quarter where they've beaten the estimates, and this is led by CDMO, which has grew more than 100%. And over the medium term, they are expecting CDMO to contribute almost 50% to the overall revenue from 33% currently. That's huge. Now, this coupled with overall revenue growth of 31% and a massive 13x of jump in profit signifies successful strategic diversification into high growth and high margin areas. But API business, ARV business, if you see, saw a decline. ARV business was down quarter on quarter, 19%. So this is one of the key highlights when it comes to concerns. And overall generics, if you see, still dominate, contribute 67% to the overall revenue, and volatility or weakness here can significantly impact overall performance. But they've achieved substantial EBITDA margin expansion to 24% from 14%, and this expansion in margins plus management's guidance when it comes to, they have revised their guidance upwards when it comes to gross margin significantly, determines operational efficiencies, product mix, better product mix, and benefit of operating leverage that is being playing out when it comes to Laurus Lab. But their bio CDMO, if you see, have experienced 33% degrowth due to customer specific issues and pricing challenges that the company has seen. So one of the disadvantages that the company has. But also Andhra Pradesh government, so this is today's news and also one of the reasons why stock is buzzing apart from earnings. Andhra Pradesh government have allotted 531 acres for establishment of Laurus Pharma zone. But as Neeraj was highlighting the valuation concern, the stock is trading at a PE of 95, leaves no margin for error, I would say, and this means any slight miss in future performance could lead a significant stock correction. And that's the reason, if you see, though DAM Capital has given a buy rating, but a few of the brokerages have pointed out concern, like despite the strong Q1 results, some leading brokerages like Goldman Sachs have rated with a sell rating, and even Jefferies has also remained cautious when it comes to Laurus Lab, considering the valuation picture that the company has seen. So overall, good set of numbers, but yes, if any slight miss when it comes to numbers, we may see de-rating in the stock.
Okay. Meghna, thank you so much for speaking with us today. Siddharth Khemka, of course, continues with us. Laurus Labs in focus. We spoke briefly about Laurus Labs and Wockhardt as well. Siddharth, is pharmaceuticals and that space something that you're looking at very, very clearly right now with CDMO players on the top of the line?
So definitely, Taman, I think there is one overhang that continues is how the US tariff that could come on the entire pharma space. But I think again, coming back to the pharma, I think that is one sector which is most resilient in the current volatile environment on back of the healthy earnings growth that they are reporting. So CDMO continues to report strong numbers. We are also seeing strong numbers from some of the biologic companies, including the like of Biocon, where we are expecting steady earnings growth over the next 2 years. So yes, some of these stocks have moved up, even Laurus after the sharp up move. I think fresh entry should be taken on any dips or accumulate at lower levels, as the risk reward may not be that favorable. But on back of that strong earnings growth that continues, we believe that pharma, especially some of the CDMO players, the biologics companies, that should be in focus for investors.
Okay, stay on with us, Siddharth. We'll take a very short break. We'll come right back with what your closing strategy should be. Also, a very heated debate going on in Parliament right now with the Defence Minister answering on Operation Sindoor. We're coming back with all of that after this break.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IDFC CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IDFC CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and
welcome back. You're watching India Market Close, and some so-so numbers coming in for Bharat Electronics. Remember, defense pack has been under pressure. Bharat Electronics, actually, on the face of it, doesn't look half bad because your margin number is good. Net profit at 969 crores, a tad above estimates. That is NDTV Profit estimates. Revenues are below estimate, 4,440 crores. Margin number shows a bit of an improvement there. EBITDA at 1,238 crores. So a bit of a climb up on the stock as it's come in, but margins have come in at 27.9%. So that's BEL for you. The other space that we're talking about in the big story that we're really tracking through the day is TCS's move to cut 2% of its workforce. That's close to 12,000 people. The stock has taken a bit of a beating. So has the entire IT pack, which could be for more reasons than just this. But it's a story which is important to understand in terms of, is this a tectonic shift that we're seeing? Is this just the start of IT cuts that we could see? CP Gurnani joining us for more on that. He's, of course, a veteran of the space. Mr. Gurnani, thank you so much for speaking with us here at NDTV Profit. And, you know, since the morning, a lot of speculation on whether this is AI driven, whether this is just profitability, whether this is trade, tariff, global economics playing out. What do you make of it?
Easy answer is all of above. You know, because we all know geopolitical environment. We all understand that AI has now reached a maturity cycle, and we are looking at deployment of AI now in enterprise also. And number third is clearly every company goes through a periodic optimization cycle, a periodic appraisal cycle. So my belief is that it is all of above. At this stage, I'm quite optimistic about the future. The reason I'm optimistic is because overall, organizations do need to adopt to technology. And technology means we will be focusing a lot more on applications, lot more on productivity, lot more on use cases. So while the structure of the deals will change, the business models will change, but I think companies like Tech Mahindra or TCS will remain in demand. And frankly, when I did my startup Ionos, it was clearly to look at more vertical focus, more deployment. That's why AI on OS, more vertical focused and more AI focused. So I think industry has gone through many tech cycles, and they will go through this also, and they will come out smarter and better.
No, the industry will definitely come out smarter and better, Mr. Gurnani. The concern also is on what is going to happen to the people who are working in that industry. Since you are so ingrained in how AI can streamline operations, the picture after AI, and we're already in it, frankly, does it lead to a much smaller number of employees in any scenario?
You know, we have all embraced technology for a reasonably long time. So it is not that AI is new. We do believe that new jobs will also get created. And for those new jobs to be created means I need to become an impact player. To become an impact player, I need to make sure that I am more relevant for the future. So as long as I continue to hit the refresh cycle, I continue to, do some of the courses on my own, I think I will remain relevant. And if I am relevant, I am an important player in the company.
Mr. Gurnani, Neeraj here, good afternoon. If IT companies go about and take some of these cuts but become efficient by a use of AI, I mean, my question is over a 12 to 18 to 24 month period, could this actually be constructive? Efficiency, maybe better margins, lower bench strength, but maybe equal or higher revenues. Could all of these be possibilities?
I think all of us are embracing new business models, which effectively means output, outcome based pricing, number one. Number two, more products and platforms. And number three is, do most risk reward pricing. So, yes, it does mean that if we do it well, if we execute well, then as a strategy, this is a beautiful strategy. That means we will get compensated for business results, and that really means is that we will be able to get higher margins. Now, number two, does it really, translate always in productivity efficiency? I think more important is that how do I, take my assets and convert them into reuse? Because a lot of productivity efficiency really depends on if I'm able to run it like a utility and if I'm able to run it efficiently. So I remain, as I said, not only optimistic, but I think I'm bullish about the industry because most of us have started adopting itself. Like, for example, during my tenure at Tech Mahindra, we created a new product, the company called Comviva. Comviva was all about in telecom being able to give platforms, which I know is doing very well for Tech Mahindra, but we anticipated and hence we innovated. And I genuinely believe that you would find similar nuggets in every organization. Right. Time has come to accelerate on these product
will
platform
others
business.
also cut cost heads and cut employee strength after TCS, in your view? Do you think it's coming?
I cannot speak on any other company's behalf, but yes, there is a potential for better upskilling. There is a potential for more, relearning, because when I look at the open job positions of very many companies around the world, I do realize that data scientists, AI engineers, prompt engineers are still in a big demand, and it is for us to now reorient ourselves and become better. There's no point in becoming a testing engineer today. A testing engineer, as we all know, that job could get automated.
No, fair enough. Thank you so much, Mr. Gurnani. Always a pleasure to speak with you. Welcoming now on the show Akshay P. Bhagwat of JM Financial and Sameer Dalal of Natvarlal and Sons. Let's get a quick, fresh perspective, just 15 minutes odd before markets are closing for the day and what has been truly a painful day. Akshay, first, your take on the charts.
Good afternoon. So it's the third, fourth day of consecutive selling, and even the data numbers from the FIA index futures are supporting the sell side. We have broken an intraday short-term support of 24,800 that puts the Nifty index on a weak footing for the short term, and that opens up possibly for downside targets till around 24,500 to 24,550 zone. So yes, some more pain to go. Probably there will be some buying intent once you reach the support zone of 24,500 to 550 zone. I would say let's wait for that dip before you get into fresh trades on at least on the index buying side.
Are you buying any stocks, Akshay, or selling any stocks on the short side? Anything?
Still comfortable on the buy side of trade. Selectively, we are looking at pharma names because a lot of momentum right now is chasing the pharma sector. And pharma, if I were to name a particular stock, it is Glenmark Pharma, which I believe has yet not caught onto the momentum band, considering the fact that majority of the pharma names already have moved by around 3-4% in the recent last 4 to 5 trading sessions. So if you look at the chart of Glenmark, there was a very strong gap up opening a few trading sessions back. It is consolidating, but the broader technical price setup makes me believe that 2300 and 2350 are the short-term trading targets in the making. So you can buy Glenmark Pharma with a stop loss below 2050. And second trade trade would be in the private banking space, which is ICICI Bank. This stock has seen a range breakout after a positive set of numbers came in. That was 4 or 5 trading sessions back. This breakout was seen at levels of 1460. So a very strong technical setup for ICICI Bank. And my belief is that 1520 and 1540 would be the two targets in the making on the short term. So I would be buying ICICI with a stop loss at 1445.
Okay. Samir Dalal also joining us from Natvarlal and Sons. Samir, very good afternoon to you. First, let's just start with the market view, because market mood seems very somber. What, in your view, is the prime concern over here? Is it the kind of corporate results that we're seeing? Is it a lack of a trade deal? Is it IT and banking both not being able to hold up? What is it?
So I think it is the trade deal plus the poor results that have come in. Surprise negative results from Kotak Mahindra Bank, which kind of put a bit of worry. A couple of the other private sector banks' results have been a bit disappointing. That kind of has put a lot of worries that going forward, given the fact that the NPAs are rising in the microfinance, is that going to be something that creates a problem going forward? And then trade deal, imagine countries all over are signing them. We haven't been able to, starting 1st of August, if our tariffs move up, businesses that have taken orders are either, if they've not been able to ship them off in time, are going to start facing problems when it comes to their payments, and or future orders become questionable. So that affects the future growth as well. So it's a whole combination of things. Valuations were not cheap in any which way. What you also mentioned is IT is correcting, and that was simply, I can't argue what Mr. Gurnani was saying because he's an expert of the industry. But I still believe that growth of anywhere between 3 to 5% on the top line and 7% to 8% on the bottom line does not warrant valuation multiples where they're trading. So, it's the combination of everything that's leading to this correction. And then lastly, what you are seeing is, from over the last few days, you've seen FIs continually pulling some money out of the market. There's been some news flows that emerging market, especially India dedicated funds, are seeing an outflow. So that too is adding on to the pressure points. And then you have such a huge lineup of IPOs. So liquidity is going to get sucked out even more. So, it's like a whole bunch of things hitting at together. And that is why we are seeing a correction.
Okay. Well, and a serious corrective move into select pockets, particularly defense and real estate in the session today. So bear that in mind. At the backdrop, of course, India's infrastructure story gains momentum. Adani Ports is emerging as a key player in that transformation because Cantor Fitzgerald believes so, and they've initiated coverage on Adani Ports with an overweight rating. Mahima Johnson will tell us more about that. Mahima.
Right, so as you rightly mentioned, Cantor Fitzgerald has initiated overweight with a target price of 1780 for Adani Ports, which is almost a 28% upside from its current market price. Now, the key drivers behind the rating includes forecast of mid-teens growth in revenue, EBITDA, as well as cash flow by 2029. They're saying that the target price is based on valuation of 16 times forward 27 estimates EV to EBITDA and a DCF of cash flow through FY36. They expect potential special dividend by 2027, and this will be on the back of strong free cash flow as well as low net leverage. Revenue, EBITDA and operating cash flow have grown at a 20% CAGR over the past 5 years is something that they're liking. Business outlook, they're saying that company is well positioned to benefit from India's underdeveloped trade infrastructure and aims to double port capacity by 1 million metric ton by 2030, supported by government policies. Logistics volumes expected to grow by 5 times by FY29 is something that they're penciling in. And lastly, marine services targeted to triple revenues by 2027. FY2027 is what they're saying. So this is the overall view as to what makes them bullish on Adani Ports.
Okay, but well, that's not all, right? Because we are also awaiting some key results. Mahima, and Asian Paints is that big consumer company in focus.
Right. So basically, it's set to host its earnings tomorrow, and it could come anywhere, any time in the market hours. A few expectations where it's going to be yet another disappointing quarter for them because demand has not picked up, and that's something that's going to hurt overall its earnings. Revenue is expected to be flat at the 8,988 odd crores, and revenue also may see a fall of around 2% to 1657 crores. Margins may fall slightly to that 18.4% mark, but still within the guided range of around 18 to 20 odd percent. Net profit may see a fall of around 5 odd percent. So muted set of numbers overall. In terms of what to expect, well, urban demand to remain under pressure, but the commentary is going to be crucial because we'll have to see whether they continue to say that second half will be better for painting industry or not. Secondly, margins will be slightly under pressure because of inflation. Price hikes will, however, try to offset some of this inflationary pressure. Rising competition from peers, of course, that's been the story for the painting sector, and commentary on that will also be important, especially in the tier 1 areas where Asian Paints has larger dominance. It's expected to underperform peers because of its larger presence in tier 1 and urban demand not picking up. Key monitorables, the key monitorable, something that I'll be watching out for as to how they'll deploy the money that they've received from the stake sale in AkzoNobel, and of course demand outlook and the kind of competition and price hike impact. So this is the overall view of what you can expect from Asian Paints earnings.
So Asian Paints earnings, IndusInd Bank earnings also is something that we need to watch out for. Akshay, on charts, both Asian Paints and IndusInd, anything that you're penciling in? Is there a bet here?
Yeah, so Asian Paints, it's a neutral setup and there is no trade evident here. Even if I were to look at the option setup, that's for the monthly 31st July, 2300 support and 2450 resistance is what comes to my knowledge. So most likely the way the setup looks in the FNO segment, chances are that it will be more of a muted reaction post the results. And technically also there is no major trade evident going by the current setup. As far as IndusInd Bank goes, I think a similar setup here, upside a bit looks capped here. There is strong resistance which has been building up at the levels of 850, where selling or long liquidation is pretty much apparent in the recent little bit of recovery which we noted in the stock. So in all likelihood, the chances of the stock moving till 700 or 720 on the downside looks likely. So here again, I would advise to wait and watch before committing any buy positions. At least 850 is the first caveat. It should cross, then we will review it for buying, or we will review it for buying at the support base at 700.
What about your BTST ideas, Akshay?
So right now, see, the market breadth is pretty weak, as I understand, and I think the ICICI Bank buy call, which I mentioned on air a few minutes back, that is one of the strongest setup. So in case one is keen on just a BTST trade where you want to book out in the first hour of trade, then with a small stop loss of 1477, you can commit a BTST in ICICI Bank. 1488 is the current market price, and if you get a little bit of support from the Bank Nifty, I think 1520, 1540 would be the short-term targets you can look forward to.
Okay. Well, Samir, Kotak Bank has suffered so much today, and the question is, and Bajaj Finance did that on Friday too. Some of these marquee blue chip financials, would you be a buyer into any of those if they correct further after the correction that we've already seen in them?
Yeah, so Kotak Bank, actually, I think I would be a buyer. Bajaj Finance, I still feel valuations are a bit on the rich side. Look, Bajaj Finance has now got scale, right? So now they're not growing at 30-35% anymore. Plus, when we sat for the call and we spoke to the management and we did all of that, we realized that there are certain pockets for them which they are going to be very cautious on, which were the previous growth drivers, right? So when some of your growth drivers of your past are now going to become problem points or lead to some amount of increase in NPAs and slowdown in growth, that sends a picture where your overall growth is not going to be so good. So when you're going to be growing in the similar line of some of the larger banks and still trading at maybe 1.5x, close to 2x some of the valuation multiples that the private banks are trading at, it sends out, it's something that I would choose to avoid for the time being. Kotak Mahindra Bank, yes, there's been a one-off. They've also been guiding that this is, a temporary thing, and they will probably recoup some of the provisions that they've had to take in this quarter, and also maybe, see provisions being lower going forward. So if Kotak corrects closer to 1750, 1800 levels, I think it makes a good buying opportunity.
Okay. What else? Real estate has looked very, very wobbly. Samir, are you a buyer into any of the real estate names at all? Is the question that very quickly, Samir, if you can answer in under 30 seconds, please.
Yeah, so, we do like real estate, and Keystone Developers is something that we've discussed on your channel as well. Godrej Properties, if it comes closer to 2000, it looks attractive. Real estate is something that will do well longer term. So I think you can buy, but at good valuations or better valuations.
Okay. Well, something that might be a concern but shouldn't be, right? Because sources have told NDTV Profit the government is set to rectify the drafting errors in the newly proposed income tax bill. My colleague Shrimi, who broke the story, Johnson with more. Shrimi.
Well, it looked like some big relief on the cards for both corporates and non-corporates entities, as government is set to make some key correction in the proposed income tax bill in line with the select parliamentary panel's suggestion. Now, sources tells us that there are certain drafting errors which could be rectified in the proposed bill, and that will be reflected in the final bill. Now, the provisions and sections in the draft bill, and some of them are actually creating quite a stir among investors as well as taxpayers on the tax treatment. And one among those is with respect to the long-term capital gains on the limited liability partnership and similar sort of partnership funds. So what happened here is that the draft bill actually proposes to expand the scope of, alternative minimum tax for LLPs. Remember, in the existing Income Tax Act, the alternative minimum tax applies to only those LLPs if they claim certain deduction on it. However, that particular rule has been removed in the draft bill, which is making the whole, LLPs and the family offices jittery, and now they are seeking explanation as it increases the tax rate to 18.5% from existing 12.5%. Similarly, on the corporates claiming deduction on the dividend has been also removed. Sources tells us that it was omitted inadvertently in the draft bill, and that will also something will be restored in the final set. Certain provision with respect to nil TDS, refunds are also some provision which are kind of creating confusion and could be restored in the final sort of bill. Now, sources said that, the government has accepted all most of the suggestion of the parliamentary panel, which is around 285 suggestion, mostly directed towards the rectification in the draft bill. And they are very clear on the fact that there is no policy change in the draft bill, which, with respect to any tax rate change, etc. And in fact, the bill is listed for the passage in the ongoing monsoon session. However, given the kind of tweaks and changes which is required in the draft bill based on the suggestion, it could take some time. And that is why the passage of the bill could differ for the next parliamentary session. However, no decision has been taken so far. So for now, the bill is listed. However, we need to see whether it will be moved for passage in the ongoing session or not.
Okay, thank you for that, Shamina. That's an important clarification, Samir, because I think there is some stress there that long-term capital gains tax, if it comes in for LLPs effectively at 18.5%, that means for the Janta, it's not far behind. That's, I think, at the core of the concern. Just wondering what you make of it, Samir. Is that just, sort of a bad overall mood on the market, some cautiousness there, and then this one news adding to fuel to the fire?
So I don't think the markets are correcting because only of this news, because if that is the case, whether you have to pay 12.5 or 18.5, that is not going to change. So I don't think that is what it is. Of course, a negative sentiment wise, but is that the reason the market's correcting? I don't think that's the reason the market's correcting.
Okay, just in terms of last calls, we are a minute away, and just quickly, last calls, what is that one stock that you would look at for tomorrow's trade, Samir?
So we don't do intraday trading or, buy today, sell tomorrow, any of that. We do investments, and I still think that market has a lot of opportunities for investment when it comes to the entire consumption basket, which we've discussed in the past. So the QSR space, if you talk about the consumption, that's Trent, you talk about Bata, you talk about Metro Shoes, you talk about Vedant Fashions. So all of that we think is a great long-term buy opportunity, and that's something we continue to recommend positively.
Okay, fair enough. Thank you so much, Akshay and Samir, for joining in just as we close out the markets, and it's looking like quite a bit of a somber day. Financials not doing too well, real estate not doing too well, and nor is defense. These are some of the pain points that I can see in the markets today. You're looking at the Nifty closing about 150 points in the red, 24,670, 680. So 24,700 is also breached. We talked about it this morning about how core levels, if they're breached, is going to lead to a further pain point. You're definitely there. Bank Nifty also plummeting towards, I won't say plummeting, but really dragging towards close. Let's pull up Nifty IT. In fact, the sectoral heat map. Let's go through the sectoral heat map very, very quickly before we get to the heat map on the Nifty. Nifty Realty is your top loser today. In part maybe dragged down by a Lodha. We can pull in the internals of the Nifty Realty just for a second. Nifty India Defense looking bad. Nifty Private Banks looking painful. Yeah, there you have Lodha, Godrej Property, DLF, Brigade, all of them in the red. I just wonder if this is a knock-on effect of jobs, because if valuable, high-paying jobs which can really dish out those huge EMIs start getting culled, like what you're seeing with TCS, is that bad news for all of these developers which are building those 4, 5, 6, 7 crore apartments with very few who could
Most
go out and
certainly.
buy them?
Most certainly. I think that's how we came up to this whole conclusion. I mean, is it real estate names? Is it maybe, I think somebody said not the hiring names, but could the credit card companies and those spends also come under a bit of pressure? I think all of that remains to be seen. More importantly, what it does to sentiment. And would the GDP follow, GDP growth also follow that? Though there's only one sector, remember, but certainly an important one from a white-collar job perspective. So has looked wobbly. A lot of stocks on the real estate side have looked weak. A lot of stocks on the pharma side have looked okay. And that's been the yin and yang for the markets today. But with that, it's a wrap on this leg of India market close from Tamanna and me and the team that has put this show together. Thank you so much for tuning in.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IPOs CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, Monday blues for markets. Both Nifty and Sensex end the day in red. While Nifty 50 ends below the 25,000 mark, Sensex also closed 570 points lower. Most sectors ended the day in the red, with realty and media sectors leading the decline, dropping by nearly 4% and 3% respectively. So only the FMCG and pharma sectors showed positive momentum, closing slightly up by 0.3%. TCS also to cut 12,000 jobs amid weak demand and cost pressures. So layoffs target mid and senior managers across divisions. AI not the cause, but wage hikes pushed ahead. So other IT firms also show mixed hiring trends in Q1 of FY26. Investec is bullish on TCS, sticking to a 3,705 rupee target despite headlines. So the 12,000 job cuts, about 2% of its 6 lakh workforce, are seen as routine, driven by a mismatch in the employee skills versus changing market needs. Notably, this move isn't linked to AI or panic cost cutting. While margins also may dip briefly, stronger billability and resource efficiency are expected to follow. Tata Consultancy Services plan to lay off about 12,000 employees from middle and senior levels between April 2025 and March 2026. So sources have told that no concern has been brought to government so far. Sources have also mentioned that private sector terminations are not under government jurisdiction unless there is unfair dismissal or breach of labour laws. Kotak Bank was the big stock in focus over the weekend as Q1 results revealed pressure on the key financials. So provisions surged 33% quarter on quarter and over 100% YOY. So largely driven by weakness in the microfinance book, while operational numbers remain broadly in line, margins compressed and profit growth declined. ROA also slipped below the 2% mark, though operating expenses helped cushion the blow. Tamil Nadu Mercantile Bank reported a 6% rise in the Q1 of FY26. Net profit also, to 305 crore rupees, driven by a 90% drop in provisions to 8 crore rupees, despite a 12% decline in the operating profit to 412 crore rupees. So net interest income grew 2% to 580 crore rupees, but margins fell to 3.8%. Deposits rose 9%, and advances grew 10.4%. So the asset quality has improved, with gross NPA at 1.22% and net NPA at 0.33%. So the bank aims for 15% advance growth and 10 to 12% deposit growth in FY26, expecting NIM stabilization. Macquarie maintains an outperform rating on Titan with a price target of 4,150 rupees, citing strong brand equity and growth potential in the UAE and Kuwait through the Damas acquisition. So the brokerage likes Titan's focus on premium designs and lab-grown diamonds. However, slower EPS accretion and the exclusion of the Graph franchise, which is 20% of Damas's sale, are seen as drawbacks. Acme Solar has delivered a blockbuster Q1 performance. Revenue surged 65% year-on-year to 511 crore rupees, while EBITDA jumped 68.5% to 458 crore rupees. Net profit skyrocketed to 131 crore rupees from just 1.4 crore rupees last year. So this is driven by scale efficiencies and new capacity. Margins have expanded to a stellar 89.6%, which is nearly 90%. Orient Cement has crushed expectations in Q1. Revenue rose 24.4% year-on-year to 866 crore rupees, while EBITDA nearly doubled to 182.6 crore rupees. Net profit also skyrocketed 459% to 205 crore rupees, and margins expanded to 21.1% from 13.8%. Premier Energies shines in the latest quarter with steady growth and rising efficiency. The company continues to expand its clean energy footprint, powering a brighter future while strengthening its bottom line. So revenue rose almost 10%, while EBITDA surged 53%. Net profit climbed 56% to 308 crore rupees, and the margins have expanded to 30%. J&K Bank posts strong Q1 numbers with a 17% jump in the profit and margins shrink as deposit growth beats the loan growth. So interest income is up, but cost of the funds have risen faster. So asset quality stays steady despite the NPA provisions. Laurus Labs zooms post Q1. Net profit zooms 13 times year-on-year on the CDMO-led growth. Revenue also jumps 31% with sharp rise in the EBITDA margins. Gross margins improve on better business mix, and API weakness partly offsets the gains in the generic FDF. Wockhart's novel antibiotic Zanuck grabs the global spotlight after saving a critically ill US liver transplant patient. Now, the patient had pan-drug-resistant infections, unresponsive to all the available treatments. So Zanuck cleared the infection in just 11 days, enabling a successful transplant and chemotherapy resumption. So the drug has completed phase 3 trials and targets a $25 billion global market. Brigade Group launches its new premium residential project, Brigade Avalon, in Bengaluru's Whitefield area. Now, this project spans 4.36 acres and features 206 carefully designed homes with spacious 3.5 and 4 BHK configurations. Brigade Avalon offers a bold architectural identity with private decks, light-filled interiors, and flexible home office spaces to suit modern living. So the development includes a grand clubhouse with premium amenities for all the age groups. GAIL Limited is filing an arbitration claim seeking up to 639.18 crore rupees plus interest against the Focus Energy Limited, iServices Investment Limited, and Newbury Oil Company Limited. Now, the claim have actually, arisen from the non-supply of makeup gas and a shortfall in the supply of gas under 2009 gas sale and purchase agreement. So GAIL has formally submitted its statement of claim to the arbitrator, asserting that it's right to recover damages for these supply failures. Recently, the Delhi High Court has also directed the respondents to secure 158 crore rupees through a bank guarantee or assets to project GAIL's claims during the arbitration. Now, this legal move asserts GAIL's commitment to enforcing contractual obligations and protecting its financial interests amid the dispute. Dr. Reddy's Laboratories has made a significant investment of 565 crore rupees in its Russian arm. So Dr. Reddy's Laboratories LLC Russia, which is acquiring a 45.19% equity stake. Now, this infusion has completed on July 25th and is aimed at supporting the working capital requirements of the Russian subsidiary. So DRL Russia has demonstrated strong business performance with a reported turnover of about 2,347 crore rupees for the fiscal year of 2024-25. Now, this investment reflects Dr. Reddy's commitment to expanding and strengthening its presence in the Russian pharmaceutical market. Citi maintains a buy rating on Mahindra & Mahindra, raising its target price to 3,810 rupees. The firm highlights strong momentum in both M&M's utility vehicles and the tractor segments. So tractor sales have benefited from a healthy harvest season, while UVs are also performing exceptionally well, firing on all cylinders. M&M's volume growth is notably stronger compared to its peers, reflecting robust demand and solid rural market traction. J&K Bank reports its Q1 performance with key takeaways showing a sequential dip in the margin, faster deposit growth compared to advances, and a decline in the yield coupled with a rise in the cost of funds, while asset quality remains largely stable. So year-on-year, interest income has risen 9% to 3,268 crore rupees. Within the interest expense, actually the interest expense going up 11% at 1,802 crore rupees, and net interest income also has improved 7% at 1,466 crore rupees, and operating profit grows 13% to 673 crore rupees. Steel Authority of India reports its Q1 results with revenues declining 11.6% at 25,922 crore rupees. Now just missing the estimates of 25,790 crore rupees there. So EBITDA drops 20.5%, matching the expectations, while margins remain stable at 10.7%. However, net profit takes a significant hit, down 40.5% to 745 crore rupees against an estimated of 1,076 crore rupees. Now, this sharp decline is actually mainly due to an increase in the stock in trade as SAIL proactively stocks raw materials. Lodha Developers reports a strong Q1 performance with pre-sales rising 10% year-on-year to 4,450 crore rupees. Collections also grow by 7% year-on-year. The company maintains its full-year guidance, targeting 20% growth in the pre-sales for FY26. During the quarter, Lodha launches new projects worth 8,300 crore rupees, while Q2 launches are limited to a new phase at existing locations. Consolidated revenue also jumps 22.7% to 3,492 crore rupees, and EBITDA increases 30% to 984 crore rupees, with margins expanding to 28% from 26%. So net profit has surged 42% to 675 crore rupees. RPG Life Sciences has reported a challenging Q1 performance with mixed business segments. The domestic formulation business grows 9.5%. The API business takes a hit, declining 22.4%. Overall, the revenue edges up 2.1% to 169 crore rupees. So net profit also sees a marginal increase of 1.8% to 26.3 crore rupees. GMDC reports muted numbers for Q1, with a slight dip in the margins, and profit also impacted by a decline in the revenue quarter-on-quarter. So the sales volume have dropped nearly 9.6%, which is reflecting a softer demand. Year-on-year revenue have also fallen 6.8%, while the EBITDA has decreased 12.6%. Margins have contracted to 23% from 24.6% previously. So net profit takes a sharper hit, declining 27.6% to 164 crore rupees. Overall, GMDC faces top-line pressures and margin compression in a challenging quarter. Car trade delivered a robust Q1 performance, marked by impressive double-digit growth across the key metrics and strong margin expansion. The company has capitalized on its solid momentum in its remarketing and consumer segments, while the OLX continues to shape into a strategic growth lever, and that also makes it the stock of the day. Adani Green Energy reported a robust Q1 of FY26 with consolidated net profit soaring 60% year-on-year to 713 crore rupees from 446 crore rupees. Revenue jumped 36% to 3,800 crore rupees, which is up from 2,794 crore rupees, driven by a 41% increase in the operational capacity to 15,816 megawatt. So EBITDA has risen 28% to 3,042 crore rupees, though the margins have dipped to 80.1% from 85.1% due to higher expenses. The company has added that 3,135 megawatt in greenfield capacity, including solar and wind projects, reinforcing its leadership in India's renewable energy sector with a 50 gigawatt target by 2030. Zen Technologies reported a 38% drop in Q1 of FY26 net profit to 47.8 crore rupees from 76.8 crore rupees, with revenue also down 37.9% to 158 crore rupees. So EBITDA has fallen nearly 42% to 65 crore rupees, and margins have contracted to 41% despite the dip. The company has maintained a debt-free balance sheet and a 754 crore order book management, which is led by Ashok Alturi. Atluri views this as a temporary adjustment, targeting 6,000 crore rupees of revenue over FY26 to 28. So the acquisition of TISA Aerospace bolsters its UAV capabilities with 150 crore rupees in the new order secured. US President Donald Trump announces a new trade deal with the European Union, calling it a good deal for everybody. So after high-stake talks in Scotland with EU chief, the US imposes a 15% tariff on EU imports. Now in return, the EU pledges $600 billion in investments and $750 billion in energy purchases. Now both the leaders hail the agreement as a breakthrough aiming to end a long-standing transatlantic trade dispute. The $2 trillion US-EU trade deal is turning heads across the global markets, especially in India's auto sector, with car tariffs slashed to 15% from 27.5%. Top Indian players like the Tata Motors, Samvardhana Motherson, Sona BLW and Bharat Forge are poised to benefit. Now for Tata's JLR unit, exports from the Slovakia now face lower duties, while Bharat Forge and Sona BLW could actually see improved margins on their hefty US-bound exports. Now this tariff reset configures supply chains and offers a competitive edge to Indian firms with transatlantic exposure. Bharti Airtel's data center division, NXTRA, has signed an agreement with Ampin Energy to procure an additional megawatt hours of hybrid solar and wind energy. Now, this renewable power will be sourced from plants connected to the interstate transmission system, and exchange filing says that the deal supports NXTRA's goal to increase the use of sustainable energy in its data centers to reducing its carbon footprint. The Tata Sons board is set to meet ahead of the annual general meeting scheduled for August 14. The AGM agenda includes approval of the company's financial statements and key appointments and reappointments. So Noel Tata is proposed to be appointed as a director and nominee of Tata Trust. Additionally, Mr. Venu Srinivasan, Saurabh Agarwal and Anita George are up for reappointment to the board, with Anita set to continue as an independent director. Amber Group's, through its subsidiary, has signed agreement to acquire about 40.24% of Israel-based Unitronics. Now, this deal is signed for 400 crore rupees. Now, the acquisition is also scheduled to complete within 2 months. Unitronics, which is listed on the Tel Aviv Stock Exchange, supplies industrial automation products such as programmable logic controllers, human-machine interfaces, server drivers, and SaaS solutions. Vietnamese electric vehicle maker VinFast has opened its first showroom in Surat ahead of launching its manufacturing plant in the country. So the company plans to establish 35 dealerships across at least 27 cities in India by the end of the year. To support its expansion, VinFast has formed strategic partnerships with Road Grade, TVS and Global Assure to build a network for charging infrastructure and after-sales services. The Department of Telecommunications has issued a show-cause demand notice to Tata Communications for about 7,800 crore rupees over AGR dues. Tata Communications stated that in an official note that the demand includes amounts related to disallowed deductions under its ISP and NLD licenses, with appeals already pending before the Supreme Court. The company asserts its licenses are separate from those impacted by the Supreme Court's 2019 AGR judgment and says that it's based on legal opinion. It also expects to be able to defend its case. Indian Bank has received board approval to raise 5,000 crore rupees during the current financial year. So according to CEO Binod Kumar, the bank reported a rise in its capital adequacy ratio to 17.8% for the April-June 2025 quarter. The bank does not plan to use QIP or other instruments immediately. So in addition, Indian Bank is set to launch its own UPI-based payment app, Ind UPI, so to reduce the operational cost. Now, the bank has also received approval to hire 3,000 employees this year across various levels. Security forces in Srinagar have successfully concluded Operation Mahadev, resulting in the neutralization of 3 terrorists. Among those killed was Suleiman Saha, who is known for his involvement in the recent Pahalgam attack. Officials have confirmed that the 2 slain terrorists were Abu Hamza and Yasir. So all 3 were identified as members of the Pakistan-based terror group Lashkar-e-Taiba. Following the operation, security personnel are conducting thorough checks of the commuters in the vicinity to ensure the safety of the area and maintain vigilance. The Delhi government is set to launch its Logistics and Warehousing Policy 2025, aiming to ease congestion, lower pollution, and improve the trade efficiency. The draft policy proposes creating dedicated logistic hubs, green firefighting corridors, and also deploying technology-driven solutions to the streamlined goods movement. Now, Delhi now handles about 10 lakh tons of freight daily via nearly 1.93 lakh vehicles. So, key measures include relocating warehouses to city outskirts and switching last-mile deliveries to electric and CNG vehicles. Thailand and Cambodia agree to immediate ceasefire for their border conflict. The fighting, which flared up last Thursday after a landmine explosion, has displaced tens of thousands of people on both sides of the border. Over 2 lakh villagers have evacuated their homes, with many now staying in the temporary camps. Now, a shocking act of violence has been reported in the Thai capital in Bangkok. At least 6 people are dead following a shooting incident at the Torkor market. Now, the fatalities include the gunman, who reportedly took his own life. The Emergency Medical Center reports that 4 security guards and 1 woman were also killed in the attack. Now, the market, which is known for its agricultural product and local foods, is now the scene of a major police investigation. A regional passenger train has derailed in southern Germany, resulting in at least 3 deaths. Investigators are looking into the cause of the derailment. Around 100 people were on board the train when 2 carriages went off the tracks. Now, the crash happened after storms passed through the area. Authorities are working to determine if the weather has anything to do with it. Shubman Gill has etched his name in history, becoming the first Asian cricketer to score 700 runs in a test series in England. The Indian captain's gritty 103 in Manchester's 4th test broke Mohammad Yusuf's record of 631 runs. With an unbeaten century, Gill also joined Sunil Gavaskar and Yashasvi Jaiswal as the only Indian to score 700 runs in a test series. With that, viewers, it's a wrap on this edition of Market Express, but please stay tuned and don't go anywhere, as my colleague Malika will take over Profit 360 on the other side of the break.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold IPOs CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is
Except Pharma, all other sectoral indices end in the red, with Realty Index plunging 4%, Media Index shedding nearly 3%. In the third cost-cutting move in 3 months by TCS, the IT firm now plans to reduce its workforce by 2% in the financial year FY26. It's an NDTV Profit exclusive. Nestle India bets on both urban and rural segments for growth. Catch the exclusive conversation with Suresh Narayan, Chairman and Managing Director. A blockbuster week for IPO watchers, from main board giants to SME entries. The primary market is about to see a flurry of action, with a total of 14 IPOs hitting the markets. Finance Minister Nirmala Sitharaman says India must navigate global supply chain shifts in semiconductors, rare earths and magnets. Sources tell NDTV Profit the government will address drafting errors in the Income Tax Bill 2025, potentially deferring its passage to the winter session. Suleiman Saha, a Lashkar-e-Taiba terrorist identified as the mastermind of the April 22nd terror attack, gunned down in an encounter near Srinagar this morning. Operation Mahadev also neutralized 2 other terrorists, Abu Hamza and Yasir. Hello and welcome viewers. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news. So stay tuned. Let's begin with checking on the markets. The Wall Street saw Monday blues as the benchmarks ended more than 0.5% lower. Nifty IT extended its decline for third consecutive session. All indices except FMCG and the pharma sector closed in the red. Mid and small cap indices underperformed the benchmarks. Let's now go across to my colleague Puneet Javeri for a detailed roundup of the market action.
Well, thank you for that. So it was a day largely bound by pressure across the benchmark as well as the broader markets. The Nifty ended almost 0.6 to 0.7% down in trade today, and it was led by across the board selling pressure. When you look at the mid-cap 150, we also saw selling pressure led by the Nifty Realty. So we saw stocks like Brokerage Properties, SBI Cards, amongst others, that were the top losers of the day. We've also seen pressure on the Nifty small cap as well. So hence the benchmark indices largely outperformed the broader markets, and it's a trend that we've seen happening across the board now, but still a negative trend to say the least, because ever since we've broken the 25,000 as a support on the Nifty, that selling pressure has been incessant. So when you look at some key sectors as well, the Nifty IT was largely in news while it was recovered, by the end of the trading session, we saw pressure largely led by what happened with TCS. The company has announced 12,000 job cuts for, at least in this year, and that's across middle as well as senior management. We also saw pressure on stocks like Wipro, amongst others. Among other sectors, we also saw that the Nifty Realty was the top sector losers. This was led by DLF as well as Brokerage Properties, as mentioned, while other sectors like the Nifty Oil and Gas, Nifty Bank as well as the Nifty Financials were some of the other key sectors which were under pressure today. So overall, it will be a week led by earnings reactions, and we're going to see the auto pack being largely in focus starting Wednesday. Apart from that, some EMS players will also come out with earnings, but the Nifty IT has underperformed over the last 2 weeks, while the Nifty Bank has been led by the large cap bank players. Overall, the market is going into a consolidatory phase, and we will see earnings reaction across the other sectors starting this week now.
Right, Puneet, thank you so much for helping us understand how the markets fare today. Domestic investment flows in India are showing no signs of slowing down, and as long as those flows keep coming, Indian markets will continue to prosper. That's what Nepean Capital's Gautam Trivedi told NDTV Profit. Let's listen in.
Let's look at the numbers this year, right? If that was indeed the case, foreigners year to date have sold $9.6 billion out of India. Now, the India growth story, yes, has slowed down a fair bit, but the fact is the future still remains extremely bright. So you have at one breath a sovereign wealth fund, as you've seen in this morning's papers, talking about making a big investment in a housing finance company. And at the same time, you have pension funds looking at deploying more money. So you've got that. But then if you look at the overall active investment community, which is within the FI side, I think that is really the question that people are asking. Why is it that they are net sellers? And there are a bunch of reasons for that. I think one of the prime reasons, if you look at it, is the fact that the Indian market, again, it's always been expensive, but today it's at the same valuation as the S&P 500. In fact, the S&P 500 is at a bit of a discount to the Nifty 50.
And let's get you an update on some of the earnings. Adani Green's Q1 profit saw a 60% uptick. The company's total revenue from operations rose 36% to 3,800 crore rupees during the quarter from 2,794 crore rupees last year. Let's bring in my colleague Hirul for more on this.
Yes, absolutely. A strong set of numbers that have been reported by Adani Green and clearly reflected in the stock price performance as well, because the stock ended at the day's highest levels. If you see in terms of the key highlights, the growth was mainly led by a robust greenfield capacity addition of around 4.9 gigawatts, and that led to a revenue growth of nearly 36% on a year-on-year basis at 3,800 odd crores. The EBITDA saw a growth of around 28%, and that number came in at 3,042 odd crores. The margins came in at 80.1% versus 85.1%, and the net profit grew nearly 60% at 713 odd crores. Now, they've deployed advanced renewable energy technology as well, which actually aided numbers this time around. The plant performance also has been superior, and they've deployed new capacities in resource-rich sites, and this is what has led to this kind of growth. If you compare on a sequential basis as well, the numbers have been absolutely strong. And if you talk about the profits, a good surge of nearly 115% is what you've seen, and the revenues have jumped nearly 24%. In terms of the guidance, what the company has said is that they're pretty much on track to achieve the 2030 target of 50 gigawatt renewable energy capacity. Now, at least 5 gigawatt of hydro pumped storage plus battery storage is what they're looking at, and battery storage will be a key part of their future strategy. Talking about further development, 30 gigawatts of renewable energy plant is what they're developing at Khavda. So strong guidance coming in there, strong performance on the sequential and on a year-on-year basis, and that is what has aided the stock price as well, which ended at the day's highest levels.
Right, Hirul, thanks for that. And Bharat Electronics, viewers, delivers a healthy performance in Q1. The company's net profit rose 22.6% year-on-year to 970 crore rupees, backed by strong operational gains. Revenue was up 4.6% as well at 4,440 crore rupees, and EBITDA saw growth of more than 30% to 1,238 crore rupees, showing better cost control and also efficiency. Margins also see a solid jump, improving improving to 27.9% from 22.3% a year ago. Now, banking also is another sector under fire on the back of their first quarter performance. Most large banks have reported their numbers, and IndusInd, however, is yet to announce its Q1 performance later today. Let's get in back my colleague Hiral to let us know what is expected out of IndusInd Bank's Q1 earnings.
The stock has been under pressure ahead of the numbers. It's trading near the day's lowest levels as we speak. The key question over here is IndusInd Bank actually returning to profitability this time around after posting a loss in the fourth quarter of FY25. The profit, however, is expected to dip by around 70% and come in at 653 crores. NI is expected to see a dip by around 14%. Your net interest margin, that number is seen at around 3.57%, which is higher versus a 2.25% if you have to compare it on a sequential basis, and the provisions are expected to go up by around 36%, and that number is seen at around 1,424 crores. Now, apart from that, if you talk about the business update that they gave in, it was slightly weak at that point in time, where the advances were down 4% on a year-on-year basis and down sequentially, and similarly, deposits have also seen a degrowth on a sequential basis. However, they have remained flat on a year-on-year basis. Talking about the pre-provisioning operating profit, that is expected to come in lower this time around. Credit costs probably could remain elevated as well, because in the March quarter that number was around 2.8%, and overall an easing of around 90 to 100 basis points is what is on the cards, but still that number will be elevated. Gross slippages, there could be some bit of a decline that could be coming in there, but again, that number is going to be elevated. Net interest margins as well, we already spoke about, so that's going to be a monitorable. Apart from that, the progress with regards to appointment of the bank's new MD and CEO is something that the street will be watching out for. The guidance in terms of the bank's pace of net interest margin expansion is what the street is eyeing. The MFI asset quality as well as the growth trajectory are few of the key monitorables that the analysts and the street are watching out for so far. But clearly, a number that the street is closely looking at, because overall, it's the derivative mess is what will impact this quarter.
Right, Hiral, thank you so much for that. And viewers, Sona BLW, which has been in turmoil with a mother-in-law versus daughter-in-law situation. Remember, the company had in its exchange filing stated that Rani Kapoor, mother of the late Sanjay Kapoor, was not a shareholder in the company. Vishwanath Nair, my colleague, joins us on the phone line with more details on this.
Right. So the clarification that has come in from Sona BLW points out that Rani Kapoor has not been directly or indirectly involved, has had no role in the company since 2019. She's neither a shareholder, director, nor officer of the company. That's something that the company is saying. What they have said is that any insinuation that her approval was coerced or even required to do anything in the company, that is baseless and is legally untenable. What the company is also pointing out is that we have a very professional board and management that is running the company, and that it is not a family-owned business. In fact, as far as the appointments of Priya Sachdev Kapoor and Jeffrey Overly are concerned, which happened in the latest AGM, both those things were done with proper compliance with the rules and approval of the shareholders. So any statement saying that that was not appropriate would be completely wrong and baseless. What the company is also pointing out is that there has been a dissemination of false narratives and pursuance of a personal legal agenda by Rani Kapoor in this case, which is eroding shareholder value. What they're also saying is that such actions are not only reckless but deeply harmful to the interests of the company. So clearly a very strong statement coming in from Sona BLW opposing any of the insinuations that have been made by Rani Kapoor. Remember, Rani Kapoor's lawyer, who spoke to NDTV Profit exclusively, was talking about the fact that there was a lot of doubt about how these approvals were taken from her, and that she has been raising this issue and had requested that the AGM be postponed. Whether they will take the legal route or not, that is something that we'll watch out for next.
Right, Vishwanath. Thank you so much for giving us that update on the clarification coming in from Sona BLW. Viewers, 2025 is turning out to be a brutal year for tech companies worldwide. A sector which was once regarded as the cornerstone of job security and was a path towards upward mobility now finds itself in the middle of a seismic shift. July began with Microsoft announcing that it is laying off around 9,000 people from its workforce, followed by Intel as well. Back home in India, if you focus the picture here, TCS is the latest tech company to join the list. In fact, TCS, one of India's biggest IT giants, Tata Consultancy Services, fell nearly 2% for the day in trade today. Before we delve into the recent TCS job cuts, I will quickly go across to my colleague Himakshi, who will join us to first break down the recent wave of tech layoffs.
Absolutely, Malika. So another major blow to the Indian IT sector there. TCS is laying off about 12,000 employees, or 2% of its workforce, if we can say. So the company says that the move will help it become future ready. As AI adoption accelerates, demands slows and cost pressures mounts. But employee unions allege that the staff are being pressured to resign, and which also sparks calls for resistance there. But this comes on the heels of Intel's massive restructuring in July as well, slashing up to 15% of its global staff, or nearly 24,000 jobs. Now closing its automotive chip unit and cutting fabrication teams also across the US and Israel. Let me just also highlight that earlier this month, Microsoft announced its third round of layoffs this year. Now, removing about 9,000 roles, especially across the cloud gaming and hardware, and even as it doubles down on AI. And Meta also cut 8,000 jobs in mid-2025, citing cost constraints despite hiring aggressively for AI roles. Now, this doesn't actually really stop here. Between April and May, Microsoft let go of over 6,000 employees, while TechCrunch also recorded over 24,500 tech layoffs in April and another 10,000 plus in May. So back in February, also over 16,000 tech jobs were cut. So all in all, by late July, over 1 lakh employees have lost their jobs, and they've vanished in 2025 alone. From TCS to Amazon, Salesforce to Google, companies are trimming teams, reskilling for AI, and racing to stay lean in a fast-changing tech landscape. So basically, it reflects that the market standards, what are the market standards for the young talent, but at the same time, it's also very alarming and concerning.
Right, Himakshi, definitely. It does sound an alarm bell on the IT workforce at the moment. And speaking on TCS perspective, the tech giant's decision to trim about 12,000 roles is the company's biggest ever job cut in its history, viewers. And at NDTV Profit, we have been covering the story relentlessly, both from the employee and industry perspective. Listen in to some of those voices, and for the full conversation, tune in only to NDTV Profit at 6 p.m. this evening.
Is this really something to blame on TCS? Because Harpreet Saluja, I'm coming to you on this, and I'm reading out the statement that you put out, in which you are saying that this raises ethical and legal questions. At the end of the day, Mr. Saluja, this is a private company.
12,000 is just not a number on Excel sheet or a spreadsheet. These are 12,000 jobs and 12,000 employees who are human capital to this organization. And if we are particularly talking about the mid and senior level management, these people have spent approximately 5 to 10 years or more than 10 years, tenure in this organization. They have given their blood and sweat. They have given the best possible years of their lives to this organization. If you are making profits, and in May only, if your CEO salary is going and it is getting raised by 4.8% or close to 5%, you're taking 26 crores of rupees per year as your remuneration, then why, when it comes to increasing the profits, the employees in the mid-level management or the junior level, they are taking the hit of this?
And big news from the world of automobiles. Members of the FADA, which is the Federation of Automobile Dealers Association, are asking the Reserve Bank of India for help. They say private banks aren't quickly lowering car loan rates, even though the RBI has cut its main interest rate. Public banks are passing on these savings to car buyers right away, but some private banks are moving too slowly. FADA wants the RBI to step in, make sure loan rates drop faster, and give small auto businesses a fair deal. Now, to discuss this issue further, I am being joined by Sai Giridhar, Vice President of FADA. Thank you so much for joining us, Mr. Giridhar. We really appreciate your time. I would want to start off by asking you first, has FADA engaged with private banks directly to address this issue, and what has been their response so far?
So we have a continuous dialogue with most of the banks, be it private or be it public. And most of the time, the response is that the cost of funding is still high. It's going to take them some time to lower the rate of interest. But when we do a deep dive, actually, you see, the RBI from their stake, they've already done a remarkable job as far as reducing the repo rate. In fact, this is the fastest reduction in repo rate ever in the Indian history since February, if you see. But if you see the translation as far as the auto retail is concerned, the consumers are not getting benefit out of it. So probably we got the opportunity to get the meeting with the governor. We thank him for giving us this opportunity, and we could appraise him about this concerning issue, because if we lower the rate of interest for the consumers, it's definitely going to help the industry. And what we are talking about is an industry which is worth more than 9 lakh crore rupees. We do approximately 15% of GST collection, which is close to 3.32 crore rupees, and we contribute 7.1% to the GDP of India. So we were able to tell these things to the governor, and he assured us that probably he's going to look into this in a very positive note. And in fact, if we see the exact reason why the private banks have not been able to pass on this rebate is because most of the private banks today in India are doing funding on fixed rates. It's not on floating rate. Had it been done on floating rate, the interest benefit could have been easily passed on to the consumer. So our request is very simple, that the consumer should be given a choice whether he wants the loan on fixed rate of interest or on floating rate of interest.
Right, Mr. Giridhar. I actually also want to, just in order to understand this issue well, could you also help me out with the timeline? For how long have these automobile dealers have been facing this issue from private banks, and when do you exactly expect this issue to be resolved, and what are the key milestones?
So it's basically not the time. See, when the repo rate has gone down, if you see the rates as far as the home loan is concerned, the rates for home loan has gone down. The expectation from the consumer point of view is the consumers are actually waiting on the brinks. Even they're waiting for auto loans also, the rates will go down. That's the general feel in the market. Just because the rates are not coming down to the expectation of the consumers, I believe ultimately purchase is getting affected. People are deferring their purchase decisions just on the heck of it that the rates would come down, and then probably they'll decide and they'll jump on to get in their new vehicles. That's one. Second, with lower rate of interest, probably the consumer has the flexibility of taking the higher models or probably going in for the more aspirational vehicle that he is wanting to choose for. And we certainly believe, any rate cut would definitely propel the industry. It will help grow the industry. And we want the same in our industry also. And since we are not getting any headwinds from the private sector banks, probably we thought it is best to address it to RBI and sought their help in this.
Yes, that definitely, that definitely makes sense, Mr. Giridhar. I'd also like to ask you, what message then would you like to convey to stakeholders, including private banks, the RBI and FADA members on this issue?
So it was, the only message is that it was not only regarding repo rates. We in fact gave a representation requesting the governor on recalibration of the risk weight. If you see today, all the banks as far as auto loan is concerned, it is having a risk ratio of 1:1. So that means 100% risk is given to auto loan, wherein it's a secured kind of a funding. The default rate is bare minimal as far as auto loan is concerned. When you compare it to home loan, the risk weightage is 0.4%. So it is 40% to the cost of the asset that they're funding. So we only requested the governor that probably the banks could be told to recalibrate the risk weightage. We even requested him that every bank is supposed to have at least 18% of priority sector lending, which is agri-based. So if the auto loans, which is given in the rural and semi-Indian, semi-urban markets, if that can be considered as the agri-based funding, probably it will help, because in rural India, we've seen it is just because of the want of finance, easy finance available. We've not been able to make that kind of headwinds. We have not been able to make that kind of inroads as far as the retail is concerned. So I think if more and more banks are willing to fund rural India as far as auto is concerned, that's going to definitely help. Today we see only a small fraction of private banks or small banks which are funding in rural India. So, and credit card charging of credit card fees, which is done by banks, that's also on a very high side. So we requested the RBI that for debit card, there are norms from RBI. If it's less than 2,000 rupees, it is 0.4%. It is above 2,000 rupees, it is 0.9%. If the same could be done for credit cards also, because as on day, banks charges and charges are exorbitant. If you talk about, they even go up to as high as 2.5%, wherein the margins for dealers are immediately wiped off, only on the charges which we have to pay for the credit card swiping.
Right, Mr. Giridhar. Well, with that, Mr. Giridhar, I'd like to thank you for your time and sharing these concerns with us on NDTV Profit. And we really hope that there is a resolution to this issue very soon. Thank you.
Thank you.
And viewers, moving on, the Ministry of Electronics and Information Technology has reacted to the layoffs at TCS and said that units working to align workforce capabilities with industry demands. Rishabh Bhatnagar now joins us with more details on this. Hi Rishabh, please give us more details on this particular commentary that has come from the ministry.
Right, Malika, an official word coming in from the Ministry of Electronics and IT on the TCS layoffs that have led to about a 2% workforce reduction at TCS, about 12,000 roles being eliminated. What the ministry is saying is that layoffs in the IT sector are considered a regular phenomenon, and that is because there are changing skill and talent requirements that have been ongoing for a while. But the essence is the fact that the Indian industry remains a net hirer of freshers as well as other employees. The government continues to say that they are making efforts to ensure that what the industry needs in terms of capabilities, that is being met through training, through other sort of initiatives that the government is taking. The government has highlighted that they have launched initiatives like the Future Skills Prime, which is a reskilling and upskilling program to equip IT professionals with emerging technology skills. What we also picked up from the government earlier on in the day was the fact that no specific concern regarding these layoffs was brought to them. And hence, there's no sort of jurisdiction that they can do since these layoffs are not considered illegal or in breach of any sort of labor laws. So that is what we're picking up, but the government stance remaining that they are trying their best to upskill and reskill youth to the current technological climate and what is required from them. So that's what the government has said on this TCS layoffs matter.
Right, Rishabh. Thank you so much for helping us understand the government's comment on these layoffs. But viewers, with that, it's all the time we had on this edition of Profit 360. But do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold IPOs CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome to NDTV Profit. You're watching Know Your Company. Today on KYC, we are looking at Lodha Developers. The reason why we've picked a Lodha Developers is on the back of Q1 earnings, a good set of numbers that the company has reported on a year-on-year basis, but a sequential decline that has come in here. I'm Hiral Dadia and with me is Mahima Vajrajani. But let's quickly address why Lodha Developers today. Firstly, what has led to the sequential decline that we've seen in terms of where earnings are concerned? On point number 2, the other question that we will ask the management is about the India-Pakistan war. The management has indicated that this did lead to around 2 weeks of downtick in terms of execution. So how much is the impact in terms of quantifying it if you have to look at the financials? On number 3, you're talking about the first quarter FY26 pre-sales. That number is below the guidance. So what does this mean? Will it mean that they will not be able to meet that FY26 guidance as a whole or not? On number 4, the auditors have flagged non-compliance for NCDs. Now, what is the impact? Because here, you're talking about the security deposit that they have to leave for the bondholders or the debenture holders. That is not in line with the security deed. So what happens then? And the competition that they are seeing in the Mumbai metropolitan region, you have a lot of other developers that are coming in. The strategy, what they are going to look at in terms of Bangalore and Pune also is going to be crucial. And very lastly, FY30 guidance, what are going to be the key growth levers that you should be watching out for them to meet this guidance? So that's what we are looking at in terms of where FY30 goes. But let's shift focus in terms of the key parameters that you should be looking at. Firstly, before the parameters, we look at about the company in terms of what the company is doing in trade. Firstly, as we know, Lodha established in 1980s. It's one of India's leading real estate developer. They have strong focus, if you talk about residential projects, nearly 4 decades of experience is what you're looking at. They cater mainly to luxury as well as premium, and they've rebranded itself from Macrotech Developers to Lodha Developers. And this is after the stew, that Lodha Developers had with House of Abhinandan Lodha. Moving on, apart from this, if you talk about the other details, the markets that they operate in, Mumbai around 10% market share is what they had in FY24. Their flagship, and this is their flagship and dominant market, and the largest contributor to the pre-sales. If you talk about Pune as well, that's the second market that they operate in, third largest in Pune, and they're growing fast over there. Over 11% of their gross development value is planned from the Pune market. Moving on, when you talk about Bangalore as well, they've entered Bangalore in November 2023, and recently they moved from pilot to growth phase in the Bangalore market. They're around 4% of their FY25 pre-sales comes in from Bangalore, and they're aiming for 15% market share in the medium term from the Bangalore market. So hence we've said that strategy with Pune and Bangalore is going to be crucial for Lodha Developers. Very quickly, if you talk about their split, in terms of Pune 14%, Bangalore is 7%, and largest 70% comes in from the Mumbai metropolitan region so far, Mahima.
Right, so it's interesting because almost 75, so a lot of concentration in the MMR, which is actually heating up in terms of competition. So that's an interesting question to ask the management as to how competition is shaping up. But in terms of the key offerings, of course, residential real estate is their core business. Luxury premium is something that they concentrate on only in luxury and premium housing. In terms of the overall digital infrastructure parks that they have, that's industrial, warehousing, logistics and data centers, that uses the annuity income model. So that's one of the things that they have in their basket. There's also commercial real estate, which is very small as compared to where the residential real estate stands, but still select office and retail developments, mainly as a part of mixed use of projects, is what comes under them. In terms of the overall facilities that are being managed by them right now, they're managing over 70,000 plus residential units. Recently also launched the Bellevue, a digital platform for integration of residential services as well. So that's an interesting one, and we have to ask the management as to how this is faring for them. There's also in terms of the product wise mix, in terms of Lodha Developers as of FY25, the mix in terms of the revenue, around 89% of the total chunk of revenue comes from property development. Then there is sale of land and development rights, which is 9.3%, and around 3.5% annuity and lease income, which generally comes from the digital infrastructure parks. Now, in terms of the overall key projects that the company is looking at right now, there's